Okay, good morning, everybody. A very warm welcome to each one of you to the second edition of CFO Vision and Innovation Summit and Award, presented by Franklin Templeton, powered by Clear, our learning experience partner ICOG, knowledge partner Happy, our ESG knowledge partner the Randir Associates, and our employed rewards and recognition partner ExoDay. I'm Sharon Verma, the Associate Director from Transformance, your host for the day. We have an exciting day planned across for you, right starting from the keynote to the interactive panel and fireside sessions. It's indeed a pleasure to have each one of you and all the leaders joining us from all across industry. With this, I'm also very privileged to invite our chairperson for the day, which is Mr. Sanjay Sapre, who's the president from Franklin Templeton Asset Management India Private Limited. He brings in a 25 years of enriching experience from the uh, industry and have been having a diverse experience all across the geographies and sectors. In his capacity, he's also been responsible for leading the Franklin Templeton retail and institutional business all across India. He's also been actively engaged in a number of industry initiatives in India and also serves on the board of Association for Mutual Funds in India. A very warm welcome to you, Mr. Sanjay. Over to you.
Good morning, Sharon. I hope you're able to hear me okay.
Yes, we can hear you.
Good morning, ladies and gentlemen. It is my pleasure, privilege, and honor to welcome all of you and to have the opportunity to address this August gathering at the second edition of the CFO Vision and Innovation Summit and Awards. I extend a warm welcome to all the CFOs, treasurers, finance professionals, speakers, panel members, and jury members to this summit. We have traveled some distance since the time I spoke at this forum in July. The macroeconomic situation has continued to improve in the country, and the economy appears to be firmly on a recovery path, as affirmed by the increasingly robust trends that we are seeing in manufacturing PMI, e-way bills, GST collections, exports, power demand, and we're also seeing consumption indicators like services PMI, fuel consumption, and mobility indicators, all showing us a pattern of robust growth. In addition, external demand recovery has been aiding exports, and there is a gradual restoration in the global supply chains, along with global liquidity, which have all supported rising markets and in turn have helped investor sentiments. In fact, the resurgence in demand and the bounce back in global trade growth have contributed to a resurrection to GDP growth almost to pre-COVID levels. And this is most particularly seen in the US, which has recovered from the sharpest contraction on record towards extraordinarily strong growth on the back of what has been historical fiscal support. It is also heartening to me, and I'm sure for many of you, to see global supply chains normalizing, albeit at a slow, and I would not suggest to say that all supply chain disruptions have actually been addressed. But hopefully, this normalization of supply chains will give us all some respite from the steady march of inflation, which has been caused in part by fuel prices, but also by skyrocketing freight rates that I'm sure many of you have seen, and labor shortages in much of the developed world. Easy liquidity and monetary conditions have only added to this to create a very strong equity market. Much has been said about the role of the CFO in such a dynamic and interconnected world, not just as a chief financial officer, but as this summit has rightly called it, the chief future officer. And no future discussion can actually be complete without delving into the key topic of technology. But even this simple term, technology, has come to assume so many connotations, many of them new, and I think possibly bringing new opportunities and challenges for all of us, and in particular for CFOs and financial professionals. Earlier, when we talked about technology, we would talk about ERP systems. We moved on to talking about artificial intelligence, cloud technologies, data analytics. But I would suggest much of this has become commonplace today. The new frontiers that CFOs may have to confront might come actually in the form of blockchain. Not necessarily the craze around Bitcoins or its equivalent, or for that matter, Dogecoins or Shiba Inu non-fungible tokens, but in how the technology can revolutionize the concepts of ownership and liquidity. Imagine a time when ownership of an income generating asset, say a building or a hospital, can be fractionalized. Today, only large institutional investors are able to access the revenue streams that such assets can bring. But what if through distributed ledger technologies and blockchains, millions of retail investors could buy, hold, and trade non fungible tokens representing such illiquid assets and their revenue streams? The question then becomes, what new opportunities and challenges might such a future bring for all? What new funding sources might such a retailization of illiquid assets bring for companies? And what might the future of a blockchain based shareholder register look like? And how will it impact investor and stakeholder engagement? I think these are all interesting questions that we will all debate going forward. And perhaps that is why we see that CFOs today are increasingly partnering and engaging with the chief information officer in ways that probably we have not seen before. I did note an interesting session on the agenda here today that talks about this intersection between the CIO and the CFO. I'm sure that will be an engaging and enlightening session. Another key topic, and I did hear Sharon talk about one of the partners here, but another key topic which I think will gain prominence and which is already gaining prominence is the whole topic of ESG, or environmental, social, and governance considerations. We are just coming on the back of the recently concluded COP26 conference in Glasgow, which made some significant progress. And we saw a very high level of interest from not only governments, but also investors and companies. And I think this is an area that CFOs cannot afford to overlook. India also has made a bold net zero declaration. But while we await details on what that will mean for all of us, it is certain that for CFOs in today's world, ESG considerations will be critical. An investment in ESG might actually become a long-term competitive advantage. It may even become a must-have to attract investors, maybe even to attract millennial employees, or when engaging with stakeholders like regulators, stock exchanges, and bankers. And ESG is such a vast topic. Just one topic under the ESG umbrella, for example, climate change, impacts almost every aspect of our life. We can already see more extreme climate events, changing weather patterns, and supply chain disruptions caused by such events. They are in the news on a very regular basis. The consideration, for example, that even just climate change can bring for companies then is complex and myriad. How should companies think about their carbon footprint? What is the carbon footprint of the company's supply chain? What real estate decisions might a company make, including location and green buildings? And where should a company strategically invest its limited resources? And what disclosures around ESG should be made to investors? I think these are just some of the areas that a CFO is already grappling with. And for us in the mutual fund industry, I think it also brings an opportunity in terms of what products and investment avenues we can bring forward to you to support and enable you to meet your ESG goals and aspirations, not just as a corporate, but also in how you deploy your resources or your spare cash, which typically is going into mutual funds today. You may be interested to know that the Franklin Templeton Group and 3 of our affiliated specialist investment managers, Brandywine Global, ClearBridge, and Martin Curry, are all signatories to the industry-leading Net Zero Asset Managers initiative globally. This is a community of 120 of our peers, all of whom are committed to supporting the goal of net zero greenhouse gas emissions by 2050 or sooner, in line with global efforts to limit warming to 1.5 degrees Celsius, and to supporting investing aligned with aims for net zero emissions by 2050 or sooner. The trend of institutional investors engaging with companies around goals like net zero or climate change is only likely to increase in future. And I hope we will see much more robust discussions around these topics in future summits. Another session which caught my attention and I felt was very interesting was CFO vision and innovations in creating a positive customer experience. With customer centricity becoming ever more important in today's world, and where a single tweet from one unhappy customer can go viral or one unhappy stakeholder can go viral. I think the use of technology and analytics to manage investors and stakeholders is going to become increasingly important. And I'm really happy to see CFOs getting involved in managing the customer experience. All in all, I believe this summit is topical and I will be enriching and enlightening. And I would like to thank the organizers for putting together such a wonderful event and for inviting me to be part of this esteemed gathering. My hearty congratulations to all of the winners of the CFO Vision and Innovation Awards that will be presented this evening. And my compliments also to all the nominees, each of whom has done such great work in their field. I sign off with a note of appreciation for all CFOs and treasury professionals. It is always my pleasure to meet them when I travel around the country, and I'm always impressed with the tremendous job these teams do in terms of managing corporate monies in ever-changing market conditions. I thank you for your time. I wish you a great day ahead, and please do stay safe and take care. Thank you very much, and back to you, Sharon.
Thank you so much, Mr. Sapre, for giving such a great start once again to the second edition. I can see a lot of thumbs up and claps coming across. Thank you so much for joining us. And yes, I'm also delighted to tell you that inform you that we have a virtual booth of Franklin Templeton. Feel free to connect with them over the networking breaks and meet the. Thank you so much, Sanjay, for joining us.
Thank you. Have a good day, everyone.
So with this, we now move on to our next session. I'll catch up all of you on the keynote session. Good morning, Mr. Joginder.
Good morning.
Okay, so I think our audience is already in. So welcome everybody to the keynote session by Mr. Joginder, who's the President Finance for Hero Corporate Service Private Limited. He's doing a keynote session, a very interesting topic that is on decoding the future finance vision for talent, technology, and processes. A very warm welcome to you, Joginder. Over to you.
Thank you very much. So just give me a second so that I can just put the presentation on screen. Thanks, Transformance, for giving this opportunity to me to speak to a fraternity. Wonderful platform and wonderful words from Sanjay. This one, basic difference of opinion, so to say, I would say that, I have, when we talk about decoding the future finance vision for talent, technology, and processes, the topic that I'm going to speak on. Because I think, and in my view, the future is already here. Future is now. Now, I think, is the time that we should pivot from discussions about the future to making real investments. So, on that, let me just go to. So let us, before we start on, discussing what is the CFO vision and what CFOs have to look forward to. Let's look at what is happening around us. So what is happening around us is that there's an explosion in IoT. There are about 35 billion devices connected to the IoT platform, and it makes 4:1 ratio of connected devices to human population on Earth. And you can see this is something which will multiply. So to what extent are we connected? We have all seen this practical application of it. The moment you go and Google, something, immediately you start getting the kind of, whatever your interest area is, you start getting, all those kind of advertisements and etc. So all of these connected devices, what are they doing is they are giving us a huge opportunity, which we will talk about. Then Sanjay also talked about ESG considerations. So ESG is, of course, something that is absolutely we cannot ignore today. And it's not a question of we ignoring it. Probably it will be essential for all of us to adhere to this. We all heard of net zero commitments in COP26. And this is something we have to really take into our consideration while we are talking about businesses, while we are talking about business models. We talk about cybersecurity. Every day there are 250,000 new viruses that are attacking us. And with this, what is happening in this tech world? The data analytics is exploding. The machine learning, the natural language processing, the deep learning, the AI, it's changing completely the way business is being done, completely the way business models are being run, you know. And we still are at a point, where SAP said, and this was last year, that less than 1% of data in business is analyzed and turned into profits. So despite having this entire data which is available, with us, and we are talking of, 4:1 ratio of connected devices, which is going to go up, we still don't have enough analysis of data to really make profit out of it. I would also, talk about there was a McKinsey study last year, and they talked about four interrelated trends which are completely changing the rules of management. So one is more connectivity, and when there is a connectivity, as we talked about, the chances of disruptive innovation is going multifold. And we have seen this kind of disruptive innovation in every field, be it banks, be it even to the extent of pharmacy businesses. You have 1mg or PharmEasy kind of companies coming up and completely changing the way business is being done, even on such traditional things. Lower transaction cost is taking out barriers to entry. And this is again, something which is giving life to a completely new business models, which could be done. Actually, today there is more internal bureaucracy than an external, transactions. External transactions are much easier. Then there is a huge amount of automation which is taking place. And this is completely changing the management philosophy of what was there in about last 200 years or so, where the information and decision was sitting at the top of the pyramid. And today what is happening is, if you really look at where is the knowledge residing, knowledge is residing, the technical expertise is residing at the bottom of the pyramid. So how do you really take care of this complete change in the rules of management? That is somewhere we'll have to really see and build our business models based on that. And of course, the Generation Z is changing completely the way the older generation was thinking about whether it's wealth, whether it's career aspirations, etc. Also, on the other side, we look at which were the top 20 companies in 2013, 12, 13 type, 2010, let's say, versus what are the top 20 companies in 2021. You see the color completely changing. This is one example. Zoom in 2020 had a market cap of 144.8 billion versus the top 6 airlines of US having a market cap of 65 billion. Now, this could be a biased data because last year was not very good time for the airline industry. Despite that, the trend is very clear that platform-based businesses would be bigger threat. In 2019 itself, nobody could have thought that this kind of a platform could completely give this kind of competition, the kind of competition it has given to travel industry. And this is something which is going to continue. So on the background of this, what has to be done by CFOs? Their roles are changing and they have to evolve. Gone are the days when we used to be the bean counters. Maybe it's a very derogatory term to use, but this is, what accountants or financial heads were known some 20 years ago, or even 10, 12 years ago. Now from there, our basis shifting from accounting to value creation. Our basic jobs of reporting, compliance will not change, will remain same. However, we still have to really see how do we move towards value creation. So this is a challenge for CFOs, whether they want to keep themselves in the reporting role, or are they bold enough to move to the value creation in a business role. And that is the challenge. Of course, from real time access to data is also changing how decisions are being taken, how customers are being influenced. So you have to go beyond the financials and move to the business and non-financial data, understand the non-financial data. The other thing, which is, I talk about democratization of data. So what is democratization of data in my view is, instead of keeping the data to yourself and within a limited few, make it available to the last man, the person on the ground who is bringing you business, whether he has the right kind of data or not. If he has to take a decision, he has to have that information and data, so that he can take the information, decision on the spot, instead of coming back and delaying the data. So that's where agility of decision making will come into play. So therefore, as I said, role of CFO has changed or is changing from being from accounting job, as I said, the bean counter's job, to going towards the value creation job. On talent, if I really talk about, if we're talking about talent, technology, and processes, so talk about talent. Since our models are completely changing, as I said, from transactional work, which would largely be done by the machines. So you have to really move up the value chain. And how do you move up the value chain? You move up the value chain only if you have the right skill set. And if you have the right skill set, of course, you have to be trained for that. And that's where you move up from transactional to reporting to governance to analytics, and ultimately to insight delivery. And when you do insight delivery, that is exactly what influences the business decision, brings business in, focuses the energies of the management where they have to really strike for taking the businesses. So what kind of talent pipeline have to be created? The talent pipeline has to be created primarily looking at data utilization and technology. That's one. So where we are talking about data modeling, analytics, and visualization, we have to really clear mindsets that today and very soon, the way accounting teams or finance teams are structured will also change. You will see some engineers in the finance team. You have already started seeing some data scientists in the finance teams. So how do you really equip yourself for those skills? And I said it is much easier to change technology than changing the talent model. So therefore, a lot of focus has to be given on changing the talent, equipping the talents for combating the new challenges, and supporting not only the finance transformation but the complete business transformation. You talk about whether it's robotic RPAs or predictive insights, or what kind of risk response do you give to your business. So that's something. The second part of your talent is looking at behavioral sciences. Look at leadership training. So what kind of vision can you give? What kind of anticipation do you have? What kind of articulation that you can give? What kind of adaptation that you can give, whether it's technology or the new kind of business models? What kind of accountability do you create? Because accountability from the CFO role is not going to go away. That is here, that is going to stay. We all are aware of that, that we are accountable for our core business areas, and then when you move out of the core businesses areas, you're bold enough to go into the business areas from your core finance areas, then there would be certain accountability, and you have to train yourself, take on those leadership roles. Sanjay talked about customer experience, and I have seen there are some sessions well. So from ROI, how do you move to ROE, return on investment, to return on experience? And return on experience, when you look at, when you work on, when you invest in, is going to improve your ROI. This interrelationship has to be not only understood, we have to absolutely make sure that this is given the right importance. Storytelling is an art, which is something that everybody has to really understand. And then, of course, finance technical parts of it, that you have to really look at, whether it's core financial analysis, etc. When it comes to technology, of course, we talked about blockchain as one of the technology with distributed, ledgers, how this is being changed, how this is changing the entire ownership models. In one of our foundations, we are looking at using NFTs to improve the provenance of art pieces, and some of these art pieces could be very, very costly. And how do you then uh, can go for the ownership on this, how to improve that provenance, for these mobility, devices are there everywhere, that you have to see RPA, AI, chatbots, data and visualization, all this technology has to be adopted. You have to skill yourself and you have to adopt, and this is something which has to be done now and not really later. Coming to process, process automation is today name of the game. And of course, most of the processes today, the automation potential in this is enormous. Of course, where there are intelligent functions where human interface has to be higher, that would remain. However, at the bottom of the pyramid, the processes that we do in accounting, etc., this absolutely would be going to RPAs. It has already started. In next couple of years, I think this is going to mature. So therefore, there is absolutely a need, and there is no need to fear that jobs will be lost, etc. If you skill people, upskill people, job will only move, you know, sort of upstairs, so to say. The more value added functions. And we have seen in the world, computers came, there was a fear jobs will be lost. Jobs have gone multifold. Even in the ancient time when electricity came, people feared, but still, so we have to be very excited about it and not fearful about it, and go ahead and do this process automation. And when we talk about, so then with the people and process, you have to truly embrace this technology, whether it is collaborative technology or whether bringing ideas into execution, upskilling people, where the growth will come from. And business partnering is something which has not really been a forte of CFOs. This is something that we'll have to really reflect ourselves and see how we can be more effective business partners. And you have to really think like an entrepreneur when you look at performance management and succession planning. Uh, I'll give one example, and then I would, stop in one of our companies which deals with insurance. So this is India's largest insurance broking, company in terms of number of policies that we provide. We do more than 10 million policies every year. And what is the kind of ecosystem or infrastructure that we have created? So we have started from the basic, vehicle policy platform, which is B2B, and actually it is B2B2C. And then we have really looked at what kind of integrated renewal management system, has to be created, the claims management system, and POS digital platform. We have also created a B2C platform and application, which is going to be introduced in next couple of weeks, employee benefits, platform, as we say, Hero Care, or channel partner helpline. And we are on way to really create a digital incubation center. This entire thing is primarily to make sure that the data which is available with us, and we have a large amount of data, how can this be utilized, monetized, and converted into a profitable business model? So this is exactly what I'm talking about. You have to have the right kind of people, right kind of processes, and right kind of technology. And when there is a confluence of all of it together, actually speaking, today we are talking about phygital world. So where physical world and digital world confluence comes, it creates wonderful business models. So that's all what I have to really say. And if there are any questions, I'm very happy to take it. Thank you very much.
Thank you, Mr. Jogender, for such an insightful keynote. I am sure I could see thumbs up coming across. May I request the audience that we have like a minute or so? If you want to put in some questions, we can quickly take a one or two questions with Mr. Jogender. Wow, I can see a lot of thumbs up and claps, Jogender. I
Thank you
think
very
it's
much.
your concepts have made, like, okay, so we have one question from Mr. Ganesh. In data insight slides, they saw inversing of organization structure pyramid. Would that result in an increase in the staff salary cost?
In fact, this has to be the other way around. So what we are talking about, when this pyramid that we were talking about, currently there are a whole lot of people on the transactional side, and we have to really move where the routine tasks can be done by machine. We have RPA kind of processes, which can take care of some of these modern processes or repetitive processes, whether it's AP, AR, P2P, R2R kind of, to C kind of processes. This can be taken care of by machine with minimum people intervention. And people have to be upskilled to move up the value chain where they can provide insights. So this giving training to the people and understanding, first of all, our focus has to be very clear. Our mindset has to be very clear that people have to be trained for. So even today I find a lot of people in finance doing going for Python kind of programs. So that is where you have to really upskill people, and if there is an upskilling of people, there should not be a problem. And this sort of say movement of people from bottom of the pyramid to the middle layers of the pyramid, definitely that shift will come.
Okay, so we have one more question from Mr. Sunil, who says, how do you measure the success of the digitalization and some critical pain points?
Now, this is a very interesting, question. So when we say, how do you see the success of this? So now, success is you have to really create those, KPIs for you while you are going for digitalization. And ultimately, it's only the business bottom line which is going to show whether your efforts are successful or not. Of course, there would be an investment phase, and that investment phase, will lead to the value realization phase. At the end of it, what we have to really what we are looking at is that our operating model has to move from target operating model to dynamic business models. From efficiency and agility, from control to control and innovation. So from data or information to meaningful insights, from process execution to intelligent automation, from cost centers. We all love the that cost center accounting and cost center reports, to value generator reports. And at the end of it, today all of us have to really understand that from disparate systems we'll have to move to platforms, and this is something we have to truly understand. And whether in this process the last question when I saw that probably question was, whether my salaries will go up. Doesn't really matter. If your value goes up multifold and salary goes up, in lower proportion to that, that's always okay. At the end of it, you are creating value.
So now, there's one question on ROI which I saw. Can you explain a bit on the ways to quantify the return on experience versus ROI? This is a question from Mr. Vikas.
So I think this is a wonderful question, and I'm sure I've seen that you have a specific session on customer experience. So today, what is happening is customer experience has become a very major driver of your revenue. I'll give an example. We are in real estate industry. So we are in multiple industry, Hero Enterprise, and one of the industry that we are in real estate. So in real estate, if you are delivering what you have promised, that and you're delivering on time, delivering on good quality, you are creating trust of the people. And if you can do that, that is when I'll read out something if you give me another just only, and this is very very relevant over here. So there was a wonderful comment which said, "A Rolex sells status, not watches. Supreme sells scarcity, not clothing. Harley Davidson sells lifestyle, not bikes. Apple sells simplicity and style, not electronics. Great marketing teams or great teams, sell feelings, not products." So feelings of whose? Feelings of customer. When you have satisfied customer, that is a sure shot way to get a better return on experience. A better return of experience will definitely result in better sales, and the more value added sales, enhance better ROI. That's how we connect this.
Thank you, Joginder. I think there are some more beautiful questions. Just keeping in mind the paucity of time, if I could request you to take up this within the Q&A box. And in case these couldn't be answered, we can certainly, email this to you, and maybe you can
I would
help
be
them with
happy
the
to do that.
answers.
I would be happy to
Sure.
do
Thank
that,
you
and
so
thank you
much.
very
Thank you
much
so much for
for
such a
giving me
wonderful
this time.
session.
Thank you.
Thank you, Joginder, for joining us. Thank you, audience. I see wonderful questions coming across. Let's keep it interactive, learning oriented. With this, I'm happy to take you to the next keynote session that we have from Mr. Sachin Franklin Templeton. Good morning, Sachin, and welcome, audience. As I mentioned, that we have a very, very interesting keynote presentation on a topic that talks about the climate change, right? An energy mix during transition and market outlook. Please welcome Mr. Sachin Shankar Padwal Desai, who's the portfolio manager and the vice president for the fixed income at Franklin Templeton Asset Management Private Limited. He brings in 20 years of enriching experience into investment and research in the Indian asset management and banking industry. He's also an engineer from Government College of Engineering, Pune, in 1995 pass out, and then earned his PGDM from IIM Bangalore. A very warm welcome, Sachin. Over to you.
Okay, so can I start?
Yes, sure. Over to you.
Yeah, well, good morning, everyone, and thank you for this opportunity to present on a slightly different topic. When I started hunting for subjects to present to you, I basically wanted a subject that has major ramifications for everyone, whether it be as consumers or as finance professionals. So one obvious candidate was obviously the corona pandemic, but I think that is a topic that has been done to death, and most of you would have been hearing or listening to a lot of information on the same. The other topic which has been in the news recently, thanks to the conference that happened, COP26, was obviously climate change. We all know that the Earth's climate is heating up primarily due to hydrocarbon energy usage, and we need to bring this runaway temperature rise under control by decarbonizing our economies, so that we have a climate, an earth in the future for our future generations. So the major thing is that energy is what drives economies, it is what drives lives and prosperities. So it is not something that you can switch overnight. Maybe in your personal usage, you can sell your car and buy an electric car, but economies, and especially the industries that we operate in, and the industrial processes also that we use, hydrocarbons are very much embedded, and it is going to take several decades before they can be phased out. So my thing to examine was that the final state is known, and that is where you'll have a larger mix of renewables running the economy with probably battery storage from where we are now, which is primarily hydrocarbon based. But the question I wanted to look at is how that transition will take place, and what are the implications for the fuels that we use currently, because they form, especially in the manufacturing industry, a reasonable amount of your cost structure. And given the way the supply demand dynamics will change, I wanted to see how the prices will evolve in the coming decades, and what are the implications of that from a planning point of view. So the way I structured the presentation is, I will first look at what are the steps that need to be taken, what was agreed in the various conventions, how India is faring, and then look at the implications for some of the energy sources. I also, being a market person, have a lot of slides on macro, but probably we will run out of time, because I've been told I have about 20-25 minutes to conclude the presentation. So if I run through the climate change slides and still have some time to spare, maybe I will run you through the global and Indian macro as well, because a lot of interesting things happening there. Otherwise, we'll just restrict it to the outlook for crude and other fuels. So uh, these two charts are primarily the temperature and the sea level. I don't think there is much debate now in the science that the temperatures are rising. Interestingly, what you can see is that in the early part of the 20th century, the temperatures were pretty stable. They were even lower than the previous century, and then they suddenly took off. That is when industrialization started in earnest. And you see that the trajectory continues to go upwards and upwards at a sharper angle as more and more countries join in to the industrialization race. And the same thing has happened in the sea level as well. This is where primarily China joined the WTO, and you can see how the mean sea level continues to rise. Uh, that probably is one of the immediate impacts that one will get to see of climate change, because low-lying areas and coastal areas will continue to get swamped. Some of the smaller island nations could even go extinct in a few decades. Uh, so basically, what we need is a major transformation in the way we use fuels. We had a convention, probably the Paris Convention, where the major nations had agreed that we'll restrict temperature rise to only 1.5 degrees centigrade by 2030. But for that, you had to restrict your carbon emissions to only 17 billion tons. What is happening right now is that we are on track to emit almost double of that carbon emissions by 2030. So clearly, our temperature trajectory will be much, much higher than the 1.5 degrees that the experts had evaluated is acceptable. So here is what is the current energy mix. You can see it's very, very hydrocarbon based, with crude at 30, coal at 30, and gas around 25. And we need to move to this future where hydro is almost 70%, and even nuclear starts taking up some of the share. When it comes to India, our per capita emissions are really low. Even after a doubling of this per capita emissions, we are hardly at maybe 10% of what US and other large countries emit. But since we are a very populous country, our aggregate emissions are in the top five, and there is a lot of pressure from the rich countries because Earth is something that we share, that we should limit our emissions, which raises interesting questions of equity, because unless you consume a lot of energy, your standard of living cannot go up. So, is it fair that other countries who consumed a lot more should dictate to us to freeze our consumption levels, because that might consign us to lower income status for eternity? Here is where technology is coming to our rescue. If you look at our carbon intensity, that is a kilogram of carbon per degree of per dollar of GDP raised, it has already come down pretty sharply from 1.5 to zero point 0.9, which is where we had committed to bring it by 2030 under the Paris Agreement. And one would argue that the energy transformance has already begun. You can see this chart, while estimated 25, we are adding coal to our power production plants. It's hardly 10% of the current installed capacity. But when you look at solar, nuclear, etc., especially solar, really taking off. Arguably, we will actually have about 50% of our energy resources as renewable by 2030, which is one of the commitments made by our Honorable Prime Minister in the COP26 convention as well. The reason for that is that modern technology is coming to the rescue. You see the second line, the generation prices are already pretty competitive with coal-based and gas-based prices. The issue is that solar and wind are intermittent sources. You can produce them only when the sun is shining or the wind is blowing. So what we need is storage capacity, where battery technology comes in. When you add that also, now thanks to technology, we are coming somewhere in the ballpark of where the non-renewable resources are. So operationally, the costs are very similar. The issue continues to be the capex, where it is much higher than for coal and gas. That is something that will come down as the technology matures, and the hope is that maybe in 10 years' time, the cost will be so much lower that there will be a simple economic argument in favor of renewables, and we won't even have to go down the regulatory curve saying you have to do it because it's good for the climate. And that can also be seen in the way the capital markets, especially abroad, have started pricing in the ESG projects. You can see for renewables, the cost of funding, the IRR required is so much lower vis-a-vis what's required for oil, LNG, etc. Part of it is due to mandates from investors, but part of it is also because it just makes good business sense. You see the technology curve. Operationally, the costs have come down nearly 50 to 70% as the technology has matured. And thanks to these ESG mandates, you're getting some 20-30% reduction in costs, even for this renewable project. So this kind of is setting up a virtuous cycle, and you get lower cost of capital for clean technology, which encourages rising investments in these sectors, which further ensures that technology matures and operational costs go down, and more production happens in renewables. And a similar vicious cycle happens for the hydrocarbons, where the cost of capital is going up, lower investment is happening, supply is getting constrained. People are still used to the old ways of consumption, so the demand continues to be high. The supply-demand gap ensures that there is a structural tailwind for prices, which is what we are seeing. Crude prices, etc., continue to be going on a higher trajectory. So that really brings us to the meat of the presentation. What are the implications for various fuel sources? The most important, obviously, is crude oil. What I like to call this chart is the show me the money chart. This red lines, etc., which you see are the various conventions where the major nations agreed to reduce emissions by reducing oil demand going forward. All of them are very nice, pretty lines which are going down. But this blue line is the actual demand, and that was the reality. The oil demand just kept going up. The only time when we have seen a serious dip has been due to the lockdowns, and now that also is bouncing up pretty quickly. So the question remains whether crude oil demand will ever go down, whether we'll reach those net zero targets that the countries have been talking about. Here, two things are coming together, which is why we believe that this might be actually the era when the crude demand slowly starts tapering off. One is the global oil intensity of GDP has been on a downward linear slope, and that looks like the way the technology is evolving, this will continue to happen. So to that extent, the demand on the margin will keep tapering off. Secondly, what has happened is that over the last 10 years, the investments in large oil fields, etc., have not been forthcoming. Two reasons for that was there was a major uncertainty during the shale wars which Saudi Arabia had, so price was all over the place. So that kind of volatility does not really reward future exploration into future oil fields. There was also ESG pressure on the oil majors to rather give back money to investors so they could invest it elsewhere. And thirdly, the oil majors themselves are also moving into renewables as they realize that's the energy source of the future, and it makes more sense to devote R&D and other resources there. So what we have now is basically projections of both oil demand and production. What you can see interestingly is that the oil demand continues to rise and it tapers off only around say 2035 or so. While production, there are various scenarios, but at the current capex, the production will start tapering off in maybe another 5 years. So there is going to be at least a 10-year period where the oil demand will outstrip production, and that should ensure that crude prices continue to remain high. I have seen some forecasts where even triple-digit crude prices are entirely feasible in our very near future, and this obviously has implications for businesses and how they plan their energy mix. That having said that, price is just one part of the equation. If you have that kind of demand for energy, somebody needs to step in and meet it. While part of it will come from renewables, we believe one of the major players in the next 20 years will be natural gas. So indeed, its growth is expected to be at least around 4% per annum, the fastest growth of all the hydrocarbon-based fuels. The good part of LNG is that it's a less polluting source, as you can see. Especially, not all pollution is carbon. So you have NOx, you have methane. On all metrics, it's a much lower source of pollution. But here again, we believe there, or analysts believe that there will be shortfalls going to 2030 of nearly 70 million tons per annum. So both these major hydrocarbon-based fuels, the mantra will remain that prices will be longer for higher. Probably a lot of pain in the interim, but it is an adversity like the oil shocks of the 70s when there was a lot of technological innovation in the US, and that should act as a spur even worldwide now to ensure that renewables becomes a much more reliable partner in development. Then, of course, there is nuclear energy. Maybe due to Chernobyl and Fukushima, it has acquired a bad name, but it is one of the most stable forms of energy. The capacity factor, that is the availability factor, is as high as 90%, vis-a-vis wind and solar, which are closer to 20 to 30%. The issue here, of course, is the safety features, and you need a very high level of expertise. The other issue is nuclear. The water intensity is very high. So for countries like India and even China, where most of the new nuclear reactors are expected to come in, this could be an issue. But when you look at the energy mix, we believe that it's nuclear and natural gas that will have to form the core of a country, because they are ideal for base loads. Coal and wind are more intermittent sources of supply, wind and solar. And only when battery technology stabilizes and becomes affordable can these sources really take over your normal power generation capacity. Still, then they are more for peak loads. Then there is green hydrogen, which is something I was not that aware of. It's a very interesting technology. The main issue here is that it is a very dense energy source, almost 2.5 times that of petrol. So the belief is it will be the major source that will get used in long-term transport. The only thing holding it back right now is very high capex, because it is essentially you take water. You must have all studied electrolysis in school, and so you basically split the water into hydrogen and oxygen. Nothing can be cleaner than this, but clearly there are technology and cost issues. So we'll have to wait and see how that evolves. But a lot of exciting developments happening in this area. And finally, all these are basically measures that will reduce the rate at which we emit, but none of them are really taking the existing emission and sequestering it, for which you have various carbon capture technologies. Some of them will ensure that the carbon gets reused as well by putting it into some kind of chemicals, fuels, synthetic fuels, building materials, and also increasing hydroponic agriculture like greenhouses and all, which will be vertical agriculture, which will go a long way in solving the food scarcity issues. And incidentally, it needs carbon. So while carbon is contributing to what you call as global warming, not all of it is bad, because you do need carbon for growth of plants. So finally, the conclusion of all this analysis is that crude and other conventional energy sources are going to have structural demand supply gaps going forward. And so we as finance professionals need to plan for a future where the prices of these fuels will continue to be high. And even if, say, market forces don't take those prices high, the regulatory forces will ensure that these prices remain high. So when you're doing your long-term planning for projects, etc., you really also will have to consider the technologies and the energy mix that you use, because it will have to increasingly be renewable. Anyway, there are ESG mandates in balance sheets, etc., that are coming for reporting. But normally in our projects, we have perhaps taken the energy mix for granted. That is something that can no longer be done. And increasingly, it will also make a lot of economic sense to go more for a renewable mix, when you are designing projects or re-engineering your existing processes, vis-a-vis depending on conventional sources. This is not a theoretical future 20 years out, but something which you probably need to consider even when you're planning 5 to 10 years down the line. India has taken a lot of steps towards decarbonization. There are the 5 key commitments, the Amrit Tattvas that Prime Minister Modi talked of in COP26. And there is a pretty large kitty, almost $10 billion of PLI, which is available for renewables technology. Sharon, how are we on time? Can I take macro or should I close it here?
We can take 5 minutes more, Sachin.
Oh, okay. 2 minutes. I don't really have enough time. So basically, I'll just give the bird's eye view. From a macro point of view, well known, there was major stimulus during the Corona times. Interestingly, most of it was as handouts, direct handouts to consumers. That ensured that consumer spending remained high, demand remained high. Clearly, the people started quitting jobs in the US, which caused wage inflation. So you had wage inflation and labor shortage, but disposable income. So that caused supply chain snacks because there was a lot of demand, container port congestion, container freights going up, etc., etc. Inevitable result has been higher prices of goods, raw materials. Food, incidentally, is going to, we believe, be a major problem next year. Also, due to the fact that the energy prices are higher, so fertilizer prices will really shoot up next year. So basically, if you see the Fed minutes yesterday, they do hint at possibilities of higher prices and lower growth, across stagflation. We believe that this will be short-lived because it's more the demand choking is more supply driven. But there are other elements like the monetary impulses turning, you have tapering, you have rate hikes across various central banks. Fiscal impulses also turning, except maybe in the US. Even in India, the fiscal deficit is being pulled back from last year, although we had a very modest kind of impulse. The credit impulse in China is already in negative territory. It tends to lead markets and economies by 6 to 9 months. We all know about Evergrande. Seasonally, Europe and US will be going into their corona wave, so there could be lockdown related disruptions. And markets continue to be sanguine. Equity markets are at highs. Corporate spreads both India and abroad are at lows. The real interest rates in US is at negative and at a 40-year low, which is a head scratcher for an economy doing that well, and where FMC rate hike expectations are about 2.5 to 3 hikes by end of next year. And interestingly, you have a flattening US 50-30-year yield curve, which means that the market believes that the Fed rate hikes are coming, but they'll probably stall the economy. So, summary: you have inflation, you have central banks and governments pulling back, and possibly it will cause demand to crater going into the future. At this point in time, it does look like just like fuel prices, even yields will be higher going into next year, and food inflation can be a major issue. So yeah, I had some India slides also, but I think we have run out of time, so I'll just hand it back to Karen.
So thank you, Sachin. I think it's been a wonderful session with all the facts and insights. I could see a lot of thumbs up out there. We have one question by Mr. Chetan, which we can certainly take it up. What's the take on geothermal and the potential it has to come up as an alternate form of energy? That's the question.
Actually, geothermal is A pretty good. There's a lot of potential, especially for a country with a large coastline as well. Uh, but actually, both geothermal and tidal, there is a lot of potential. I Although I have not seen much on the technology front, at least in India. Here, most of the growth so far has happened in solar and to some amount in wind. So we'll just have to see how the technology evolves, really. So a lot of the innovation needs to come from that front. And as finance professionals, we are more, you can say, price takers than makers in that sense.
Thank you, Mr. Sachin, for such a wonderful session. I can still see a lot of reactions of claps and thumbs up going across. I think it's been a fantastic session. So with this, we thank you to join us for this session. And audience, please feel free to go and visit the virtual booth of Franklin and meet the fantastic team of Franklin Templeton. Thank you, Sachin, once again for a wonderful session.
Thank you. Thanks a lot for having me on. Thanks a lot.
Thank you. Okay, so with this, we move on to our next session. That's an interactive panel discussion. Thank you. Okay, so while Mr. Nero joins us, I would like to welcome all our audience and all our panelists, especially our moderator, Mr. Sanjay Patni, for joining us. We have a very wonderful session on a very interesting topic on CFO's vision for cost management, investments, and budget. I'm very privileged to welcome our panel moderator, Sanjay Patni, Vice President, Head of Data Institutional Sales, Franklin Templeton Management. Represent many years of industry experience mainly to the banking industry and financial service industry, and also a vast experience in managing institutional businesses across geographies and sectors in India. Presently, he's managing the institutional business world for Frank Capital. A very warm welcome to Sanjay, and over to you.
Hey, thanks, Sharon. If somebody can confirm it, if I'm audible, Sharon, if you can confirm it to me.
Yes, you're audible. You're audible.
So very good morning, everyone. Hope all of you in audience, panel, and family members are staying safe and keeping, I would say, extremely healthy instead of getting complacent, as pandemic is not over yet. If one were to look at the economy side, one side we are saying pandemic is not over yet. If one monitors the activities across industries and sectors, I think there is surely visible buoyancy in numbers. I guess macros have started showing improvement, and we are seeing seemingly on path of recovery. Far better, at least better than the world. We may want to see, or maybe want to witness, we must be monitoring healthy trends in GST collections. If we can talk about uptick in energy consumption, we may talk about auto sales, FMCG numbers, fuel statistics, despite the prices being high. And last but not the least, all of us must have witnessed an upbeat festive mood, unlike last year at the same time. Okay. So let me just thank audience so much more for investing your time with us today on this Thursday morning. My name is Sanjay Patni, and I manage institutional business for India at Franklin Templeton's India franchisee. This morning, we have an amazing panel on CFO innovation for cost management, investments, and budgets, where our esteemed panelists will be talking about, well, how their sectors, industry, and I will also use the word employer has kept them on toes to manage these three key factors: cost, investments, and budgets, especially in the times of pandemic. For some time, it became a huge challenge to manage. For some, it was a fortune stroke of serendipity, while directly or indirectly may have impacted their businesses as well. I'm privileged to moderate this panel, which is completely and full of experience, full of wisdom, who solved the conundrums of issues over 120 years of cumulative work across industries and functions of finance in India. Let me just quote a saying in this financial world, which says, the more your money works for you, the less you have to work for your money. And if you have a CFO, which is qualified and highly experienced, what better can you ask for? On this note, let me introduce you my guest here. four guests here. Mr. Venkatraman GS, the CFO of Subix, based at Bangalore. Welcome, Venkat, to this panel.
Thank you, Sanjay. Happy to
We
be
have,
part of this again.
thank you. We have Anuj. Anuj is the financial controller for Yulu, the startup based at Bangalore. Welcome, Anuj, to this panel.
Thanks, Sanjay. So I had finance for you. Yeah.
Let me welcome Purnima ji, who is the CFO of Reliance Nippon Life Insurance Company based at Mumbai. Purnima ji, welcome.
Thank you so much, Sanjay.
Neeraj ji is still not visible. Maybe his video has some issue, but let me welcome Neeraj ji to this call. Good morning, Mr. Goyal, and welcome to the call. I am assuming that you can listen to us. You can hear us clearly.
Yeah. Good morning to you, Sanjay. I believe that you can see me now. Thank you so much for
absolutely visible.
Perfect.
Thank you so much. So, thank you everyone for joining to this panel, and I'm sure experience of this panel is very much visible in terms of you can see the experience. So, let me just go back instead of not wasting even a minute. Let me just start the conversation, maybe from Mr. Goyal. First question to you, and our on the first topic, saying which one do you believe the best methodology of cost management? If you want to describe us on a macro level and the micro level as well.
Wonderful question, Sanjay. First of all, let me just try to introduce myself so that the audience can correlate whatever I'm talking about, whether it is making sense or not. So, by profession, I'm a chartered accountant, cost accountant, and MBA finance. Having the experience, I'm just talking about the exclusivity that I do have the experience to work in the diversified industries like FMCG, consumer durable, telecom, biotechnology, then automotive, and servicing industry, and now building material and whatnot. Apart from that, I do have the experience to work with the global Fortune 500 company also, and Indian promoter driven organization also. So with that experience, what I can just talk about being the cost accountant as well and the finance guy, is that it is really inevitable to address both perspective, micro level as well as the macro level, because it is highly insignificant that where we are just getting the result. But from my perspective, my personal experience perspective, I found that we have to just go from the largest perspective. First, we have to address the cost management from the macro perspective. If you just talk about from the micro perspective, you are having the vendor, say you are importing some material and you're just trying to cut the cost while having the good negotiation or developing another vendor in the same country that might not be giving you that much return if you are substituting that vendor with the domestic vendor. Similarly, if I talk about with my experience so that the audience can have the good interest in the dialogue, once I joined this Jaguar Guru, I found that we are having many subsidiaries across the world. So we do have the presence in the 4 continent, Europe, Asia, Middle East, and Africa. And I found that we do have the certain subsidiaries where we are bleeding with the heavy losses. So now I just found that our business model is like that way forward also down the line, be it 5 years, we are not going to generate the profit. And if you are continuing with the same structure, then we might be incurring the heavy losses more. So based on that understanding, I converted those subsidiaries into the overseas branches. So it is basically based on the structural change. And I found that, within 3-4 years, we have saved more than 60 crore rupees, almost $8 million. Similarly, I had an experience while I joined this Eaton as a country controller, which is a US MNC based out of Pune. So there I found that our one entity is having the huge profit, the taxes we had been making the payment, and we introduced the few new manufacturing plants wherein we had been bleeding with the losses. There was so much, the interest cost, depreciation cost, and blah, blah, blah. So there also, based on the macro level, I had to propose, and which was really appreciated across the world, that we have to merge our 5 entities. We had been having the 8 entities in India, and 5 entities we rolled out the structure to go for the merger option. So like that, I do have the experience wherein if at the micro level also, like for example, very recently we had been just having the balance sheet review on a quarterly basis. We do have the detailed review process. we're informed that the customer support is definitely having the big cost. Here we don't have the profit center. Our customer support is not a profit center, it is a cost center. So there we found that there are certain gaps what we need to find out, and we found that barring the fact we do have the world-class product, wherein we do give the 10 years warranty and we are open to give the lifetime warranty, we are issuing a lot the free of cost spares. How come once our product is might be having some dirt or some dust, so that can be cleaned, but our spare parts, so we saved that cost. It was a big cost what we saved at going at the micro level. So it depends on your basically the business model, the structure what we're just targeting at. So I believe that both the things are inevitable from my side.
Sure. No, sounds very interesting. No doubt about it. Especially the sector which you are in, one of the sought after brand as well. So no doubt about it. So let me, with that move, let me move to Mr. Venkat. Mr. Venkat, remaining within the cost management, the stream here. Have you undertaken any cost conscious rationalization model or exercise, maybe work from home or a hybrid model, which is a buzzword now, making you think about any innovative cost management tools now?
Yeah, thanks, Sanjay. I think just to give a perspective, I think I've been working largely in the IT services industry. I think worked for some of the larger Indian and multinational companies in the past, and of course also have been part of the FMCG sector as well. So just to give some background into the experience I have. Yes, I think you're right, Sanjay. I think the fact that the pandemic happened, sometimes you need a crisis to actually take action, right? And the companies are pushed to take more action than otherwise, where you were kind of debating, discussing. So I think in the Subex context, we were always looking at our office space and saying that, okay, do we really need all of this space? And given that IT as a business, as you know, lends itself to some amount of working which can happen remote. But the fact that the pandemic happened and we were debating and discussing, should we let go one floor or some part of the office and things like that. Whereas after the pandemic set in, then we really realized that, yes, there is a clear opportunity for us. Although cost was one of the factors, I wouldn't necessarily say cost was the only driving factor. But the fact that you are able to demonstrate that you can perform most of the work which you need to do in terms of support to serve customers or providing ongoing activities, be it even actions like the finance function. Given that we are listed, we are able to declare our results quarterly, audit our numbers annually, all of that being done remotely. I think there was a case that we could relook at it. So therefore, in a way, I think, as you mentioned, we were able to accelerate the decision and we were able to move out of a 4-floor office to a single floor office. So you can imagine almost like we saved some 75% of our rental costs in that decision, and maybe that happened over a 6-month period. While we did do that, but I think, as I mentioned earlier, it's not primarily cost which drove that. It is also about efficiency and using your resources effectively for the time you need. And we are also open to the idea that as things improve and as we start getting people back to work, if need be, we can always take on additional space. And I think there's also the option nowadays, right? I think with all these co-working spaces coming up across the country, you can flex your work requirements or office space requirements very quickly at very short notices. So I think combination of these factors, in our case at least, definitely led to some cost savings for the company. But I think the way I look at it is, I think sometimes you need some crises like these for you to relook at how you do business. For example, even a simple thing like travel, right? And as you know, the IT services business or the IT business does a reasonable portion of the cost is in travel, because everybody needs to travel for sales or some portion of the execution. And the fact that 1.5-2 years we've been able to do most of it with very minimal travel or no travel whatsoever kind of helps you relook at that, saying that, okay, do we really need to work on this basis? Or yes, of course, once the things open up or as we see things are opening up and people are starting to travel, some travel will be required, but do we really need to do the kind of travel which was happening earlier, right? So I think both of these areas I clearly see as opportunities, which I'm sure every company will look at, not only the IT services companies, even every other company will look at to see, do we really need to do the kind of travel which is happening and the kind of efficiencies which can be driven. So I think those are the ways we've looked at in terms of cost and cost-related opportunities to optimize.
No, I can surely relate to that because having the floating desks in the office and having the fluid offices here and there in various business centers, I think it's a new normal. And I can fairly assume that if you save those costs, that's the reason you're seeing markets at 60,000 level. And even today, markets are up.
Yeah.
So I'm sure we can be happy about it and we can keep smiling that hopefully corporate earnings will only go up going
Yeah.
forward. Yeah. So let me move to Purnimaji. Purnimaji, I think it's an obvious question, as I mentioned in the earlier part, that pandemic is not over yet. So did we learn from first wave and deployed our resources better during second wave, or do you still in the camp? Maybe like me, if I feel that third and fourth wave is inevitable, and maybe we might see, maybe hidden or maybe in reality in open. What's your view?
Yeah, so have we learned from the wave one and wave two? Yes. I mean, even if you didn't from wave one, wave two was really quite serious. And from an insurance company perspective, it has been sort of devastating because, our claims, and not only ours, the entire industry, have been almost 3x to 4x of the previous year, both in quarter one as well as in quarter two. So this is sort of unprecedented claims that we've seen, and therefore the hit to the P&L and the impact to profitability has been severe for most companies. So in the light of that, and you know, obviously you need to plan for the third wave. There is inevitably going to be a third wave. It may not be this severe because there is vaccination, etc., that's happened in the country. But going from what you've seen in Europe and other countries, wave three and wave four are sort of something that you have to plan for. So coming to the planning, perspective, the one big thing we've learned from an resource allocation perspective is if we did something called the zero based budgeting sort of, planning on resources that asked everybody, do you really, really need this? And if I were to take this off, what will happen? And so I think that forced the mindsets of most of the people in the leadership to start moving resources. You know it's scarce, so you move the resources to exactly what you need. And it has only benefited us. It has helped us to better prioritize our projects. It has helped me to be able to explain to the company at large, what are fixed costs, what are variable costs, what can we let go, how do you optimize your resources best, and to enable us to do the best things and prioritize very well. So I think from that perspective, this whole crunch on resources has sort of helped. And we have also done a lot of cost rationalization exercises within the company. So between last year and this year, we've gone back to all our vendors and we've said, we will need a 15% cut. And, you have to give it to us. So it started there, and then, some did it for us, some didn't do it for us. And overall, it sort of, worked. At least what it helped was to keep the cost base sort of flat. So, if you start with a 15% reduction, people end up saying, okay, I won't increase the cost for this year. Otherwise, people come back and say, okay, a 10% increase, a 7% increase, etc. So, we went back and very systematically pushed back on all our vendors. Literally everybody, including the consultants who work for us, and everybody. So it sort of also told me this, that when you push your boundaries, lots of things sort of happen. So we were able to do that. As a part of this whole process, we pushed every department to sort of do process redesign and look at all our processes and say, why is it that we need to do what we are doing? Can we do it differently? A lot of processes which were sort of resisting even within finance, where people were resisting doing an RPA. Now I would say 95% of finance is automated. We have several RPA processes that are running. We have voice bots and chat bots which are helping us query solve for our employees, our vendors, etc., our customers, so that people are able to get resolution faster. So I think it's really sort of helped. The other thing is to sort of view the whole thing as, unlocking the profits that are sitting in the various cost centers. So it's sort of it's sort of a mindset. And it is helped us because otherwise people are sitting with all these little costs which they say this is mine, and I'm not willing to give it up now. All of it is not essential, and we all know it, but when we are pushed to sort of re-look at the entire thing, I think it sort of helps to unlock that saving that is inherently sitting there. The other thing that definitely this whole pandemic has taught us is to sort of run stress scenarios. Running stress scenarios is like a thing that we anyway need to do. Our actuarial function does it on a regular basis, gives it to the regulator. But then we had not sort of imbibed this, as a very essential part of our process. Now we've run stress scenarios. What if you have wave three? What if wave three is half of wave two? What if it was just 10% of wave two? What if vaccination by the time wave three or wave four has hit us, if vaccination is not 30%, but it is 40%, what happens then? So we've been looking at the statistics of death, etc., in the country, linking up our own experience with it and trying to figure out what does that mean to us from an impact to profitability, and how do we then readjust all our various other levers to be able to address this. So I think, in short, the whole pandemic has been a blessing in disguise. It's helped us unlock efficiencies. It has helped us to rethink, reprioritize, redesign our processes. And so, I mean, it's been good. I think we've done a great job as a
No, so
result.
I can
Yes.
only tell you that insurance have been a savior the other side for the people who have lost their lives. Number one. Number two,
Yes.
I will say what you just said. I'm sure that's it. That's true for our personal lives also, where we could live easily without buying anything from the market as well for last quarter 2 years. Okay,
Yes,
so
yes, yes.
so why not unlock efficiencies in our own house? Obviously, companies will be part of it by default. Yeah. So on that note, let me move to Anuj. I'm sure startups and IPO listing is all the buzzword in today's time. We can see all those great startups. You have been able to raise money in, I'm sure, various series of funding. Of course, liquidity is always an important criteria, but as that's the only thing which helps in the times like this when business interrupts. Have you undertaken any measures related to cost to maintain this continuity, or did you feel any pressure in this period?
So thanks, Sanjay. So just one thing. What happened before I transitioned from my earlier job to startup during the pandemic? I was heading FP&A for a global logistics company. So I was doing the scenario stress-based testing and everything. And actually, I could so much relate to what Purnima just mentioned and what Mr. Venkat was just mentioning some time back. So when I came to startup, it was a very different world. So here, your focus just shifts from costly, where startups have advantages the time and money and cost. So more than the cost, it became cash flow management, I would say. So here again, every crisis gives you opportunity. One of the opportunity which we saw in the revenue side, I would say, or on the demand side, what we say. So earlier, our whole setup was for the people mobility. What we saw during this pandemic, that since people stopped moving, the goods started moving. And before this crisis, our whole organization, everything was set up for the people mobility. But when we saw that use case, it gave us not only the revenue, but much needed cash to tide over this, the tough times. And in fact, today we are coming with a product created only for this demand segment. On the cost side, again, it helped us to look at the cost. Since we are again a new age database company, we redesigned our processes. We looked at each and every element, which is, what it helped us today. Our unit direct costs are 40% lower than what they were pre-pandemic. And apart from that, then we went to each head in the general administration. As again, Purnima mentioned, we went to a vendor. We asked for the cost reduction. And we got a support actually. And I think that was possible because we have been building relationship for a long time. So in total, yeah, this was actually, and one very important part, I think especially for any CFO and any CFO in a startup is actually you have to prepare for the crisis. It can come in so many shape and form. You don't need for a black swan like COVID. It was such a big event, but for a startup, they can come in several more than any established organization. So you have to prepare for it. You should always have a stress-based scenario, and you should always plan for, let's say something happens, some kind of disruption happens. So that was a lesson we already knew, but they came into practice. And business continuity is something which has to be ingrained in the DNA of the organization, how we set up our organizations. Yeah.
No, I can only tell you thank you for allowing all of us to keep moving and remain mobile through Yulu bikes. So thank you so much. I'm sure we will see Yulu moving pan India in various locations in Mumbai. I'm sure you are based in Bangalore, but I'm sure all of us are looking in Mumbai that all key parts have that Yulu bikes as well. So let me move to Mr. Venkat. Everybody talked about saving cost. I'm sure saving cost means having cash in place. Okay. If cash is in place, investments is the next buzzword. If any corporate can look at, and IT companies has always been cash rich, maybe other than pharma or an FMCG, if I can use the word pure investment. So, how have you looked at and evaluated investments in these environment? Did you change your any approach towards investments versus what you were doing maybe pre-COVID era? Yeah.
Sorry. Yeah, you're right,
No
Sanjay. I think interesting. Of course, I think companies like us or in this sector do have cash, and of course, there is always the need to invest these surpluses efficiently. But I think equally, I think for our business, for example, in Subex, in the context of Subex, because if you look at Subex, we are primarily right now a software product company focused on telecom operators. So we are one of the few listed software product companies. Otherwise, pretty much most of the companies in Bangalore or across the country are services play in the IT industry. So we are a software product play, and our products are used by the large telecom operators worldwide. But equally, I think we always have been wanting to diversify our revenue streams in terms of looking to get revenues from, looking to create product solutions which we can offer to customers outside of telecom. So that's one area we've been working on, and we've always been having a set of internal incubation of new ideas which we continue to invest in, so that we are able to come up with those new product solutions which can be taken to market, which can be addressed to customers outside of telecom and within telecom as well. So therefore, so in a way, we are actually kind of a VC within the company, because you need to identify these ideas, shortlist them, then figure out how do you fund them and how often do you continue to fund them, and so make those evaluations. So I think what happened as part of this pandemic was we kind of fine-tuned that whole process further, because otherwise there was a certain amount of money you kind of allocated at the beginning of the year, and then there are a bunch of ideas which are funded and they continue to keep doing what they are doing, or maybe some of them get to a point where they come up with a MVP which you then take to the market, and then you keep doing a soft launch and things like that. But what we kind of did was tighten that process further, so that we're able to look at it like a true VC would do. And I'm sure people like Anuj would relate to that much better, because they kind of get reviewed on a regular basis by these investors. So I think we kind of put a similar kind of a model in place, so that we're able to evaluate these investments far more closely and then make calls whether how much of them you will support or you continue to support, or how much of them will kill at a point in time and try to look at newer ideas. So I think we have fine-tuned that process, and it has helped us. I think we are able to do that better now, and we are also now trying to expand that to a point where we are even looking to see how do we identify a certain set of startups which are working in the space, which would be complementary or linked to the areas where we want to be expanding, so that even we were looking to work with these startups to see how do we kind of work together with them, be it an investment or a joint go-to-market and things like that. So I think it has sharpened our investment focus, and we're able to do it much better than what we used to be. Of course, apart from investing in the short-term liquidity is always you find ways of parking some of it in mutual funds like what yourselves would offer. But I think the larger investments are in these areas. Yes.
Sure. I'm sure these are the interesting times for somebody who's cash rich. These are the great time to have a great bargain as well. No doubt
Yes.
about it, whether through VC route or a PE route or, well, many other routes of listings as well. So let me move to Mr. Goel. So keeping the innovation theme alive here, how can one assess the investment decisions from innovation perspective? What's your view there?
So Sanjay, once we talk about innovation and the investment, so any investment we talk about, be it in the financial sector or instruments, real estate, or within the business itself, we are just trying to pluck back the investment. So we are always having the focus of longevity, higher returns, assured returns. And once we talk about the innovation, we always think about that what kind of the shelf life we are going to have if we are just giving the investment in one innovation. So what kind of returns we are going to have and how long. So like we are the building material industry, so generally we have to just think ahead and being the market leader the 5 years ahead. So we believe that the innovation will bring the potential, the big potential energy into your business, which will improve the performance of your company. So based on that understanding, and we do have learning that Kodak, despite the market leader, they got faded away because of introduction of mobile camera or DSLR. So based on that understanding, the way back we have already invested a big amount in the innovation, be it in the terms of automated storage system. We do have the big warehouses wherein our finished products we are just keeping through the robotic system. We do have the robotic manufacturing, and we do have the modular production units and the production lines. But and also we realized the way back that once we are having the so many dealers, say we do have almost 100 plus the big dealers, the state level dealers, and we do have almost 4,000 retail dealers. So first we had wanted to cover the first level dealers, and we found that if we are introducing the dealer management system, so we were the pioneer, we were the first company introducing the system of DMS, wherein whatever the invoicing, whatever the sale is happening at dealer level is getting synced with our production line. We do have the complete control over inventory, demand, invoicing, as well as our production. So eventually what happened, we were producing only those products which were having the demand. So eventually there were no inventory at all. We were always having some demand in the market. So with the similar understanding, we found that now due to this pandemic, we learned that everybody is going to move towards the sensor-based products, and where the hands are not being, the people don't want to have the touch experience. So based on that, based on that understanding, we already had some product where, based on the sensor-based, but we found that now we have to go for the next generation, what you might have experienced in the developed countries. So we invested more than 500 crore rupees in our sanitary ware plant, wherein we do have more than 1,000 the manufacturing units, the small units on the pan India basis. But despite that, we took our call and we invested the big amount in the innovation, and we are rolling out our product which are 100% sensor based. Your WC is going to be sanitized, temperature controlled, cleaning, dryer, everything is hand free, and you don't need to do anything. So this kind of thing, innovation, we believe that we will be having that different edge over the market. Similarly, on that understanding, if we talk about, we have already gone the one step ahead. Our retail dealers also we are just trying to cover. So now we do have the complete control of the market, what our end user, end customer is liking, so that we can just focus on that product, and we can produce also, and we can basically make that product available in the market. Apart from that, I tell you, basically, once we had been having the overseas subsidiary, we found that they are bleeding with the loss, and we had to have some money over there, and we had been sending across, remitting the money in the form of share capital or loan.
Okay.
Then we found that you would be acknowledging that share capital is the tax paid money, which is very, very costly affair, and bringing back that capital to India, it is again the nightmare exercise. So based on that, we took the call, and in the respective countries, we arranged the limits. Okay. So that, from the innovative perspective, every country is having its own, sustainable model. So basically, every year, wherever we feel that, the innovation is going to give us the long lasting result, so we don't mind to go to, basically, very, very large scale basis. So, for example, if we talk about innovation right now, we are just on a personal front going to invest in a car. You want to buy a car. So, if you're just talking about the long run, so definitely you'll be opting the electrical or CNG vehicle or hybrid vehicle. But if you're just having the investment without innovation, without giving a thought and having the mindset to replace within 3 to 5 years, so then you might be having the diesel or petrol vehicle. So this is my understanding that innovation in investment is highly inevitable, and we have to just keep on monitoring the market based on the future modalities, and we have to incorporate in our business model.
No, sure. That's definitely important, because these are the times when you look at assets in the market and continue to invest. CapEx is definitely there, is visible in the market as well. So, Anuj, keeping the same what Mr. Goyal also talked about, and I'm sure all of you must be doing on investments, interest rates being low, keeping cash in hand becomes a challenge for you. How is your maybe a treasury function or a finance function working towards say money markets or capital markets or fund deployment in these times?
So Sanjay, this is one of the luxuries I wish I want to have that. So
Sure.
before we raise the cash, we already have the plan to spend and deploy it. And my startup by nature have a higher business risk, so we want to minimize any kind of investment risk. So usually right now where we are, if it is not in strategic investment, it is usually sitting in at the short duration, short term instruments with a lower risk. So that is our instrument of choice for now. FDs, money market funds and all. That is where we go for. Yeah.
No, sure. I understand that. Sure, no doubt about it.
Yeah. And
yeah, sorry, go ahead. Yeah, go ahead.
No, sure, please. So second part is actually, so this is one part of treasury. Second, which we are now exploring, is how we can access the debt capital market from the liability side. That is another which we are exploring. What are the new instruments? Every day the market is actually opening up, especially something very exciting which is coming up as a sustainability linked loans and all. So yeah, so these are the both leg of
No,
how we
sure.
manage the
So
treasury.
markets have really unfolded, uncovering a lot of opportunities on the debt side and the equity side both. I'm sure who's better person than talking about Purnimaji. Let me move to Purnimaji on this note, because being in insurance industry, so what are the strategies have you deployed in managing these investment portfolios, especially as I talked about interest rates have been at the bottom? Cash is being a dilemma for you?
Yeah, so historically, cash is never a problem for an insurance company. So liquidity management is probably while it needs to be there, and in the light of the pandemic, etc., it is sort of a concern, because suddenly you have 3.5, 4 times claims. But the way an insurance company is regulated, the way it's managed, liquidity crunch is not a crunch that you normally sort of face. You might have a slight problem, but largely liquidity management is not the issue. Definitely, the investment income is hit big time because the interest rates are falling, and that's a real concern. And especially, of the various products, there is obviously a term product that, term insurance that is written by insurance companies, but also what most insurance companies are writing now are what we call as guarantees. So you give a guarantee to a customer that this is the interest that you will get if you take a policy with us. Now, that doesn't change, but the interest rates are sort of falling, and therefore your spreads are at a severe risk every time there are changes in the interest rates. So, in the last 1 year or so, we've seen even rates like 5.9 in the debt in government securities, which is a concern. So, I think what we do constantly is to keep managing and keep looking at the spreads. So, a 10-year GSEC may be, currently at 6.2, but the spread difference between that and the 25-year, 30-year plus security. The spread is the maximum we've seen now, almost a 60, 70 basis points difference. So, and this is more than what we see even with a state government security or a corporate bond. Which is quite, I've not seen that in the last couple of years. So what we are doing is trying to move our securities to long dated securities, to move it to the 25-year plus. It helps from an from an ALM perspective. The asset liability mismatch, it sort of reduces. We have long dated products, long pay products. So it sort of also fits in well with our overall strategy. So we've moved long term to long dated securities, sort of tried to lock these high yields for a longer period of time. The other thing that most insurance companies as well as us have either done or already in the process of doing is hedging the portfolios. So whatever guaranteed portfolios you've written, are basically hedging it so that there is a constancy of income, and it's sort of an assured return, so that upfront that this is the spread that you can expect, and that spread is not sort of compromised. It has also been sort of great that equity markets have been doing very well. So that has sort of been a boon this year. While we speak of the first wave, that was also a problem. So equity markets were sort of had been in a really bad phase, and so that is where I think your whole management of equity portfolio really comes into play, because sometimes when the markets are bad and you have a mark to market loss that you get, that affects your solvency of the company. So you can't afford to have that, because you need to have, there's a certain solvency capital that you need to maintain. So while there is a risk, so you need to make sure that your equity exposures are as balanced as they can get. So on one side, you have to, make sure of that. On the other hand, when the market is good, you need to also be able to capitalize on those returns. So I think the first and second waves have been, very interesting from an investment standpoint. And I think that's all we've been sort of managing in the last 1-2 years.
So I think we are back to last 3-4 minutes of this call, because I'm sure it's a long one. But let me move to the third topic quickly, and maybe if you can give a quick answer in a minute, each one of you. Maybe I'll just put one question each to you. Related to budgets, because I'm sure cost and investments is a passion, of a CFO, no doubt about it. But let me move to Neeraj. Maybe if you want to answer that first question. Different industries having different business cycles and, of course, business needs as well. How can one evolve with common strategy suitable for across industries? Because you've been part of various industries. So if you can have a quick answer in 60 seconds.
Oh my God, this is too difficult because the question itself is demanding that I have to speak a lot. But barring the fact, See, once we talk about the budget, be it from the expense perspective, I'm not talking about from the revenue perspective. So it is having the capital or revenue in nature. It depends on the business process and the industry. What kind of budget you have to drive? You have to be open enough, understand the business processes, and then only you can drive. For example, in our case, like we do have the overseas subsidy. I'm speaking a little faster. You have to bear with me. So in the case of like overseas subsidy, we had to just give the budget to the country head that okay, 5 years you don't need to just think about to generate the profit, but you have to just manage the break even point. 3 years you have to break even point with the expense part, and 5 years you have to break even point with the material cost also. So that too also you have to take a call sometime. So you have to be innovative. You're just not meeting the sales budget, then according to the budget, the cost part has to be proportionately adjust. So fixed budget, variable budget, all those kind of things you have to just find out and have the close monitoring. The shorter intervals you have to just fix the targets, and then you have to just find a way to realign and recorrect if required. I hope that I have
Sure.
covered in.
Thank you for the short answer. Let me move to Mr. Venkat in the same breath. Maybe was forecasting a challenge in this period, or has it worked without disrupting budgets?
No, forecasting was a challenge. At least the initial part of the COVID. I think, given that there's no travel, I think sales cycles had become longer. Closures were taking longer. So therefore, to do some amount of forecasting based on that was obviously a challenge. But I think, to your point on budgeting, I think the key is to be, and I'm sure, given that we are in the IT industry, I think agile is something which is spoken about very, very often. So I think the budgeting process also have to be agile if you want to be able to respond to such situations. Otherwise, the traditional model is most companies do an annual budgeting, and then there's an elaborate exercise, and then you complete it, and then thereon after that you just keep measuring it. Versus, I think, being able to be agile in terms of the process, and of course the systems being able to support it, right? I think you can want to do something agile, but your systems are very unwieldy and you need to do a massive amount of change for you to be able to do a quick run of your quarterly budgets for the next quarter, then I think it will become difficult. So as long as you're able to think, have an open mind, have processes which can run quickly, and have a quarterly kind of a review of your budgets, and therefore keep tweaking it as you go along, that should make a big difference. That's what we did, and I did work fairly well for us in the first year of the pandemic. So that's the way I would look at being able to respond in a situation like this.
Sure. So a quick word from Purnima ji. How did you deal? Were there through compensating measures or something? If you can be quick one.
Yeah, so I would sort of tend to agree with Venkat. I think the ability to be able to constantly forecast and never let go of that is, I think, most important. So dynamic forecasting is something which is a skill that we have developed, in the pandemic, and I think that needs to continue in order to be able to quickly reprioritize and replan and sort of work forward. So I think dynamic forecasting is a must. It's almost like a necessity, and we will have many other such challenges coming our way. So I think that's most important.
Sure. So Anuj, what was the biggest challenge for you in scaling a business in this period? Budgeting became a challenge, funding became a challenge, or was it fine, smooth sailing for you?
It was not so. It's a tough time certainly, and the challenge which I would see came from a very unexpected corner, and it was again a knee-jerk cost reduction. I would say the result of that it was the supply chains. They went for the whack. We were increasing our capacity. Now we don't know, especially with the microchips. The cycle has grown from 6 to 9 months, which was readily available for 2 to 3 months. So all the raw materials, the batteries, the cells and all, which were available on 2 months to 3 months, now they are in like 6 months. So that has been the biggest challenge for us in the scaling up the supply
Sure.
chain, putting the supply on the street. Yeah, because we
Very,
didn't
very.
expected the demand like the way it was. Actually, it was much better than we forecasted. Yeah.
So that's interesting. I'm sure. So let me reach to this conclusion of this panel, because I'm sure we had a grueling 45-minute, a passionate discussion. I can only tell you that, because that's where when you talk to CFOs, you have the passion, coming out with the experience. And I'm sure 45 minutes may not be greatly good enough for you to cover maybe all the topics, but I can only tell you the prudence and the takeaways from this panel discussion are, I mean, flurry of those. I can only tell you that one side you're seeing and capex continue to happening. You can see the long annuity continue to maintain. IT company continues to do buzzing job, and digitization is the name of the game. And startups, lesser talk the better. I'm sure they can only grow from here. I can only tell you that, no doubt about it. So, so thank you so much, gentlemen, all of you. As I said in the initial part of my talk, as the CFOs are, the more your money works for you, the less you have to work for your money. So I'm sure these CFOs are for that purpose, and I'm sure all of them maintain their cost, investments, and budgets in a great proportion. So thank you, gentlemen, for this time and your views on various subjects. Thank you so much for joining here. Yeah,
Thank you.
thank you,
Thank
everyone.
you.
Thank you, everyone.
Thank you for having us.
Bye.
Thank you, Sanjay. Thanks for moderating it so beautifully. I think it's been a great interaction between all the panelists. We have one question that is there. How did technology help cost management, and what tools were they used? This is a question by Mr. K.S. Murali.
Yeah, so maybe I'll take a stab and maybe others can. I think obviously there are different tools which you can use, and I was talking as I was mentioning earlier. I think let's say be it your budgeting process, how flexible are your tools which you are building for you to be able to do quick scenario planning, or being able to pull out reports on a real-time basis, which can give you a view of how your costs are and where is it headed, is how you can use technology. And as I think Puni was mentioning earlier on, if you have processes automated, I think there is obviously opportunity for you to reduce costs, because then you have teams spending time on certain activities which is required. And if you're able to automate, then there is an opportunity for you to save costs and deploy those people for other productive areas where you need insights to help the business. So I think that's the way I would look at it.
Thank you, Mr. Venkat, for answering that. Would any other panelists would like to contribute to the question?
See, from my perspective, like any effective CFO has to be equipped with the data, and how quickly you get the data, how accurately, and what kind of analysis you are having, how quickly you take the corrective steps. That is the basically the basic efficiency of any CFO. So investment in the technology to support this.
Sure. Thank you, Mr. Neeraj. Thank you so much, Purnima, Mr. Neeraj, Venkat, and Anuj for joining us. It's been a great discussion. Thank you so much. Thanks for
Thank
being
you.
with us.
Thank you.
Thank you so much.
Bye-bye.
Okay,
Bye
audience,
bye.
so time to move on to the next exciting panel discussion. I would request all of you to join me there. Good afternoon, everybody, and welcome once again back to for the an exciting fireside chat that talks about the CFO vision and strategy that will drive organizational growth. I'm very privileged to welcome our panel moderator, Mrs. Sameer Mishra, who's the Vice President and India Head for Enterprise Sales Happy. He brings in 16 years of diverse experience ranging from solution consultant to a team builder with organizations like Uber, SAP, and Ramco. He's a digital transformation, organization behavior, and change management, his key areas of interest. A warm welcome to you, Sameer. Joining him on the fireside chat are Mr. Kanan, who's a chief financial officer who's from Omega Healthcare Management Services. He has a proven professional journey, track record in corporate finance, operational excellence, transformation, and change management. Welcome, Mr. Kanan. Also joining them on the fireside chat is Mr. Bani Jha, who's the Director of Business Operations and CFO for Jindal Films. He brings in 25 years of global experience in handling functions like finance, accounts, taxation, audit, investors, relationship financing. He's also been formulating growth strategies and implementation, merger acquisition, greenfield expansion, and ERP implementation. A very warm welcome to you, Bani.
Thank you.
Last but not the least, we have Mr. Kapil Jain, who's the CFO from PNB Housing Finance Limited, who brings in a hands-on experience in the space of finance management, fundraising, accounts, taxation, investment, and private equity. A very warm welcome to each one of you. Looking forward to a great discussion. Over to you, Sameer.
Thanks a lot, Sharon. Good morning, everyone. Hope all of you are doing great. It is my honor to be the moderator for this chat with such luminaries in front of an august audience on a very pertinent topic. Interestingly, our three CFOs for this discussion today represent three very critical and diverse pillars of Indian economy: manufacturing, healthcare services, and housing finance. Quite a diverse portfolio. I welcome all of you.
Thank you.
Thank you. Thank you.
Great. All of you are looking smart and dapper. Great to see that. Let me take a step back before we start the discussion and ponder a bit about the topic that we have currently at our hand for this chat. Vision, right? Vision is an aspirational statement that an organization wants to achieve. But more importantly, it's not just for self, but it's for society at large. I personally believe vision also infuses passion into the actions of the employees who work for an organization. Hence, everyone wants to work for a visionary leader. In the ever-changing business environment that organizations thrive in currently, one such visionary leader that we look up to is the modern CFO. The modern CFOs have transcended from being fiduciary experts to being business partners, who link strategic objectives with financial goals of the business. They've been the catalysts for driving business transformation, amalgamating the same with technology adoption. I'm glad that we have a lot of guys who know technology and quite adapt at this new forum as well. That we've been used to the Zooms and the Teams. What I've been told is this is called the floor, right? Not the dance floor, but the floor. So quite adapt to handling technology on the floor as well. Coming back to technology, access to timely, accurate, and policy-compliant data is a key enabler to financial productivity and decision support. Automated reporting and analytics allow more time to be dedicated to forecasting and predictive analysis. Hence, the modern CFOs are also champions in adopting technology, but the effectiveness of this technology depends on the accuracy, availability, and consistency of data residing on robust technology infrastructure. In the next 40 minutes or so, we would love to understand the vision of some such modern CFOs and their strategy that has helped them steady the ship in rough weathers and navigate their respective organizations towards phenomenal growth. Without further ado, then, let me start with the introduction now on the discussions part. And if it's okay, Kanan, can I begin with you?
Please.
Great. So, Kanan, the pandemic has pushed business models to evolve, and they're clearly leaning in the direction of digital. How do you believe the CFOs should work with their teams to build a resilient business model?
Right. A very pertinent question. And as I start, let me give you some industry background, at least from a healthcare market standpoint. As you would have seen, a shift to digital has been the central theme for any industry for a while now.
Right.
But healthcare industry globally has been by far the slowest in embracing digital. Let me give you a data point, and we spoke about this earlier, right? 70% of American hospitals still fax and post patient records. Most of the countries across the world don't have any system of electronic patient record sharing, for that matter. Mm-hmm. These digital deficiencies, so to say, got significantly exposed during COVID, right? Confronted with shutdowns, the chaos, especially in the doctors community, as we would have seen, right? They have now started embracing not just the doctors, but the hospitals and the clinicians as a whole are starting to embrace digital communication and analytics that have been pretty common in other industries for years now, right? Telemedicine has suddenly become business as usual. Patients are now getting more and more comfortable with remote and computer-aided diagnostics and treatments. And today, opportunities are opening up because of this, right from healthcare app startups to hospitals to insurers to pharmacies, service providers like us, tech giants like Amazons and Apples and Googles. They are all scrambling for such services. And if you look at the market, the kind of market that we have, it's expected to grow from $350 billion to roughly $600 billion in like 3 years, right? And
hence digitization has become a prime time in the entire healthcare ecosystem, providers, payers, pharma, life sciences companies. And given that we play in this market, it has become imperative for any services provider to take a pole position and transform the offerings to suit that expectation. COVID has been an inflection point of sorts, right? What our customers are were looking to do like 3 to 4 years, they are looking to do it like 3 to 4 months. That's the level of acceleration that we have seen in the US healthcare market, given the kind of regulated market it is because of PHI and whatnot. It is still, transforming itself in such huge pace. One key part of digitization is embedding analytics into core of healthcare offerings. Automation, predictive analytics are getting to be critical toolkit for some of our customers. And in that environment, work from anywhere, security protocols are all getting to be focus areas as well. So healthcare, I heard this in one of the other forums. A gentleman said healthcare is morphing from a clinical science supported by data to a data science supported by clinicians. The reason why I'm giving you this background is pretty simple, right? Our business model follows the industry that we cater to. That's true of all of us. And given that all the transformation the industry is going through in such rapid pace, the role of CFO has become a central in navigating organizations to go through such business model change. Now I'll tell you how. Typically, transforming operating models entails significant amount of investments. See, gone are the days where CFOs were, restricted to the 3 C's, right? The cost, control, and compliance. I think our focus as a finance fraternity should go beyond the 3 C's to move into something that will facilitate 3 other key imperatives, which is growth, investment, and enablement. Operating model transformation is like changing a tire in a moving car, right? And to go through all of this on the offensive, especially when the market is hot, every firm needs to optimize on costs and start investing in the right avenues for growth. Optimization on costs and investing in growth. And to do this balancing act without diluting margins or compliance or controls for that matter, that is what defines the new avatar of CFOs today. We as CFOs are the enabling agency to get the teams going offensive on the market strategy and helping leadership in finding ways to execute on them. At least at Omega, apart from being the CFO, I also am the executive sponsor to manage our enterprise transformation program. That's a 5-year program that we started last year. And that vantage point gives at least me the required visibility to prioritize on the initiatives, to invest in the right avenues while balancing organizational changes required and without compromising on the fiscal discipline. That, I believe, is what will take the CFOs to the next level. I think that's what is imperative in today's world, though. Back to you, Samir.
Brilliant, Kannan. Thank you so much. I think that was quite an illuminating point that you mentioned, and I think I'll probably remember this, moving from the 3 C's to growth, investment, and the enablement mantra. I think that was quite a big takeaway from this one. I'm sure the same goes with my audience as well. Moving on from the digitization and the data sciences to a world of manufacturing. And as I say, Mr. Abani, right? We were just talking about backstage, and he mentioned that he's not just. I told him that he said I can bat at any position, and you can talk me about anything. And I said, "Are you the Rahul Dravid of Indian cricket?" He said, "No, Rahul Dravid cannot bowl." I remembered that. Yes, there are a couple of wickets that Rahul Dravid has also taken. Anyways, on that note, Mr. Abani, I mean, I think having gone through that Boston to the Mandis, the diaspora that I've seen, would love to understand from you, in this new business era, how should the CFO drive organization growth despite maintaining, very importantly, control and visibility?
Yeah, I mean, I have 2 things to say before I start responding, Samir.
Sure.
The first thing is that I'm very sorry that my video and camera is not working, and therefore you can't see me live. And you have to manage my social media photograph. I'm really sorry for that. And thanks, Kannan, because you have made my life easy, because you have already touched upon what a modern CFO should look like and do. I mean, beyond 3 C's and all that. So Samir has already noted down, so he doesn't have to worry about noting down further. But coming with that background, I will substantiate what I'm trying to tell you with the data or the research papers published by the Big Four, McKinsey's, and other such research firms which does and talk to the various CFOs across the globe. One of the key speaker today has mentioned that CFO is no longer a chief financial officer, but it is a chief future officer. I'm absolutely agree with that, because what I have found is over the past few decades, the role of the CFO has seen undergone a profound shift. The historical task of the three C's, which Kanan has mentioned, I mean, in other words, finance functions such as books and records, financial reporting, statutory compliances, continue to be important, but are now taken for granted by CEOs. But CFOs of today and tomorrow must be able to take financial data and use it to influence operational decision making and strategy. But how? So there was a survey done by McKinsey. But before I come to that, there is a guy called Bill Tobia. He's the managing director of Strategic Finance, LL Partner, has said, people used to think the CFO was there to tell you that there isn't enough budget when you needed something, or to simply report financial results after the fact. So it's a kind of post-mortem event that a CFO used to do. And taking the leaf of this particular expectation, there was a survey by the KPMG and Forbes on 549 top CEOs of the Fortune 500 or 600 companies, and one of the third CEOs in the world says that their CFOs are not capable of handling and taking care of the future challenges which are coming up, and their CFOs are not ready, either in terms of their intellectual property or their willingness or their readiness to take the bigger challenges. So what I would mention here, and that is my personal experience also, if you see that in 1998 when I became chartered accountant, my first job, I have been told that you are responsible to take the statutory audit, you have to take auditor, and you have to manage auditor more than there is a quality aspect of it. So taking them on the lunch, and if the statutory auditor comes to them on the lunch, or the cost auditor comes to take them on the lunch. So my job was that, and from there I see how I have grown. Today, when I handle a $2 billion business, I found myself, it is completely out of sync, and I just spend around 20% of my time into the managing the compliances and the auditors and all that. How this influence was that from uh, how the changing role of the CFO is basically is from a technical and fiduciary expertise within a narrow financial focus to a business partner with a strategic and operational focus, leading a low-cost financial organization, using financial data to challenge the business and contribute to operational decision-making, a catalyst for driving business transformation, and link a strategic objective with the financial goal of the business. So these are some core development which has been done. And now what Kanan was saying, that from 3Cs to the new CFOs, which take cares, the four pillars, right, today, which I can define easily, is that leadership, operations, controls, and strategies. So leadership means business partner, communicator, or a storyteller about the company or the corporate you are handling, about the business you are doing. So Samir, you have mentioned that I can talk to anything, but why I'm able to do that? Because if I would have been in my traditional capacity as a CFO, I would have been expected to talk about their numbers, how the growth are visible. And I would have not gone into the very deep of why the growth is visible and what we are doing about it. What are the data we have to support our decision-making process? So that leadership comes to become the business partner, to the storyteller, and a cross-functional influencer, which is very important because finance is a function which really talk to every single individuals in the functions of the department, and it really matters how you are going to influence the people around you, the leaders around you. At times it is very difficult, but then finance has to carry that particular aspect. And then operations, like a lot of speakers have talked since morning, that digitization, data analytics, artificial intelligence, etc., which is very important. Now there are a lot of companies, a lot of functions, including my functions in my company. I have hired a data analytics, a guy who can actually make the analytics, who can actually help me understanding the data better. And then the controls, that the risk part is very important, because when I can tell you about this company where, only where I was talking. So I was meeting to the chairman of the company, and chairman, he said that what else you do as a CFO other than CFO. I have told him that I also manage risk. So he said that the CFO is not supposed to handle the risk. But I've said, who will maintain that the risk? Who is the better positioned person in the organization who can understand the risk, who can plan the mitigation, and who can actually take the follow-ups, that whether those the mitigation plans is working or not. So that is how he was convinced, and he told me that you are hired, right? So that was the quick way of doing it. And then supporting the strategy of the CEOs and the business. So that was the kind of four pillars on which the CFO is working now.
Great.
So what is the crux of everything? Crux of every single thing the modern CFO does is that a CFO has to secure seat at the table. I mean, table, that is a concept very much for there in the US and the Western economies, where seat at the table means that you have created your importance so well that no decisions are going without taking the finance or the CFO into the decision making process. A visible leader in the business and an excellent communicator, so that I am talking to the investors. I'm doing the IPO and in the US, and um, what the investors community wanted to know from the CFO is the story. They are not very much bothered about that what CEO speaks, because CEO speaks the story without any substantiation of the numbers. But when they speak to CFO, they are expecting the CFO should give the vision of the company in the real number, measurable numbers. So that is how it is done. And I think finance must be embedded throughout the company in every decision making process. And so you have to show your utility. And the growingly, what is also happening, that I have also already mentioned about myself, that automations and technology are critical. And it is very important that a CFO understand that what is data analytics, what is artificial intelligence, and what is data center. I mean, gone are the days where installing SAP and any other ERP have taken away all your risk and liability. But now it is gone beyond that. It is no longer a ERP implementation only. It is also the taking out the intelligence or the input out of the data you have. Otherwise, there is no use of data. So that are the few which I think is I think is the essential for a CFO in the modern world, and become the relevant even in the future.
Great.
So that is what I have said in the beginning. CFO is not a chief financial officer, but a chief future officer, and it is up to the CFO that how accommodative they are, how intelligent they are, and how much adaptable their capabilities are. I mean, these are three important parts and things which a CFO needs to take care.
Great, great. Thank you so much, Mr. Abani. I think you brought with yourself a wealth of information. I think anybody who would want to be a futuristic CFO would learn a wealth of information from what you just spoke. But at the same time, I hope they don't get intimidated that these are all the things that a CFO needs to do. not just the finance books that they've been learning, but also the technology, the risk, and securing a seat at the table. If I may put it, and I remember one of the famous ads that for Cadbury Bonville, if I'm not wrong, that you need to earn it to have it. So basically, right, you need to earn that seat at the table. That's how you do it. Great. Thank you, Mr. Abani, for those insightful knowledge that you shared with us on this forum. Kapish, if you could also you come from a very different background as to what Kannan and Mr. Abani come from, handling hardcore housing finance, and I think I'm also glad to see that yes, you spent good 4 years now in Delhi, so maybe the Delhi weather might have influenced a bit on you, and you're enjoying the winters, unlike Mumbai.
Correct.
Right. So would love to know what's your opinion. What do you think can be a CFO's task to foster organization growth? What can be his vision?
So, Samir, we play a dual role. We want to make sure the organization progresses and grows, but the organization also makes sure that it's a calibrated planned growth, right? So that we don't have roadblocks, because in a finance company, it's easier to lend, and the tougher part comes later. And I've always believed, and I've seen that in my past with my experience, that when a finance company starts lending, there's a lot of clapping which happens with the growth that they see on the business growth and disbursements.
Mm-hmm.
But the bad news comes later, when you see your delinquencies rising, when you see credit costs rising, when you see you have lent bad customers. So the growth needs to be calibrated, planned, and one needs to play to one's strength in the area, in the core where one has built his expertise, and you can't just grow exponentially across all verticals, and like what everybody else is doing, but need to find out your niche and then plan yourself to grow so that you're working with your strength and you know what you're doing. Last and more importantly is making sure that you have profitability in your mind when you're growing, and you're not just growing recklessly. We see many of these firms today who get listed where there is no visibility or profitability, but then we are still the old school of thought where we need to make sure that we are making money and we are giving returns to our investors. So profitability is key. And last but not the least, it's about fairness and making sure that you are governed and you're taking care of all aspects with regard to governance. If I have to expand on each of these, when I say calibrated growth, it means that you need to have a good understanding on how is the market moving. You need to understand the market size, you need to understand the dimensions of that market where you are talking about for yourself to grow. So in India, for that matter, mortgage industry is like less than 10% to the GDP today. And it's far lower than any of the developed markets. Like some of the developed markets is touching at 40, 50 as well. So there's immense opportunity for growth. 4 critical elements, and there could be more as well. If you see affordability today is at lifetime low, like it's like 25. One says it's 2 decades low, one says it's 3 decades low. Affordability, that for that matter, is 3 decades lower. Rates are very attractive. Your rental yields are closer to your rate that you pay when you borrow your money. When you borrow money for home loan, it's even sometimes cheaper than the GSEC yields, which is a risk-free rate. One would argue that risk-free rates are you get more on the risk-free rate than what you get on lending your loans to anybody. But that's the way market has been today, flush with liquidity. Retail yields therefore are far lower, and therefore you can make good money if you buy a property and give it on rent as well, unlike in the past. So there's immense reasons there. COVID has made another opportunity where there's work from home. People are looking for bigger houses as well. So that way, the entire dynamics on the macro front is fairly set. But you need to make sure that at your house side, you need to make sure that you are planning it properly. You know what the market is. You have identified your pocket where the growth is available. So while this is still a holistic number, you will still see pockets within the country where there is opportunity for growth for the product that you have an offering. You still need to see whether those markets which you're saying that there's an opportunity are the market which is performing well in the past, which is about delinquencies and credit cost, so that you don't make the same mistake which somebody else has done in the past in the particular market. All those aspects, because that could be a reason why that market has not been penetrated, and you should not get false prey to that. So evaluate all aspects with regard to growth, with regard to credit cost, to look into pockets where you can potentially grow, and then you plan yourself. Secondly, also understand which is the segment you wish to grow, which is where your strengths are. So if your strength is more in the home loan prime segment, grow yourself there. If your strength is more in the self-employed lab products or the self-employed home loan segments, you grow in those markets. So identify your core strength and then grow yourself there. And that's the only way you want to make sure that you are making money, right? And when I'm talking about, this is about planning, right? And playing to our strengths is something that I already talked about to you. The third aspect is about profitability, making sure you're making money. At the end of the day, you need to give your returns to your investor. In our business, what is measured is your ROA, and eventually what is the ROE which the investor is getting with regard to return on the equity which they've invested, right? These are 2 very critical factors. So make sure that each of your products and each of your segment is standing on its own feet. It's not that one is making immense amount of money and therefore the other is getting benefit out of it. So everybody has to stand its own feet. Every business, every segment has to make money and needs to show at least the right path towards growth and making money. If it's an essence segment, which is still to uplift and still needs to grow to a size, you might need to invest more. But you need to have visibility that in 2 years' time, 3 years' time, your cost will be get overrun by your revenue. And the revenue then becomes a larger share. And therefore, you in 4 years' time, you will touch to a trajectory which shows a return to the investors. And then you plan to invest. And that's would be my vision on those aspects, whether it's on growth, planning, understanding your market, playing to your core, evaluating profitability, and then you put your priority for growth. And last and but not the least, Samir, this is the most critical, is making sure that you are in line with what is the requirement with regard to compliance, fair practices towards your customer. Customer service is extremely important because that's the only way you can get a recall and you can do cross-selling to your customers as well. And on the regulatory side, make sure that you are governed 101%. Because 100% sometimes keeps you towards the line where there could be ambiguity and understanding issues as well. Your interpretation to a regulatory requirement could be quite different than what the regulator interprets for you. And then you find a challenge for yourself. So make sure that you are checking with the regulator, you are connecting to the regulator, taking the understanding for yourself and for your team, and be 101% compliant. If all of these things are done, there's no reason why a firm will not be able to grow and make money and keeps its employees and everybody happy.
Brilliant. Brilliant. Thank you so much, Kapish. Your answer was as fragrant as the tie that you're wearing. Right. I think covered very, very important aspects. I think with respect to the calibrated growth, because of late in 2021 itself, I think we have seen 35 unicorns in the Indian startup industry as well. Right. So hence you pushed a very important point on profitability. I could not agree more with you on the ROA aspect, because when we at Happy, we help CFOs drive their transformation exercises on the digital side, we always discuss the ROI aspect of the investment as well, right? Because every dollar saved is a dollar earned in the current scenario, right? And I think last but not the least, the best, right? Customer is always the king, and which has to be calibrated, keeping the compliance factor in mind. I think so. Brilliant points, Kapish. Thank you so much for these. Moving on, in the interest of time, gentlemen, I would request you to kind of just be slightly succinct in your responses, because I would want the last question is something which is very important, which I would definitely want to ask each one of you. So this one to you, Mr. Abani. Is Mr. Abani on the forum?
He doesn't seem to be there. He's there.
Yes.
Yeah, I'm here.
Mr. Abani, just let me tell you also that your passport size photo is doing wonders. You are looking as smart as well. So, right.
But I'm looking more smarter than my photo, yeah? Please, I can tell you that.
No worries. Our mess will ensure that we'll probably catch up when we do that in person.
Yeah.
Right. Mr. Abani, so over to the next question, which is quite intriguing, is you did mention a lot of aspects that a CFO needs to cover to be the chief future officer, right? What do you think are the best practices that involve or that can incorporate agility into the finance function? I think all three of you have mentioned that a CFO needs to do much more than just managing the books, right? So when you talk about agility into the finance function, what are the practices, according to you, that can be incorporated into the finance function?
Yeah, thanks, Samir. But before I respond on that, I can tell you that there was a survey by Boston Consulting on the CFOs. And I'm not talking about Indian context where it is expected that people won't be knowing about it, but in the developed economies and Fortune 500 companies, I'm sorry, most of the CFOs were not even knowing that how a finance department or finance function can be agile. How agility matters in the finance function, because traditionally it was believed that it is a procedural function which take cares on the post-mortem after the event, like auditing, filing the returns with the government department and all. But that was the time which the CFO has responded like that, including in India. There was a survey by some private management college which also has concluded on the similar number and similar. So people were not even understanding that why agility is required in the world today, which is ever dynamic situation. Every day things changes, law changes. Take for example GST, for example. It changes every single day, 5 times in a day. So that is agility why it is required, because ever-changing external environment and increased demand for advanced analytics, the finance function must commit to greater collaboration. And the timely delivery of data backed insight, which is I have told you in my first part of answer in my previous question, that data back insight, which really enables a tailored made decision actually, until unless you have, so there are three phases of data. If data is there, it should give you some intelligence, and that intelligence is required to make the decision on, right? So according to me, because of paucity of time, I can tell you that there are three things which psychologically every single things has being are being can be considered here. Like, if you want to be agile, or if you want to do something other than agile also, you need to accept that why is there any agility available to us, available in our, and it is available in the system, and if it is not, how we need to train. So so to so to support, so agile finance function is like scalable, efficient in operations, and in bullet point I'm giving you, since you have not given me a lot of time: transparent, accessible data and metrics, right? So the real time data analytics and meaningful data analytics, frequent inspection to ensure fit for purpose insight, a quick responsible adaptation to change, because in the dynamic situations where every single thing, which I have already taken an example of, is you need to be very adaptive and fast. You need to be very fast adaptive to understand those changing requirement from inside the company or from the external factors. And then if you are feeling that you are not enabled or empowered, then get the necessary training, and try to make the account agile function, finance function as agile function, because it is very important for a core functions like finance these days, where CFOs are expected to do much more than the accounting responsibilities, to support the function, support the other function in decision making process, and also to grow and expand in other parts of the world or in the multi geographical locations. So the agility is very important, and growingly it will have its own relevance and importance.
Great, great. Thank you, Mr. Jha, for that piece of advice. I think and agility for all of us, we know that especially the pandemic has tested the agility for almost all the organizations, their adaptiveness to change. And you correctly mentioned it's not just external at times; there is internal change as well that we
Correct.
need to really look after. So
Yeah.
brilliant point there. Thank you so much, Mr. Jha, for those insights. Coming back to you, Kapish, I think you did mention last time around about the 5 pillars of a CFO, right? Uh, I would also want to understand from you on the role of technology, right? I think especially in the banking sector, it is going through a lot of digitizations, we know, right? And the housing finance as well, I believe, right? You have undertaken a lot of technology initiatives yourself at PNB Housing Finance, right? What exactly is the role of technology according to you to eliminate mundane tasks, right? I mean, like the data entries, the reconciliations, the maintaining the digital audit trails. I mean, would love to hear your piece of advice on this.
So, Samir, there's no denying to the fact that we are a thin line business. Our spreads are very minimal in the mortgage business. As I mentioned, if somebody has to lend a loan at around 6.5, you need to decide how you're going to take care of your other costs and your operating expenses and your cost of funds. To operate in a thin line manner, in a profitable manner with scale, you need technology. So technology does becomes a cornerstone, a very critical aspect to your growth, to your ability to make yourself profitable as well. Having said that, I would like to take you back just to a pre-COVID time of 2019 when I was in the US and I had the opportunity of visiting Tesla and have an opportunity sitting in the driverless car. Okay. So while I drove the car for a few minutes and I realized that I'm on the right side of the road while I'm used to be on the left hand side, I wasn't too comfortable driving that car, although there was somebody supporting me as well. But after a few minutes, the car was driverless. Okay. It was adjust to the driverless option, and the moment it was in driverless option, it was seamless. It was knowing how to stop, where to stop. It was understanding signals. It knew how to turn. So everything was being managed well. There was no issue of any traffic being missed, no issue of any speed being missed as well. So then I realized that if you really automate things in a comfortable manner, it can really eliminate a lot of things for you, right? And when I read it further, I do also read that with the driverless cars experiences in the US in those pockets, there are far lesser signals which are get broken, and there could be none as well, right? There are nobody speed dialing, or speed driving. There are far lesser accidents which is happening on the road, and there's a lot more peace of mind in those operations, in those functions. So that is a big realization that if you really adapt technology in areas which could be mundane for you, it can really do wonders for you, right? Elements like RPAs and AI and ML, we all hear about it. For us, it was like coming from Mars, but then as we go into more details of it, do understand that there's enough that they can play value for you. I won't use the word mundane, but every role has its value. But in a task which is more predictable and more mechanical as well, if you adopt these things, they also have intelligence to improve yourselves. So as you adapt RPAs, it might not show more efficiencies today, but they also become intelligent. And as they become intelligent, become far more efficient, right? In an organization where this is in a sector which is growing, and if it has to grow fast, sometimes we do see challenges of filling resources with people and finding talent, and sometimes overpricing yourself when you hire those people, and then keeping the expectations for people who are exceptionally talented as well. All those aspects, supervisory management, people management, performance, and all those things come into play as well. More importantly, if things go well, there's no question asked. But if things go wrong, there could be a regulatory non-compliance. There could be a mislight of a target date. All of these, similar to a driverless car, does takes care of when you adapt RPAs, because they have been fed with all those intelligence and what they're supposed to do with all timelines and all those aspects. And therefore, the possibility of missing out something, the possibility of those errors happening, and possibility of being non-compliant does comes down significantly. It's a long journey ahead. We need to measure and evaluate how successful it can work. But in my view, to take care of regular, predictable, mechanized, not necessarily mundane job would be that you adopt RPAs, adopt AI, ML, and get them into your groove and make your processes far more seamless, and get yourself focused into areas which is more relevant for you, more important. It's a 20/80 principle that applies all the time. Look into the core aspects of your business and see where you can add value more. Is where I think technology could play an immense role and phenomenal role. We see it all across. We have also adopted digitization. We have adopted RPAs in some of our functions as well. And we will need to see how we already see results in the sense that we do see that the productivity has gone up. The ability of the documents to move across various verticals has become far more seamless. It's all available for somebody to view, and you need not go into paper all the time. And when you have lesser paper to view and handle, you do improve your productivity as well. So I strongly believe that technology can play an immense role, and everybody should look to get a driverless car if they can afford it.
I'm sure, and Mr. Elon Musk has his eyes set, and post this interview of yours or this discussion, he will be even more enthused. Right. Also, one thing which I definitely loved about this, Kapesh, is from a CFO, while you did deliberate upon the technology, you also very categorically mentioned that it is not the short-term benefit, right? There might not be imminent benefits that you see, right? But you have to be staying in the game to walk technology along the long road, right? Take that long distance away to see the real benefits and then focus on your core sector. I think that's something that a good takeaway from me, and good to listen to this from a CFO perspective, wherein we talk about the ROIs and the ROIs as well. Thank you so much.
So just to add, Sabir, in our business as well, we do ROI analysis. We do a CB as well to understand whether it makes sense for me to adopt something, because sometimes the technology might come to you cheaper, but the maintenance cost could be high, and all those aspects need to be factored in as well. So we do a reasonably decent ROI evaluation as well before we adopt something.
Definitely. The TCO will always be a part of the game, but it's good to hear that yes, it's not about the short term, the 6 months kind of a benefit that we look at when you're implementing the RPAs or the AI and MLs of the world, but it's the long term that you're ready to give to those technology players to show their benefits.
Yes.
Right. Quickly coming on to you, Kannan, I know we are almost stretching on time. So very quickly, I think On the healthcare market, especially, right? You mentioned that there had been laggards in terms of technology adoption, but of late we've seen them making them rapid strides, right? So, how's the current technology landscape evolving in your industry, and how specifically is Omega Healthcare responding to this?
The context of technology and automation, to take Tesla's context itself, could be different in different industries and different in different environments. Put Tesla in India and see how you can automate, right? Driverless car in India becomes a very unique proposition and a very, very unique, I would say, an environment and a risk for that matter. So, like in any other industry, just as case in point, healthcare is also, the stories around digitization, automation, productivity improvement, and all that. Right? Customers are looking for significant infusion of technology from back office to front office. We are looking at, most of the service providers are looking to be partner of choice in that order. But there are about 4 pivots that we are clearly seeing in the industry, which will be significantly influenced by how the industry use technology. One is customer experience, and in this case, patient experience. From the front office in healthcare, that includes patient management, computer-assisted diagnostics, to back office operations like revenue cycle management, AR. There is a significant amount of focus and investments in digitizing seamless patient experience and engagement. There is a significant technology play here, point one. Point two is from output to outcome. It's not easy said, it's easily said than done in the healthcare industry, wherein 2021 has been a very defining year where healthcare as an industry moved from a conceptually talking about outcomes to actually delivering value-based care to patients. We are already seeing our customers talk about outcome-based pricing and moving into subscription models and whatnot. And this movement to outcomes is only possible through mining data. Right, the underlying to mining data hence becomes the whole classic AI and ML, making machines manage not just patient data but also predict patterns on real-time basis through gadgets that we all wear in our wrists for that matter, and thus preempting patient healthcare needs proactively becomes critical and real in today's environment. And that brings us to the 4th pivot, which is confluence of industries. The boundaries are getting blurred as hospital systems, technology companies, consumer good industry, banking and insurance companies, services partners like are all collaborating to managing this ecosystem of customer experience and expectations and data. So in all, there is a significant interplay of digitization and automation, automating workflows that helps in patient scheduling, let's say, for example, automating data flows from one system to another system that helps in seamless, what they call interoperability between the healthcare ecosystem. And automation in fetching the healthcare data helps the entire healthcare ecosystem. That includes the provider of services in the healthcare space, the hospitals and the hospital systems and clinicians, payers, the insurance industry, and the patients for that matter, right, coming together. Now, let me talk about what we are doing to address this particular market segment, right? From where we see, what we see in the market, it's clear that digitization and automation becomes table stakes to sustain a credible healthcare services player. And we have propped up our investments in technology, talent, and through acquisitions for that matter to scale on the opportunities, especially in the revenue cycle management space. In all of this, while you do this from a front-ending standpoint and in becoming offensive in the market, what's also important is what Abani spoke about, which is agility. Agility in what market and customers are looking for, and that can only be driven if your internal systems are agile enough to manage the customer experience requirements. Agile and automated environment hence becomes table stakes, not a fine, fancy shining toy anymore. Right, using bots to automate the processes is no more a good to have. They are now seen as differentiators from a go-to-market standpoint. And when we go and pitch such projects to our customers in, let's say, the revenue cycle management space, typically the customers ask 2 questions. 1, where have you done this? 2, whether you have done this in your own order to cash cycle, right? So as much as we want to be selling automation to our customers, it's becoming relevant and imperative and important that we are able to deliver value internally as well. And that is why, and that is how technology, digitization, and automation have now become here and now opportunities, as again some things that we embark upon over a period. I just want to close with one, right? As we embarked on our 5-year transformation journey that spanned across the organization, from sales, delivery, functional expertise, and whatnot, one aspect that became the foundation to all of these streams was technology, and the fact that we were planning to automate most of it, not just from a market facing standpoint, but also something that we need to adopt internally as well. Digital or technology transformation, as they call it, cannot just be a destination. The word transformation itself suggests that it's the change of sort, right, from one state to another. That leads many of us to believe that this whole digital transformation journey is a one-time switch from the old ways to, let's say, the new ways, or from low tech to a high tech standpoint. But the reality is that digital transformation is never really complete. It cannot be. Technology is evolving. Everything is evolving. Customer environment is evolving. And as technology itself is continuously evolving, it's true that of organizations that depend on it, rather than a finite project to be checked off in our to-do list, I believe digital transformation should be seen as a business discipline, like finance, like operations, like HR, for that matter. And that's my 2 cents with respect to how you visualize digital transformation journey in your end-to-end cycle, and how it's important that we just don't make it lip service from internal legacy standpoint, and move on to becoming examples of good good digitized organization, so that the customers can rely more on what your services can offer to them, for that matter.
Brilliant, Kanan. Refreshing, to hear that, yes, digital transformation is not only meant for customers, but it has to be.
Apologies, Samir, to interrupt.
Okay.
We're just out of time. If I may request you to conclude.
Definitely.
Yeah.
Thank you so much, all of you, for this wonderful discussion. I could not have been more enchanted to hear the thoughts that you all shared. Be it from moving from the 3 C's to the growth, investment, enablement, or the calibrated growth, which Kapish mentioned, and the finite, I would say, a definition of agility that Abani pointed out. Right. I would just want to kind of wind it up by referring to the 4 phases framework which Deloitte published, which mentioned that the CFO has 4 phases: an operator, a steward, a catalyst, and a strategist. Right. I think post the session today, I would love to add one more phase to the CFO, that of a visionary leader. And thank you so much for coming through to that definition of a CFO and putting that new face to the CFO. Love to hear your thoughts on the vision and the organization growth. I'm sure the audience loved it as well.
Thank you very much.
Thank you very much, Samir. Thank you, Kanan.
Thanks,
Thank you,
Vani.
Kapish.
Thanks, Kapish.
Yeah.
Thanks for having us, Samir. Thank you.
Thank you.
Good afternoon, everybody. A warm welcome to each one of you. As we discussed, we have a very interesting keynote presentation on increasing role of technology and network compliance. I'm privileged to invite Mr. Rohit Razdan, the Chief Business Officer for Clear, who is responsible for driving customer impact, strategic choices, business outcomes, goal setting, capitalization, and capital allocation for Clear. A very warm welcome to you, Rohit. Over to you.
Thank you, Sharon. Let me just, guys, share my screen and a presentation that I would use today.
Sure.
So good afternoon, everybody. Very nice to be talking about this topic that is about the role of technology in compliance. And it's something that we think about all day, all night. So we'd be happy to share our thoughts, and any questions or comments I'm happy to take on the side. So, as many of you are aware, compliances in every country are I would say, a complex thing, but especially in a country like India, where the regime has been changing and we've been going from legacy to kind of new modern age kind of compliance systems, there is a bunch of things to be done, right? So there's roughly 170 odd compliances which are today sitting in the country, and it's not very, very easy to be kind of adhering to, even though I think now more and more people are realizing the value in being compliant. It's not very easy, right? Now, compliance and supply chain are actually, like technically speaking, are two very different topics, both sometimes under the purview of a finance head or a CFO, but very two separate topics, right? Now, if you see what is happening is there has been a sea change in compliance, and as many of you are aware, there are big changes happening on even the supply chain side, right? Both are fundamentally being driven by two broad trends. One is digitization of both compliance and supply chain, and second is the design of GST. If you look at it, right? So as many of you are aware, in our fourth year of GST now, how GST is designed is, for you to be compliant as well as being at the right level of government payout or GST payout, your ecosystem, your supply chain has to be doing their job well as well, right? So when they upload their sales and that gets registered as your purchase, you get input tax credits, and that fundamentally kind of goes through the supply chain to your left and to your right, and that leads to essentially compliance being adhered to, right? So now, because of the design of GST in our country, and thereafter kind of obviously e-way bills and e-invoicing also came in, supply chains and compliances have become completely joined at the hip in a country like India, right? So over a period of time, you would see people in if that's not happened already in your organization, the procurement guys and supply chain guys thinking about kind of input tax credits and taxation related things, and vice versa. So now, if you look at the journey that we have had, right, and most of you might be aware, but sometimes it's good to step back and look at how fast things have been happening, right? So the government and especially the compliance side of the government, right, has basically become a startup of its own, right? They've been doing things extremely fast at a national scale, at a level which was not even imaginable, let's say 10 years back, right? So in 2017 we got GST, so one nation, one tax as the central objective. 2018 we got e-way bills for movement of goods across state lines and otherwise. Then we had your input tax credit kind of restrictions, Rule 36(4). Some of you might remember from a couple of years back. Then we had, during the COVID era, we went to a live real-time electronic invoicing era. Now we have again 36(4), TCS, 206, and so on, kind of coming in, and these are kind of leading to different, I would say, regimes or addition to compliance regimes, right? So this is essentially what I was talking about earlier. It brings supply chain and compliances very, very tightly together, right? And as the question mark indicates, we believe this is just the start of a long-term journey of digitization and compliance adherence everywhere, and we will touch upon some of these things very soon. Now, in our opinion, 100% of these businesses, even the businesses that are which want to be compliant, it's not easy to be compliant for a bunch of reasons, right? 4 or 5 we have listed here, and you may have other thoughts that you may have as well, right? The first thing is the laws are changing, right? The laws are changing because the government is discovering new ways to see how it can be made painless for the people, and they don't want to arrive at a final great solution and then go live. They went live and now are tweaking things, and that's reducing the load every single day. But nevertheless, you have to keep up to date. Second is these rules are becoming more stringent, right? So non-compliance is being penalized a lot more. I would call it like systematically, as opposed to a bit more. I would say on a one-off basis in the older regimes. This is now becoming more and more artificial intelligence-led, machine-led, computer-led kind of I would say implementation and strictness is being followed through technical systems. The third thing is that the business systems that we've all had in our companies for a while, they are not as nimble to be able to change on the fly to keep up with what the government is doing, right? And many of you would probably understand what I'm talking about. Fourth point is because of the supply chain and compliance coming together, kind of the broader point that we made, right? Now there is too many counterparts, right? Whose compliance is then becomes your compliance and vice versa, right? So you have to constantly be doing things for your buyers, and you have to constantly be in touch with your vendors to ensure that everybody is doing their part well, right? And lastly, all of these things are happening since 2020 have started to happen on a real-time basis, right? So those are the two or three or four or five things because of which I think it is non-trivial to be 100% compliant, right? The other element I thought we should touch upon is that compliance and governance, right? Like these deeply influence shareholder value, right? Especially in developing markets, right? What we mean by this is at one point of time, compliance was not a differentiator. Everybody was equally compliant or equally non-compliant, right? I'm talking like 10, 12 years back, right? Now, what is happening is as GST comes in, as digital compliance comes in, it becomes very easy to assess by anybody who is compliant, who is not, right? Literally, you can go on the GST website, look up by a GSTIN and GST identification number, and see who has been doing things on time, who has not been doing things on time, and more and more people, like even on a commercial basis, are looking at that information to get a signal of quality. And similarly, your shareholders, for those of you who are listed or even otherwise in private companies, your shareholders are looking at compliance as a strong signal of quality because it's also monthly and annual and whatnot. So it becomes easy for them to see a timeline trend. And they also know that in developing markets, many things change, right? But your compliance, your governance is in your hands, right? If you want to be very highly compliant, you can be very highly compliant. It will cost you a little bit more. So they see as a strong signal of intent, right? And on the right, what you see is a very large number of investors, right, have now started to pay a 20% premium for emerging market companies, right? Governance premium for emerging market companies, right? So this is not a trivial, I would say, initiative, and it becomes more and more valuable for your shareholders if you are compliant. The second thing is, in addition to people not being compliant, right, there is also a very, very strong working capital angle to this, which many of you, especially who are running slightly complex businesses, are aware of, right? So a lot of vendors do not file on time, right? There is also like, 3B filing that kind of doesn't happen by some percentage of businesses. And in our opinion, 60% of the businesses do not claim their full input tax credits, right? What I mean by that is that you do not get your input tax credits fully. Let's say you're in November today, you might be following up on input tax credits for October and September, but that one thing that you left out in July and August right now is out of your mind, and you beyond a point stop caring about it, right? And that adds up, right? That adds up to a meaningful number, right? 5 to 7%, or broadly speaking, 5 to 10% range of PBT is impacted there, right? Now, beyond compliance, right, the businesses also face a fair degree of, I would say, pain points in communication and in things around that. Okay, so I think that is another area because of which audits, some kind of vendor processes, the spend leakages, all these things kind of there are things around compliance that happen, which also are things that you or your teams, maybe not all tax teams, but teams which are dealing with supply chains, right? Like that might be creating a little bit of an issue for you. Now, from a CFO standpoint, right? Like there are 4 or 5 functions that in any kind of medium to large size company, a CFO would care about, like which we have listed here: planning, budgeting, financial compliance, payments, and credit management, then transacting with vendors, distributors, and record keeping and reconciliations. So this is kind of roughly the CFO stack, right? Now, there are 2 areas, right? The stack number 2 and 5 is where generally Big 4 would come and play, right? Now, that's, in our opinion, that's not a comprehensive financial solution, right? Because firstly, the way things are going, right, like technology role is becoming very, very heavy, right? Big fours are fundamentally an audit and accountancy firm, right? They are not technology firms by design, although obviously many of them are trying to play in the technology space these days, right? Now they have, but because of the design itself, right? Like they have small tech teams and large manual teams, right? For especially for things like indirect access. That is their modus operandi most of the time. And then there is no common workbench. Let me explain what I mean. So in general, where a lot of the global software has started to go is there are. So think about this as a virtual form of a large table where everybody is doing their work. They can leave the room, but the work is staying there, right? So that's the workbench. So in a digital workbench, when things are there, then it becomes easy for both an external party and an internal party, right, to be collaborating on the same set of documents, right? That doesn't generally happen with the current structure of the audit firms and so on, right? And frankly, it's non-trivial to create that as well, right? So I'm not assigning blame. I'm just saying that's the nature of the animal, right? And then obviously there is some bit of dependency which gets created, and there's a little bit of control that kind of goes away. And all of us kind of have worked with Big Fours, and we can probably relate to some bit of that, right? So now. Then you have the other important guy, which is on the record keeping side, which is an ERP system, right? Now ERP systems obviously are the backbone system of any company, along with probably the CRM, and those are, I would say they have their own challenges, right? They are obviously technology companies, but the levels of changes that we are doing in our country on the stack are kind of non-trivial, and for many of them, they are, as more and more companies are becoming, cloud-based and whatnot, right? Their product is global, right? So you have to go as per their product roadmap, and that their product roadmap will obviously be designed as per their revenue stack, right? So that's where they will innovate first and whatnot, right? So that's one, and second is like you have legacy with desktop era software, and sometimes it can take months to implement, and now therefore kind of things where in 6 months you may be changing three things, they may take 6 months to make one change, right? And last is like the broader design again is that they are full of engineers and not of finance experts and chartered accountants, right? That's generally the case. Obviously, you'll have a smattering of finance guys also in their companies, but they're fundamentally engineers and they do not understand all the context that a CA may understand, and the texture around what a CA may understand, right? Now, what we are finding is that the businesses that are very, very conscious of brand reputation, right, and compliance, let's not get confused. Compliance is fundamentally a reputation game, right? And the financial penalties that a large business can have may be kind of easy to absorb, but the reputation is where kind of it becomes really, I would say, the non-trivial, right? So now in our minds, right, like if you had three wishes on your stack of compliance and so on, and broadly in the CFO's office as well, right? There are three things that we believe you would want for your business, right? Number one, what we call digital everything, right? So which means as much of a footprint you can take from paper or from, let's say, legacy old systems to a modern digital system, the better it is, right? And like we are saying over here, government is already moving in that direction, right? You guys are all aware of what I'm talking about. Every single thing on even the government side is now going digital, right? So now you can choose to be behind government, but doesn't seem like a smart thing to do, right? Second is just automation, right? As government is creating or as the ecosystem around us, right, is starting to do a lot of things through digitization, it also creates a lot of opportunities for a lot of different flows to become programmatic, right? And to become like automated. Reconciliations, this, that, right? So that's the second thing, right? That anything that can be automated should be automated, right? Third thing is that the data sources, right, like, Excel's going back and forth, and then there being gigantic disconnects with the data that's sitting in your email, data that's sitting in your ERP, and the data that your boss thinks, he sees could be completely different, right? So what you want is, in an ideal world, you want, like we were saying earlier, a single platform where everybody plugs in and they have right level of access, whether visibility, editing, whatnot, printing, whatever, and they operate at that level. So there's never a disconnect between the data that you guys are all seeing. Okay, so this is where we believe we play very well, and this is a problem where we believe we are making the most cutting edge solutions. And again, I won't go into all of these things, but it is everything from the front end and how to make it easy for people to understand and access, whether they are in kind of finance professionals or they're warehouse professionals, right? It becomes easy and contextual for them. And then there are also a bunch of backend things which may have ERP integrations, uptimes, this and that, right? So all of those things we bring together. The third thing that we bring additional on the top is domain expertise, deep domain expertise, because of which we also believe we can help you save taxes and figure out problems in your data and whatnot, which are again non-trivial from let's say a junior tax guy that might be operating the system. They may not see what are the potential problems that are getting created, right? So now this is where we are going, right? So we are creating a platform where you, your vendors, your distributors, and your third-party accountants, audit firms can all sit together and look at the data together, right? In this kind of a manner where there's a platform in the middle, and we run that platform and allow that platform to then connect to various systems or third parties at your request, and we ensure that the platform has got all the strengths that a good platform should have these days. And then we add multiple products on top of that. We have obviously taxation products, but we are getting into supply chain financing and so on as well. So those become all products on top of this platform. Right? So this is how we feel a modern day solution ought to be, especially in a country like India, which is digitizing fast and which has got multiple people with different levels of digitization. We believe, think about it like a Facebook kind of a system and so on, where you all log in, log out, and are looking at the same information. That will be very useful, right? So this is where we see the world will be in another 2 to 4 years, right? A lot of automation, a lot of AI-based surveillance for tax compliance, a lot of interlinking of direct and indirect taxes. We believe that will come before we know it, and a lot of interaction across vendors and distributor ecosystems for things other than like where is my stuff or have you got my payment or whatnot, right? It will be a lot more deeper communication that will happen, and then credit and payments will probably start to move much deeper through technology, and that will fundamentally get disrupted, right? So in our opinion, adopting latest technology or most forward-looking technology has become a must-have. It's not a good-to-have anymore. Okay. So now there are different things that we do from what we see happening in the ecosystem around us from which prevents people from going to great technology early, right? It's basically in multiple shapes and forms. It's basically a mindset issue. Most of the businesses that we see, are not most, but at least a significant portion, they will try to do hire more people, outsource everything, right? Just anything that makes the problem go away. Unfortunately, these problems do not go away unless you are sitting, like in your offices, right? And on your system, things are done elegantly, right? Unless that happens, in our opinion, it just pushes the problem for another day, but it comes back usually in a much more, in a worse fashion than what you outsource it, right? Now, there are lots and lots of companies. At this point of time, actually, the number is 3,000 at the bottom of the screen. So we have 3,000 large enterprises and like 50 or 60,000 chartered accountants that use our products. So that whatever you are, purchasing or whatever you are using is effectively used by the best in India, right? And we deal with like almost 10% of India's GDP on our platform already, right? the GMV that is visible through invoices and GST forms and so on and so forth. Those are the things that we and that shows you the scale, which is both secure, safe, and non-porous and reliable as well. We have had a lot of awards and recognitions around that, and this is how it looks, how our company, our war map looks like. Today we are doing a lot of compliance things. In 3 to 6 months, we're gonna start doing a lot of network-oriented things, discounting, payments, and otherwise. And then we will move to the customer side of the journey and provide you tools to deal with your customers in an elegant fashion. This is us. We are happy to connect with you and answer any questions or understand if there's any things within your company where we can help. This is it from our side. Happy to take either any questions or otherwise clarify anything.
Thank you, Rohit. That was a wonderful presentation. In case we receive any additional questions coming to you, which I'm sure will come in, I will certainly email it to you. Would request you to take it up and help our audience with their answers. Thank you so much, and please, audience, feel free to get in touch with the fantastic team of Clear. Get in touch with them, know about the beautiful products, and for Rohit, if you have any additional questions, please feel free to write to us. Thank you so much, Rohit, for joining us. Thank you.
I would like to welcome you all to this exciting session of CFO CIO Shared Vision and Innovations for Fast-Tracking Digital Transformation. Here we have our key panel moderator, Mandeep Mehta, the Executive Vice President Finance at Max Life Insurance Company Limited. His specialties include growth strategies and scaling up, startup and financial turnaround, business partnership, in-depth functional experience, insurance, pensions, new ventures, financial restructuring, mergers and acquisitions. With this, a very warm welcome to you, Mandeep. Moving over to our next panel member, I would like to introduce Jagannath Chakravarti, who is the Chief Financial Officer at Sonata Software. He is a strategist with a focus on business enablement, shareholder value creation. His goal is to be a CFO who adds value to the business by focusing on strategy and result-oriented execution. I welcome you, Jagannath.
Thank you.
Moving over to our next panel member, I would like to introduce Santosh Abhimane. He's a Group Chief Financial and Transformation Officer. He at multinational logistics firm DC Express Limited. He has a successful track record in CFO and financial leadership roles across various industries and geographies. He has a unique experience in incubating new business models and driving financial planning. With this, I welcome you, Santosh. Moving over to our next panel member, I would like to introduce Vincent Boonsen Lim. He is the Chief Financial Officer Asia Pacific at Datalogic. He has 25 years of financial experience. He was a former chairman of ACC Singapore SME Transformation Committee. He is a fellow of Chartered Accountants Singapore, fellow of ACCA, and a PhD candidate from Singapore Management University. I welcome you, Vincent.
Pleasure to be here.
Moving over to our next panel member, I would like to introduce Divya Kumar. She's the Group Digital CFO at IKEA Retail. She's a member of Group Digital Management Team leading finance, business steering, analytics, partnerships, and acquisitions globally. She is leading information security and data privacy across all IKEA retail countries and digital hubs in India. She's a member of Global Governance Committees and board member of India entity. With this, I welcome you, Divya.
Thanks, Mahek.
Moving over to our next panel member, I'd like to introduce Preeti Khurana. She's a Director of Advocacy and Regulation at Clear. She leads the content strategy for taxes at ClearTax, is a chartered accountant from ICAI and has around 17 years of post-qualification experience and expertise on taxes. She has prior work experience with PwC and American Express. I welcome you, Preeti. And with this, I'd like to hand it over to our moderator, Mandeep. Thank you, everyone.
Okay, thank you very much. First of all, I'm a bit excited because today's panel is slightly unique. Today's panel is different. It has CFOs who have either been head of IT or are heading digital transformation agenda in their organization. And they are uniquely positioned because they are the same person who is reflecting from CFO perspective as well and from CIO perspective as well. And they have to see the both side of the coin and balance the conflict between two perspective if it may arise. So I'm personally excited to gain from this particular interaction and experience. Over the years, just like you and my fellow panelists, been experiencing an evolution of CFO-CIO relationship. It has come a long way and get cemented during the lockdown. All CFO are greatly thankful to CIOs for being there and enabling business during that time period and keeping the lights on. And likewise, CIOs also got support in terms of required funding and fast tracking, breaking the bureaucratic walls of the organization and making sure that things are happening. So it has been working in tandem for last 2 years or so at least. However, at a foundation level, there is a question of allocation of resources among various initiatives based on prioritization that need to be done. And this is where CFO, CIO sometime may differ. At the same time, accountability for delivery of end outcome is also an area where I've seen difference emerging. In today's discussion, we'll try to figure out the practitioner perspective, how to approach this, and specifically from people who have been managing both the profile in terms of how do they balance it out. And to start with, I'd like to ask Christian and Vincent, you have been head of IT in your previous organization, and probably you can reflect upon how do you see CFO-CIO relationship? Is this where it should be, or there are miles to go before we call it a perfect relationship? How do you see it in your current scenario?
A fantastic question, Mandeep. I think this is a question that many of us in the finance position, we think very strategically, and then we say that, the company should be transformed, the finance should be transformed. And then we look at the IT department, right? So you look at the ability of the computing power, the speed of computing power that has been transforming over the past 31 years. And we look at them and then we say, oh, they should be coming to us and help us transform finance and all. But I beg to differ a little bit. In my previous company, just last year, actually, as you correctly mentioned, I was the CFO of a company. At the same time, IT came under my care. I don't get this. The key is that we of course, as CFO, we like to have more power, more money, and also more responsibility. But my view is that if you get a finance guy to lead the entire IT infrastructure and transformation and set the direction for the company, we are tending, or at least I maybe not some of you, but I will tend to be a bit more prudent. I will tend to be focusing more on financial. I focus a bit more on cost benefit analysis. I focus more on the company's asset and all. IT is slightly different. The investment in my knowledge on blockchain, for example, will take a bit of time. The investment of a total data analytics transformation will take a bit of time. I may not get the ROI, ROA, ROE within even 2 years. So I enjoy that. Last year, when I was the CFO, come IT, I enjoyed that. But my personal view is that the relationship between CFO and CIO maybe need to be reaccustomed. For some company, not all. Some company, maybe the IT team need to be gaining the era. And for finance, we govern them from different perspective. But I truly believe there are a lot more opportunity from IT perspective than finance. Mandeep.
Oh, well, that's a quite a confession that if CFO is in charge of IT, probably he will be more prudent, little impatient. Well, things to ponder upon. What's your take, Divya?
The relationship has come a really long way, right, over the last few years. I think the one fundamental change that I really see is that previously technology and IT, digital, whatever you can call it, used to be a service provider. right? But right now, I mean, today in most industries, it is the business. It is no longer a service provider. You cannot disconnect the business from the technology that runs the business. And that has made the chief digital officer or chief technology officer, chief information officer, a kind of at the heart of the business and not somebody who serves the business, right? They are the business. And that being the case, the CFO relationship with them has also completely morphed. It's no longer about, oh, I dedicate this much budget to you and you need to do XYZ with that budget and cost, cuts or transformation. It is really about, okay, what are they doing? What is the understanding of the business and how they're leading the business? And how does a CFO really then step in? And I think both sides then need to evolve, right? Both have evolved, but there's still a chasm, there's still a bridge that really needs to be built in there. And the biggest problem in that bridge is that our traditional financial models, exactly like what Vincent said, are more built for the long term, right? We do 5-year ROIs, 3-year ROIs, etc., which have no bearing on the agile environment, right? I mean, the way that agile works, you're testing and learning every day, every month. And it is no longer about, okay, what can I get in the future, but what benefit is it providing today? Do you see the revenue? You make this change. Do you see revenue go up? Do you see cost go down? Do you see something else happen? And the it needs to be immediate benefit also apart from long term. So definitely a big bridge, and I would say needs to evolve, but from both sides equally, I would say.
Yeah, I mean, IT is business nowadays, and I often keep saying that nowadays even a Kriana store or a grocery store call itself a tech business, because now they are looking at how to maintain inventory, how to acquire customer, the SMS, everything is happening on technology. Yes, this is true that IT is business nowadays. And Jagannath, how would you see? I mean, in your view, still miles to go before I sleep kind of a relationship, or it's fairly decent now?
Not that way. For the IT companies, we all understand the technology, how important it is, how the IT CIO's role is important for the current situation. But at least I'm interacting with other fellow CFOs or other finance folks. I don't think it's completely been understood, at least in India. In Western countries, I think they have understood the importance of CIO and what is the important, how they are doing the transformation. As Vincent and Divya were telling, the situation is completely different. Without an IT or CIO, the business cannot run now. It can't go to the next level at all, or it can't even survive. This finance people have to understand this is not crunching of numbers. This is an investment to survive. So the business needs to survive, you need to invest. As you rightly pointed out, even Kirana stores are investing that. That's a kind of change, that is transformation that COVID has brought in now. Huge businesses, they are all coming inside to invest in the IT business. That's where all the entire IT industry is flying in the world, flying high now. The reason is because the demand has picked up so much, and the world has realized that without that nothing can happen. Even government of India has realized that. Everywhere they are automating the entire GST, wonderfully done, like completely IT backbone has been built in for the entire taxation system. So I believe that finance people, instead of putting this as a number on a particular ROI, ROE kind of thing, we have to see how strategically important this in terms of business survival and business growth. So, I remember 5 years back, we were talking about 3-4 years back, when cloud was evolving. We have actually discussed on cost effect of being a data center and a cloud. Oh, cloud is still costly, 2.5 times more costlier than data center kind of thing. No, there is no question. Everything is transforming to cloud. We better adapt to that. So that's a situation finance people have to understand that. Disruptive innovations are here to happen, and that is led by technology, as you rightly pointed out earlier. Technology we have to adopt, and CFOs have to adopt themselves to see how they can work along with CIO to ensure that business is supported.
Yeah, that's right. Santosh, you have been group CFO as well as transformation officer. I'll twist a question a little bit to you.
Sure.
And the twist is that, I mean, all the three CFOs before you have spoken about how the CFOs are the guys who are stopping it, or they need to change. Let me ask you, as a CFO, what challenges you face in terms of CIO not being able to comprehend from where you are coming from? What are your challenges?
I think the first issue is understanding where we come from and trying to curb our natural instincts. The CFO's natural instinct is to first try and deliver growth and or margin together. And the CIO's first instinct is to give the latest and the best possible solution that is available. Right. So this is so if both CFO and CIO stand at these two positions, then it is a bit standing at the extremes. Correct. And that is the crux of I think most conflicts. Right. What do you sacrifice? What do you not? Where do you compromise? Where do you not? And how do you arrive at a set of common points to work together to deliver what is good for the organizations? So these are the crux, right? There is if there is a tendency to go after what is called the SMT syndrome, the shiny new thing syndrome, right? And in IT, every 3 months you have a shiny new thing. Right? So how do you work together to deliver slightly more predictable but necessary changes and transformation that is required? I think this is the crux of this.
Thanks for having me on the panel. And the only disadvantage of speaking last is that there is no novelty to what I'm going to speak. But I will just agree with all the panelists here, especially Divya, in the context of the relationship between a CFO and CIO, and how both of these roles are so critical. And I speak actually from a place where we interact with a lot of CFOs and CIOs because we offer tech solutions. And with that perspective in mind, there's two things that I would like to add. Is that as a CFO, I think the big role that a CFO plays is that a CFO can help the CIO articulate how technology can impact a certain business process. I think that kind of articulation of the impact is very, very important, and that is what the CFO does. And in that sense, their relationship is, has to be very, very collaborative, and there are lapses and there are gaps in that. But especially, given the backdrop of how compliance is evolving in India, where our regulator is going digital, and your entire ITC claim is now digitized. So in that context, I think CFOs have a very important role to play, where they help the CIO define how they can improve the accuracy of the data and basically link tech to like real outcomes. That's the first thing. And the second bit is, like as a CIO, you undertake, like a great amount of sort of governance and responsibility around technology. But what I feel is that a CFO is able to bring in a lot of accountability to that, technology framework, and they can sort of help business leaders envision how technology, how they can be stakeholders in the entire process of change of technology. So, in that sense, I think collaboration, communication, I think these are the two aspects which need to be much more stronger. But yeah, I mean, all of you are CFOs here, and I'm sure you can add quite a bit to that.
Thank you very much. I mean, helping CIO articulate, I think that you said the right thing here as a crux where the partnership actually, the foundation of the partnership. Let me also bring in this fact that CFO, would claim to be the most rational person on the earth, right? Everything is black and white. There's a cost benefit analysis, business trade-off, and you will invest where you get the maximum impact or bang for the money, right? This is very commonsensical. At the same time, as it was previously said in this forum, that these kinds of innovation or these investments are investment which are generally not invested or tried before. So you don't have historical data to give you the confidence that it will be successful, right? Which means that the business and CFO as a business leader has to take a bet on the confidence, conviction of the CIO. Now, how can CIO make CFO take a bet on his idea? What CIO can do? to achieve this particular aspect? Divya, you may start on this
I
particular point.
think the one thing that to me it's both sides. One is how the CIO really convinces the CFO to take a bet, and the other side of the same coin is also what the CFO needs to do to receive it, right? A little bit from a mentality point of view. Because at the end of the day, so the one thing I really think is very important is mindset on both sides, not on one side, really on both sides. The mindset of openness, the mindset of experimentation and trying new ideas without being rigid as to only what has worked in the past will work in the future, I think needs to be there on the CFO side as well as on the CIO side. I think the most important thing is also for the CFO to share with the CIO what are those objectives, right? Because at the end of the day, there is a mental frame the CFO has. Exactly like what Santosh said, they're worried about their growth and margin. Then there is a risk factor, right? You're worried about the risk, you're worried about the investment. If you show the CIO exactly how you're thinking through it, then it becomes easier for the CIO to convince the CFO, right? Because going back to what Preeti said, it is also a little bit about, how does the CIO, how do you then help the CIO even convince you, right? And then the CIO can say that, okay, here is where I'm driving growth. Here is where, this is going to reduce the cost because I'm going to implement this in a better manner. I'm going to automate this. Here is where I'm going to do a test and try. I'm going to do agile, but you know what? Actually, that helps. So we think that longer ROIs are better. But actually speaking, the good thing about agile is that you fail immediately if you need to fail. Right. So it's not a long life cycle, which actually is good for the CFO because the risk you're taking is actually that much lower if it is a more test and try kind of a thing. But it's up to the CIO to actually explain the model. How are they doing the development? How are they making the products? What is the thinking behind the products? Because then the CFO is able to understand, hey, actually my risk is lower if I do it this way. Actually, this can have a better impact on my margin if I do it this way. Right. And also then they're able to convince the organization accordingly. And most importantly, both together need to set up a tracking mechanism. So this is not a CFO's job or a CIO's job. It's actually a job together along with the rest of the business where you say that, okay, I'm doing this because the most important and I find challenging thing is that what technology does, the outcome does not reflect in the technology unit. The outcome reflects in other parts of the organization. Right. And if the tracking is not there end to end in the organization of the impact of that technology, you will never be able to prove that something is failing, something is succeeding, something is going as per plan, because this is not about development. It's not about checking off and say I've completed this in 1 month, right? This is about I have completed it and it has been implemented in X place and that has shown a benefit of Y, right? And that's how it lands back in my P&L and my balance sheet. And I think that's the collaboration that a CIO needs to do with the CFO to actually have that end-to-end view in there.
Perfect. I think show your openness or show what you are thinking, how you are processing this particular input so that other person has chance to build that confidence in you. Very valid input. But here is my personal dilemma, I would say. Agile as a track will not have set timelines, will not have set resources, but will have set outcome as a target. So how, as a CFO, you would go about and say that, okay, you keep on developing it without any budget, right? So how do you deal with this?
So I think it's really, and you hit the nail on the head, right? It's about outcomes. And one sentence I mentioned in my last thing is about the objectives. So if you're clear on the objectives and you say, you know what, my objective of this product is actually to drive up revenue by X percentage in the next 6 months, 1 year, whatever it is, 2 years, right? Then you are no longer, and that the maximum you have to play with is this much, right? You can go with this, but then we'll keep, this is not a fixed amount. It is something that you go up and down. And the one thing I would really say, we need to treat it as a VC portfolio. You will have, in Agile, the most important thing is that you will never have one product that is a success, right? You will always have multiple products that are a success and multiple products that are a failure, right? Now, if we say this is the budget for this product, which leads to revenue of X, most probably you will not make it, right? But if you treat it as a portfolio and you say, here are my set of products, and the outcome of those set of products is that my revenue should go up by X, right? And the budget for that set of products is Y. Then it is up to the CIO to play within that sphere, and then you can pull back at any time, right? Because they fail fast, they pull back, they do it, and then you work on the outcome. You don't no longer work on, oh, I allocated this much for this, I allocated this much for that, why didn't you do this, right? And then the accountability is squarely on the shoulders of the CIO.
Great. I think you're talking about the portfolio management. And Santosh, in your job as well, since you are on a group level as well as doing the transformation, you would have come across this particular situation. In any portfolio management, there are always conflicting, opportunities, fighting for the same amount of money or the wallet, share of wallet. And that can also become a point of debate in terms of opportunity A is better versus opportunity B is better. So how do you deal with this?
I think the key to this is how we personalize the process of actually selecting and tracking execution. And the key to this is having a very strict IT governance mechanism. So typically, we have a 5-year, 1-year plan, and we have set up outcomes with our things too. So, when, irrespective of what you planned, to have a robust mechanism of governance, then you try and take up initiatives which require time and resources and sign up on them, right, before you go to the next one. It is very critical because at that point of time, so for example, what we did is there is always either a sponsor or there is a governance panel. And the governance panel can sometimes be cross-functional. Right? It can be the CEO, it can be your sales lead, correct? It can be your finance lead and IT lead together. Try and say that all of them are in the end accountable. I think a strong governance mechanism, which is operationalized and consistently followed, is the key. Otherwise, and nobody will be happy with this. But at least you all agree that whichever needs to go ahead with certain projects.
Okay. Well, I mean, governance, Adam, basically you are also in a sense saying that there could be milestone-based funding, which Divya also mentioned, that you can keep funding it as long as it is proving to be a something that can add value. Thanks for that. Jagannathan, from your perspective, let's say every CFO will say that take the money, but you are accountable, right? Now, CIO will say that, hey guys, I can only develop a piece of software, but the delivery lies, the outcome delivery lies somewhere else, right? And that's where my role ends by delivering this particular product. And now there are other people. The outcome is dependent upon many other people in the organization or the various functions. How can CFO bring a parity or a balance here? In drawing that accountability and commitment from the stakeholders involved, not just IT.
Yeah, the challenge here is the definition of the outcome. We meant that there is a outcome challenges is there. What I have seen over a period of time from the IT software company perspective, working with a client, also is what is the outcome? That itself becomes a major challenge. It has to be defined very clearly. The CFOs define it as a business objective and CIO define it as a technology objective. That is where the challenge happens regularly. Particularly if the CIO is a more of a technologist kind of thing, he says, I have done this, I have done, achieved this coding is done, that specific thing is done, but nothing of the business happens. There are enough of case studies I have seen where the project is successful, but the business did not get any benefit out of that. It continue to happen. So we need to have an agreement with the CIO on what is going to be the business objective and what are the things required to achieve the business objective. That is very, very important for us to define that in the beginning itself, so that they are also very clear and how it has to be measured. The next one is what is that measured and what is the time frame we have to take it for measurement. Many a times from the CFO perspective, I've seen is if you give that 6 months, this is the business benefit you will flow in, we will exactly go and measure it at 6 months and say it has not been achieved. So that will not work out, right? Anything requires its own time. So we need to have a kind of a cushion time for that on how much more time we have to wait once the implementation is completed and what is the business objective we're going to achieve. The important measurement on all this thing, although many CIOs have disagreed on this, I feel the most successful thing that has happened is please measure it in terms of money, the outcome. Please don't measure it on anything else, because if it is going to be anything else, it becomes very, very subjective. Then they talk technology, you talk business, and this goes into a qualitative. Then people know the CEO comes into picture, and then they talk qualitative. Oh, my customer experience is not good. So it becomes very complex. So you better measure it on a monetary amount and then agree with them that this is what will happen in the maximum time. Give a range of time. From this time to this time, you will be able to achieve this. If it is 80% of that, 75% of this is achieved, it's well and good. More than 50%, anything on the business objective is achieved is well and good. So that is the kind of measurement we have to stay. And achievement also, it can be a percentage varying from 50% to 75%, 80%, whatever is the range for the CIO, so that he has the space. Then on the budgetary front, what I have understood is you give a specific defined number to them. Instead, we can say that within the budget, the overall budget can, of course, it can't be expanding always because we are answerable to the board and to the CEO. Also, what we can do is within that subsect of the budget, if you spend more on this one area, you please reduce it in the other area. Give that flexibility to the CIO. Work with the CIO on every measurement, milestone measurement. How will you evaluate each of the milestone? Please don't, like, it should not be like a showstopper after that. This is exceeding my budget. No, I will stop it, kind of thing. That's a problem that created. As Divya was rightly mentioning it, what is the objective? That is important. How is the business going to be benefited from it? If you are very clear with business objective, the measurement is coming in, CFO has to be flexible till the end it is completed. You can have time frame, but time frame also need to be a little flexible. And the budget, within that overall budget, the flexibility has to be there. Please measure it in terms of number, absolute, in terms of monetary benefit, and also business outcome, what will happen. If this is clearly mentioned in the beginning, then it becomes better for both of us. So you also know what to be done, and they also know what is expected out of them.
I love this, because now you have brought in the point, which is a classic debate between CFO and CIO. A, I don't know whether it can be developed or not. B, I am in an agile mode, which means I don't know which sprint will work, how many sprint it will take, when I'll achieve milestone. That's the agile methodology. So I can't give you exact quantification of milestone as well as money. C, you are saying, again, talking about measuring everything in money. See, there are few things which cannot be measured in money. Now, on these 3 points, this is CIO perspective. So now there are 3 CFOs in this call who have headed, the been IT head or doing transformation. Let me call upon them to answer this. That CFO says, measurable, milestone, I give you 10% variability, that's okay, but show me the money. What's your perspective? Any one of Vincent, Santosh, Divya?
Yeah, I can. So I look at the situation I was in when I was both the CIO and I was the CFO who hired the CIO. So when I hired the CIO, I think it is very important to ensure that the mindset is a bit aligned. So obviously we can't get someone who is like thinking like the CFO. So the 3 questions that you just mentioned, right, a lot of them are to do with the mindset differences or mindset changes. The ability to see beyond numbers is what I've been learning. To be fair, right? So Jagan, I fully agree with you, and I think that way too. The point is that I also have struggled when I moved to the CIO role, and when I have not hired that girl, and then I became the CIO. When I moved into CIO role, I have the struggle of seeing the other side of the challenges, and it's true that some of the items are not measurable by money. It's true that the outcome, for example, some of the examples that you mentioned are all very relevant. And those mindset change, I think, is the first step for us to bridge and to make sure that at least some alignment or some compromise. Compromise is not a good word, but some compromise is still needed. So I give two examples very quickly. So if we look at the ability for us to transform means not evolution, right? So it's a revolution. It's not evolution. So if it's a revolution, then we are looking at something that we may not, or I may not be able to assess in terms of numbers. I may not be able to see far enough. I may not be able to predict the future. If I can predict the future, I don't need to work, right? So the point is that how much of the unpredictability I'm able to take. So for a finance person, I look around in many cases. Some of the item I really need to step out of the comfort zone is a bad word, but step out of the finance scope and really look at the other side, the IT. Finance people, right? For example, the data analytics finance people, right? Some of my team, 128 of them, some of my team like to own data or own power. So if we lose the power of data, we feel like we are losing some power. So data changes, data analytics means giving power to everyone, for example. My finance team mindset is drastically different from the IT team. So we see a vast difference. The number two item is for finance people like me. I'm an accountant. So I look at accounts and it's all historical data. It's got absolutely nothing to do with the future. So of course we can argue differently. But the IT team, CIO for example, are looking at market data, looking at the forecast, looking at the future. How do you change the mindset this way? In some cases, really, it's a vast difference. So if I were to summarize, my personal suggestion, which may be wrong, but is to get the team to the other side. So I was a CIO and I hold two positions, but some of my team has never in the whole life be a IT team member. Get them to be on the other side. Get some of the IT people to be on our side. Once they have seen the other portion, what is good for the company will suddenly emerge. And once it is emerged, I think some compromise or some merging of mindset will happen from there. Mandeep.
Thank you.
If I can pitch in a bit, there are two components, right? There's run the business and change the business. And typically, agile is more the change the business sort of environment. And so there are various ways to handle issues around managing agile projects, which may or may not give time. So typically what you do is you agree on a certain number of sprints that are acceptable, where you make some progress. After that, there are 2 points of review. Right? You figure out, is your requirement an issue itself, or is the execution an issue? Right? At that point of time, either you get in some external help, or you try to do things differently or cut down the scope. But it cannot be an infinite sprint. Right? So that is a more practical way of doing it, because you are trying to do something different, that is change the business, that gives the business an edge. So you get more latitude, and that latitude can be agreed and it always gets stretched. But the bigger issue is, do you re-examine it, and at what point of time do you re-examine as to, is the requirement the issue or the execution is the issue, so that you get to the goal that you actually need to get to.
And if I can also add something, I really loved what Vincent said about, because the understanding, I think a lot of it is about understanding, right? If we don't understand each other, we cannot help each other. It's as simple as that, right? And I've really found embedding finance people in the product development process, in the product roadmap process, right, is a very big plus because of 2 reasons. It's of course good from a CFO perspective, because we understand what's going on, we can govern a little bit what's going on, we can control a little bit what's going on. But on the other side, it is also, we can help the CIO, the CTO make those business cases also and see as to what really, so because we are able to link the different parts of the business a little bit together, because we're sitting kind of in a corporate function, right, where you're able to see the entirety. And if you are in there, you can also help think a little bit about, okay, how does this really, how do we help them make the case? And sometimes we say, okay, there is no case, right? But in some cases there is. And to the point of, monetary measurement, I agree with you, Mandeep, that some things are monetary, some things are not. And somebody mentioned it at the beginning of this session. technology is the cost of staying in business today, right? And if we look at everything as an investment that needs an ROI, unfortunately, we will not survive. And that is a harsh realization for a CFO, right? Saying that, I don't feel good about this investment. I really don't. But you know what? If I don't do this, I'm not going to have any revenue 10 years down the line, right? So what do I do? So it's a dilemma that we have to face. But then it is also about then saying, what is the cost of staying in business? What do you have no choice about? Right? What is it that is maybe slightly more non-monetary? So you need speed. I mean, today somebody comes to your website and it's not enough to have a good website. If you don't have a very speedy website, the drop-offs that happen with just 2 seconds of 1 second of delay on your internet site can be huge, but that 1 second is actually dependent on the architecture. It's not just dependent on what happens on that website, right? But a CFO needs to understand that, right? They can't say no to something that has an implication on something completely different, right? And only when they're embedded in that can they really understand, okay, this is why we're doing it, and then help them say, okay, here is cost of doing in business. You know what? It's a cost. It's not an investment, right? We have to take it in the P&L as a cost and forget about it. This is going to stay. Improvements. The other thing we don't understand is that technology we've always looked at as an investment. Today, constant development is a cost. It is not an investment. If you don't constantly develop, you are going to go out of business. So how do we shift our mindset to say what is true investment and what is actually our cost? And, we need to shift our mindset and say this will always be a cost in our P&L. So then how do we look at it in the future, right? Not as something that is different, but it's like marketing cost. It's like other costs, right? So we need to shift our mindset also a little bit in this entire understanding, I would say, is the core of everything.
Yeah, brilliantly said. I think Preeti in the beginning said that helping CIO articulate the business case. And here we are going beyond that, saying that, okay, we will help as well as partner with you to develop the product. Now, the practical challenge could be that that product may not involve any financial expertise, but you still remain a critical stakeholder. To the other point, I think the underlying message is that what generally CFOs see, what is the cost of doing particular thing? The mindset change is what is the cost of not doing something?
Correct.
And that's where it's a very gray zone in the sense that how do you quantify? And CFOs are not comfortable with anything which cannot be quantified. Take an example of cloud. Jagannathan mentioned in the beginning. Now, cloud business case is negative business case. In the initial 5 years, the total cost of ownership of cloud could be negative. But still people do it not because everyone is doing, because there are certain efficiencies that can be generated which cannot be quantified now and may be available in future. But we still do it. That's where the conviction comes in. And I've gone through a tough learning journey myself in terms of what this cloud is, what benefit will come, how can I change over the licensing agreement, etc. But still some conviction is required, and that's where I find the CIOs to be really, really helpful in making the organization future ready. Preeti, tell me this, in your area, like, GST, for example. Sure. There was a lot of investment that was required in changing the system to, make the organization GST ready. We all incurred that investment. Then again, the regulation changed. Then again, we did some investment. Then again, it changed. Then again, we did this kind of, investment. This is just an example. So how should CFO, CIO combine, should approach this problem of, the business changing faster than they can develop?
Sure. Yeah, I think that's a brilliant question. So I think I can answer that with the backdrop of the compliance risk that all businesses face today by virtue of a new law, which is GST. Now, I think whenever we approach this kind of a situation that, you're reinvesting in certain technology and then, what are the returns, what are the outcomes? I feel that both the CFO and CIO, and I speak from experience with my interactions with them, is that these kind of changes succeed when the CFO and the CIO have a single vision. They have a single shared vision with respect to, what is the impact on the business, firstly, and most importantly, how is this impacting their compliance risk? I think these are the two aspects that they need to have complete understanding and a shared vision on. The other thing that I notice, from this group, and generally, I mean, it's what I've noticed is that CFOs really consider themselves as guardians of the financial performance of a company, and they are heavily focused on outcomes, numbers, returns, and they may fail to see. I mean, and there's nothing wrong with that, but they may fail to see what is the impact that digitization will make and what is the value it will generate. So, when you talk about changes to your system because you need to comply, in that sense, you may not substantially see any kind of, tangible returns that you may be able to quote to someone or you may be able to explain to someone. And it may not yield immediate results, but there are benefits in terms of implementing a indirect tax system, which is increasing the reliability of your own data. You're on the right side of compliance. So I think that kind of vision is also very, very essential whenever you're trying to tackle a new law or frequent changes to the law.
Hello, Mandeep. I'm really extremely sorry to interrupt, but right now we're running out of time, and I would really request you all to take the next minute to conclude this session, and we can take the questions of the audience to personal chats and emails. Would that work?
That will be okay. So you will help
Thank
us
you.
look at the questions. And wonderful session. First of all, I mean, really practical insights of practitioners. I really liked a couple of ideas, first of all, this is to remain in business. This is the IT is business, and CFO should recognize that, and they are recognizing it. Then the second one is that how we should help CIOs articulate the business case with an open approach and show our vulnerabilities as well, in the sense that what are our fears, what are our challenges, why we are not able to give a go ahead, or what kind of accountability we are expecting, and how we can do that in terms of measurable governance oriented tracking of the projects. It may be or may not be measured in monetary terms, but of course any organization investing in IT tools will like to see whether it is still making sense, whether the investment is still relevant or not. So that's the way to go about it. Another food for thought for CFO is that how much uncertainty or unpredictability you are ready to live with. If you are not too much comfortable with uncertainty, then the only word is welcome to this world. Nothing is stable, everything is changing. All business models, all assumption work in an environment when there's a stable environment, and last 2 years has been anything but stable. So uncertainty, ability to manage uncertainty is definitely something required. Another Jude often advice was make finance team crossover. Be part of those team which are IT team in whatever form, either in form of making finance team to develop a business case for IT, or let's say being participating in product development cycle. I think this is a wonderful suggestion, and could be helpful to many people who are attending this particular workshop. I personally will benefit from it. In the end, I'll thank all the panelists as well as the organizers for this wonderful opportunity to understand perspective from people who have been living the life on the both sides. Thank you.
Thank you.
Thank you very much, Mandeep, for an excellent
session.
Thank you. Fantastic.
Thank you so much,
Thank you
everyone,
all
for being
panelists. Thank you
present
all.
here. Thank you so much. With this, I request all the audience to move on to our next set of great panel discussions, and my speakers as well to go and watch the next set of panel discussions. Thank you, everyone.
Thank you.
Thank you.
Okay, so hello everyone. My name is Shubham, and I'm a conference producer working with Transformers Forums and your host for today's event. I welcome you all once again on behalf of Transformers Forums. Now we have an exciting session on CFO CHRO shared vision for the future of work and talent management. I'm privileged to welcome Mr. Anil Gambhir, who is the moderator for our today's panel. He's the Chief Financial Officer of Blue Dart Express Limited. He has a transformation professional entrepreneurial approach with an over 25 years of experience, and an expertise in supply chain management, and a certified Six Sigma professional with an experience in C-level management. Next, we have Mr. Vishwajit Singh, our first member of the panel, who is a head of finance at Abbott Rapid Diagnosis India and South Asia. He's a seasoned professional and a respected finance professional with an extensive experience of 17 years, proven track record of steering sizable businesses towards sustainable, profitable growth. Our next member for panel is Mr. Prince Khoker, who is a Senior Director in Sales at Happy, a seasoned enterprise sales professional, experienced in diverse industries like SaaS and banking. He intends to revolutionize the way group companies manage and business spends. Our next member is Mr. Ajay Shenoy, who is the Director of Sales at XOXO Day. Currently the Director of Sales for Compass, a gamification software to digitize incentives. Armed with more than 15 years of corporate space experience and an entrepreneurial skills that spans for 7 years and counting. Our next member is Mr. Mayank Jaju, who is a CFO at PepsiCo Co., a resulted-oriented finance professional with over 19 years of post-qualification experience. His experience ranges from strategy, finance planning and analysis, business and financial performance. The next member for the panel is Mr. Pradeep Kumar, Head Service Delivery, MYND. Mr. Pradeep brings in over 18 years of experience in all domains of finance and accounts, business consulting, functional process excellence, end-to-end finance and account transformation. Now I would like to ask Mr. Anil to take over the session.
Hope all of you are doing well and the current situation we are in. We have taken precautions and vaccinations the way it is due, and so that we are able to save ourselves by improving our immunity, and then we don't face situation like we faced in wave 2 of pandemic. So because everybody is talking about wave 3 coming, but and we are seeing some impact in European countries. Like yesterday, Germany closed down; they have a lockdown. And I hope we keep doing our duty of getting vaccination so that we don't invite that kind of trouble what we saw in wave 2. So let me come back to the topic. I think first I would like to thank Transformance to give us opportunity to talk here and share our views. So if I was to dwell on role of CFOs, I think we all know CFOs have been playing a strategic partner role for quite some time, and this has been further validated during the time of pandemic, where in wave 1 we saw how CFOs have been front runner, not only ensuring the business sustainability but also making sure that enough liquidity is available to run businesses, because that was the topic which everybody was grappling with. Be it digital prioritization to ensure that businesses are running, be it change in the process planning, etc. All that has been, CFOs have been actively participating to make sure the business, sustains during that period, survives and sustains. So then thereafter we saw wave 2, where focus was not as much on sustainability and on liquidity. It was more towards people. We saw how people-centric policies have been adopted. Many organizations came forward to bring in policies which are people-centric, and also ensure that extending extra help to employees during that period, be it medical assistance or be it otherwise emotional has been facilitated, and CFOs have worked shoulder to shoulder with CHROs to make sure that the second pillar, like I call, if digital strategy or digital prioritization was wave 1 focus, then wave 2 focus probably brought in is about the second pillar, which is human capital, which actually helps organization derive value by implementing digital solutions. So as we see that when we talk about business strategy, so we need to not only take into account the digital journey which has got prioritized, but also need to make sure we have right talent and right resources available to derive the desired benefit. Having said that, I think CFOs have access to a lot of data and a lot of cross-functional perspective, because he is able to see what kind of contracts are being entered into, what kind of talent is being hired, and also have they have been responsible for expanding value for the organization. I think, and that's where many times it gets referred as a value manager or a strategy partner. They therefore have critical role to make sure that for future the organization is ready not only from the requirement of digital solutions and also from the talent point of view. And that is where I would say this particular panel is focused on. So we will deal with how CFOs can help companies build capabilities to prepare for future. And that is as what kind of skill and mindsets are required for carrying it the strategy, organizational strategy to the future. And that's where I have a esteemed panel, learned panel with the knowledge of diverse industries. And I'm sure Shubham has already introduced to them. So we will move over to our learned panelists on the questions so that we get clarity on the topics. So can I start with Vishujit?
Sure, Anil, certainly.
Yeah, thanks. So, Vishujit, my question would be: how can CFOs identify opportunities to invest in value-creating capabilities, maybe having a specific, relevance to your organization? Would you like
Sure,
to
Anil.
throw your thoughts on that? Yeah.
Yeah, absolutely. Thanks for the question, and a very good afternoon to you, to my fellow panelists, as well as the esteemed audience. I think that's a great question. And in order to answer that question, we first have to look at what are the kind of opportunities that will create maximum value in the future. And if we were to look at those opportunities, then those opportunities would be in the field of automation and digitalization. And therefore, CFOs and CHROs have their work cut out in building organizations that have the right mix of technological literacy on the one hand and business sensibility on the other hand. When we talk of technological literacy is all about understanding the different technologies that are out there. How do those technologies interact with the corporate ecosystem, and which of those technologies can actually be adapted and adopted in order to drive better business outcomes? I was reading an article by the Institute of Chartered Accountants of England and Wales, ICAEW, and they used a very interesting term called purple people. And they said that the finance teams of the future will have a lot of purple people. Now, who are these purple people? These purple people are essentially people who combine red tech speak with blue business speak, or in simple terms, these are people who understand technology and business. And finance will evolve in a way that they will have a lot of these purple people. Now, we keep talking about buzzwords like AI, machine learning, robotic process automation, also how companies are looking to transition from diagnostic or descriptive analytics to predictive and prescriptive analytics. Now, all of this will require organizations to have capabilities around programming tools such as Python, R. They will need, especially finance folks, to be proficient in some of the new age data visualization tools like Tableau and Power BI. Not only use these data visualization tools in developing dashboards, but also understanding the principles behind visual design and how data is visually encoded. Also, mathematics and statistics. Organizations will need an understanding of mathematics and statistics if they have to graduate onto predictive and prescriptive analytics. Therefore, technological literacy will become very important. And as far as finance is concerned, a basic level of understanding of these technologies will be important if they have to become the bridge or the intermediary between the data scientists or the data analytical teams on the one hand and the business decision makers on the other hand. When we talk of the second piece, which is business sensibility, of course, we need people who have a business mindset, who understand strategy. That is a given. But I think, to my mind, there are three capabilities or three competencies which will be very important for the future. Number one, critical thinking skills. Making sense out of the plethora of information and data that is around us, being able to think rationally, logically, solve problems. I think that will become important, especially when we have so much of data and information around us. Number two, emotional intelligence. Organizations are set to change the way they work. A lot of present day jobs will become redundant. A lot of new jobs will emerge. And therefore, people will go through a lot of change. And change naturally will involve people going through a lot of emotions. So people who have the ability to not only understand their own emotions, but also the emotions of the people around them, I think they will do well. Hence, emotional intelligence will be another critical skill. And I think thirdly, mastering the art of storytelling. Again, there is so much data out there, but being able to derive insights from that data and then being able to communicate your insights to the business decision makers in the simplest manner possible. I think that will be a critical skill. So to my mind, Anil, if I had to summarize, I think technological literacy combined with business sensibilities, both those put together would provide us with opportunities to develop value creating capabilities in organizations.
Very well said. I think what you mentioned about that we as a finance people continue to churn out data and maybe we are good at it. But many times what lacks in people is that how do you convey your story so that it gets accepted across the organization. So storytelling plays a very important role because that's where the entire crux of the matter has to be communicated and to be sold to the relevant stakeholders. Absolutely right. So moving on to Ajay, having perspective to your organization of how do you see that value creation activities could be reviewed or provided to the organization from your.
So Anil, thank you so much. In fact, I have a range of emotions on two extremes at the moment. Number one, I'm elated at the fact that I actually have a head of finance talking my language. I mean, you're talking about technology, talking about being a strategic partner. I mean, this is the guy who usually hides behind the door saying, I'm not signing a PO for the sales guy. But here's Vishwajit coming out there and saying, forget about going back 6 years where CFOs or the heads of finance were always termed as financial controllers, and the organizations were trying to draw them out to make them more utilized and make them strategic partners. And that's when these terms like business partner came out. Vishwajit echoing those thoughts makes my life simple. The scary part is that now someone like Vishwajit is saying CFOs need to get good at storytelling. Dude, what are the sales guys going to do after that? I mean, if you tell stories, sales guys are lost. I mean, that's it. Great cost cutting. But on a serious note, I think Vishwajit has hit upon some very important points. And I don't think this change has been pushed forth only because of this pandemic that we've gone through. I think it has brought to light the way that the CFO organization in its entirety has gone from just a financial controller on one side to adding value as a value manager and truly becoming a strategic partner. I mean, think about it. In the organization, the one person who has the glue across every insight into what that organization is doing without any bias and having been the conscience keeper for so long is the CFO. The CFO was always the guy who was in the background. If it was regulatory required, he would be there talking to the regulators. If it was a town hall, he would come and present the numbers and go away. Very understated, very calm. The only reason anyone would meet him was for business case approval. They then moved on to becoming business partners, wherein they had their CFO teams, which were actually working with the business teams to enhance their business. I think in today's day and age, the situation we are in, the CFO organization has moved from like Maslow's hierarchy. They've moved from a balance sheet value to a business value, and today they're actually at that high level of societal value. The business value, the balance sheet value is, hey, operations, your infrastructure, the nitty gritty. I think the key layer is the center, where they cut across every aspect of the business. They are able to identify how the right values being inculcated within the teams today, the right people being chosen at the right time for the right position, is going to drive key indicators with regard to final performance. The balance sheet, the profit and loss account is an outcome that they are anyway going to derive. They have moved up the value chain. They are now talking to the CHROs, telling them that your choices today have actually brought in this level of productivity, which was otherwise unheard of. Yes, we always think of the sales organizations as bean counters. But end of the day, today, they are truly strategic partners and they're finding innovative pricing models, which was usually the domain of marketing. but they are bringing in pricing models which drives marketing and sales to do more in the market. That is my long and short.
So Ajay, I'm sure Vishwajit's word sounded is music to your ears. But the fact is that earlier CFOs have been undertaking technological project to improve automation and improve efficiency, thereby adding value to the organization. While that was the case, this has got a tremendous push from pandemic, and that's why in finance community people say that probably the salesman of the year was the pandemic and not the real technology guys. The pandemic.
There is no winning for sales. Like I said, with the finance guys, there's no winning for sales. You will look at a pandemic as the salesman of the year.
That's where it is. So let's that's interesting thoughts what you mentioned. So let's move on to Prince with a new question. Let's have different views. So how CFO can work with HR to align human capital with organization strategy? So maybe let's hear views from Prince on that.
Thanks, Anil, for the question. Good afternoon, everyone. All esteemed panelists and the attendees of this session. First of all, I think brilliant inputs by Vishnu and Ajay, that how CFO roles have been changing, right? And to make it, to further step when they are involved with CHROs and what else they do, it makes it sense. We are seeing currently in the market and we are expected to grow. Generally, Anil, we call CFO plus CHRO as a power player. Why we call power player? Because, it's all leads to the human capital, which leads to the bottom line. And hence is the responsibility of CFOs and CHROs to jointly leverage human capital in much. Sorry, you're saying something?
You're not audible. Can you be a little closer? Yeah. You're not.
Sure. Am I audible now, Anil?
Perfect.
Yeah. So I was saying, human capital leads to the bottom line, and hence the area of interest of CFOs as well. So it's the joint responsibility between CFOs and CHROs to leverage human capital in much more efficient way. CFOs should ensure that proper adequate resources should be aligned to the workforce to deliver the organization's strategy and the goals. CHROs should be in position to nurture the workforce in order to maximize the potential out of it, right? So currently collaboration is all about maximizing the value generation for the company, number one. If you see the trend, high performance companies have one thing in common. What is that? It's about the metrics, HR metrics, the cost, the productivity, the retention, the attrition. They are focusing on more these days. And having said that, the review of these performances or these metrics are very much frequent in nature so that they can know the current status for it. Take example of CFO in finance, right? Finance can add value in creating the human capital metrics over there and to understand how human capital metrics will drive to the outcomes or the business growth. To be valuable at that scale, I think human capital metrics should be linked to the business outcomes and performances, and accordingly reinforcement of compensation, training, employee productivity measures should be taken accordingly. So, if I wish to summarize this part, I would say that if you count talent as a competitive advantage over others, right? If you invest in right technology to make a beautiful user journey or employee experience, if you invest in the flexible plans for the people, if you invest in the flexible work days, which was not very much appreciated approach for CFOs previously, I think you can win the game with CHROs.
Prince, you actually summarized that human talent metrics has to be aligned to the organizational strategy, and that's where we have another people company which is mine. And maybe I would ask Pradeep to share his views on more especially when there's a talk about gig workers, people shortage of talent. So from that perspective, let's hear his views.
Thanks, Anil. And Prince, thank you very much for the great insights. Well, in my opinion, Anil, I've seen CFOs and CHROs collaboration has become a growth driving trend over past few years. And being a transformation consultant, I've observed that their relationships have gone more collaborative over past few years. Reason for that is fairly obvious. Whether to drive the strategy like you mentioned, the gig workers should be hired, or the trends are changing, especially during the pandemic. And you see, having known that the human capital is both the most valuable asset any of the organization will have, and at the same time, it is likely to be the largely operating expense as well. It becomes the imperative for both CFOs and CHROs, and hence they had to work, like a strategic partner to each other to leverage this human capital, and whatever investments are needed, whether to change the strategy into getting the gig workers, or the long term vision of the human capital increase, or building the future capabilities of the organization for the organization growth. They had to work like strategic partners, because you see, capability building for any of the organization and the financial performance, they're both inextricably linked factors. And having the right people with right skills at the right places will not only promote the operational efficiency, but can also boost the revenues and profits, customer satisfaction, and many other aspects we observe. It is the human capital largely, if you see, which turns the strategy into the real execution of actions. Now, to build this capability of human capitals, one needs, of course, both the financial and operational insights, and also the cross-functional understanding, if you see. So whether the decision had to be where to make the investment in terms of human capital, which kind of workers to be hired, what is the tenure, and rest of the investments. While the CHROs can induce the human capital, and as Prince rightly mentioned, to nurture it, the CFO at the same time can enable with all these business insights, so that the human capital is rightly and efficiently allocated, the company strategy, and the organization is realizing the maximum potential value. I mean, that's my view about it.
I think you rightly mentioned about gig working environment, and more so during pandemic we saw many things changing. Like hitherto mindset was work from home probably may not work, but we saw that work from home is a reality now. Similarly, there are two school of thought. Somewhere people say that there's a shortage of talent, but if one sees the other side, that now talent has no boundaries. You can work with the talent to across the borders, because earlier you needed physical working, and now you have access to the people who are outside country and can be accessed on a click of button through computers, right? So both the thoughts are there, and having that background, let's move on to the next question, which I would suggest Mayank could throw light on. How do CFO build a compelling vision for future in line with C-suite leaders?
Thanks, Anil. And good afternoon, everyone. I think a very, very relevant question in the current scenario. And so if you see, pandemic has actually changed the business model or business expectations, which most of the organization are grappling through. So it has not only accelerated the need for machine learning or any automation, but pandemic has also changed the consumer behavior or the demand or need for the things, right? So what it means is for the leaders or the for C-suite leaders is that they need to continuously navigate in the changing business environment, and there is no straight answer. I think most of the organization like us, including people on the panel or otherwise, are struggling to find a solve, and it is different for different. A couple of things came to my mind, and we are trying to work upon is, I think the need for boosting the need for boosting the finance knowledge in the organization has increased a lot. What I mean is that currently in a lot of organization, different leaders understand the finance data in a different way. There is no standard set of people within the organization understand data in a one way. So the key for if we have a one way of seeing the data, it helps, or it help in inculcating or cascading the entire strategy part of the organization. So, and boosting the finance data is a finance way, or finance acumen is becoming a key. The second piece which Pradeep talked about, and Vishwajit also, Ajay also touched upon, which is on the capability building. I think till now, a finance role or a CFA role was from a strategic perspective, looking into the cost and looking into what is the investment in terms of the dollars, right? But now the role has evolved, or the ask has increased from an organization perspective, which is not only look the dollar amount, but to see where the investment needs to be done in terms of the capability, right? Now CFOs are in a best position, which has a finance data as well as an operation data. They know what the capability is required to achieve the strategy, right, which the organization and which is continuously evolving. So they need to, or they must have to work with the other leaders in providing or giving them the short term and long term the impact or the investment which is required in the capability. Because one of the mistakes normally organization does, or the leaders does, is that they expect that the investment in capability results immediately. That's not the reality now. You need to think of 5 years from a strategic perspective and think where you want to invest your dollars in terms of making people or the talent pool available in order to navigate the challenges which are going to come, right? So that's the important step, or the ask from an organization perspective from CFOs. The third, again, and Pradeep touched upon, is between a CFO and a CHRO. Again, CFO from a strategic perspective are aware that what talent are required, right? Which probably can work with the CHRO and identifying that what needs to be done for the current talent pool, how we should make them fit or make them agile to be ready for the future. So that's what some thoughts from my side, Anil.
Thanks, Mayank. I think very validly said that CFO role has been evolving over a period of time, from bookkeeper to finance guy to regulatory guy to various other compliances, and then a strategic partner, and now probably catalyst to not only just be a strategic partner, but also ensure that it's implemented in a rightful manner with the right resources, be it technology side or be it talent side. So having said that, I think there's another view which talks about that boundaries of silos are getting blurred, because there's so much of collaboration across function which is required for organization to be successful. Or may I dare to say that technology is responsible to ensure that the silos boundaries are blurred too much. And that's where probably going forward, instead of having a expertise of a particular function, probably it'll be more of a techno, if I talk about finance, it'll be techno-fin kind of a situation and not just a finance guy, right? So given that kind of change, which probably is thought of, or we could see that. Let's hear from Ajay, because he is also from the industry where the fintech solutions are being sold by them. So how do you respond to the points which Mike made on the strategy side? Yeah, what is it?
I think I'll let Pradeep take this question, if I'm not mistaken.
Glad to take that, Ajay. Very rightly mentioned, Anil. The silos are being broken, and the CFOs. Past few years I've seen more and more functions are getting aligned under CFOs, and practically, if you see finance function practically touches every other function in the organization because of the nature of financial transactions which are happening in the organization, or they have connect to or maybe the operational view of every process, and they have the access to all the data trends, the cross functional perspective, And if you see recent years, the like you rightly mentioned, their role has been ever expanding, and more they're more called like a value manager or a strategic partner, participating in every strategy discussion in the organization, not just playing the role of conventional finance, which was, if I talk of 10 years back. Now they have a role to sense and direct the organization as to how macro trends outside the organization are affecting the micro decisions inside the organization. You see, it is demanded from the new CFOs fraternity that they must step out of their conventional finance role, and they are continually scanning the company operations, the industry, and of course the ever-changing global and economic context, so that they can create a view for the C-suite leaders, so called, which aligns this outside view with the inside view of the organization future strategy and vision, so that they are aligned in a way that they can create more value for the shareholders, and at the same time they are optimizing the return on the money the organization is spending on people, technology, or the other growth drivers.
Thanks, Pradeep, for the insight on this. In fact, strategy role is becoming so arcing for the CFO. So many people have started referring CFO as a chief future officer, not just chief financial officer. So from that perspective, so much of expectation from the from future perspective is there from CFOs. So that's how it is being termed as a future chief future officer. So having said that, let's move on to a different category when we talk about digitally enabled world or digitally engaging world. So let's have views that how can CFO align with CHRO for future workforce in increasing digitally engaging world. Maybe I could take that.
Yes, Anil, I'll take that. So at least this plays to my strength with regard to the whole digitally enhanced world. I think there's been sea changes. I think all of us have been fairly reading the similar reports. We've got similar thoughts and actions. I love the way that everyone from finance has absolutely got an enhanced sense of importance today with regard to how they're driving organizations. We're no longer going to have CEOs, we're only going to have CFOs going forward. But in the digital sense, I think it has been brilliant by way of, at least from our company, how we've seen that the finance team has been driving a great degree of experience, not just within the organization, but customer facing too. I mean, they are actually truly cutting across all boundaries within the organization, which starts from not just cost control, but more cost optimization and enhancing customer satisfaction on the other end. Simple example, a case in point. A last mile delivery company in Bangalore was running an incentive program for all their delivery guys. So you did, the more number of deliveries you did, you got more money in the day. There was no form of calculation that they could forecast from a finance center with regard to what would be the final cost to company, and more importantly, what is an outlook on what they could charge a customer. Certain pricing models brought in by this company's CFO absolutely turned it on its head. Today, they're paid on a cost per delivery model. These delivery guys are told, if you can do 20 deliveries a day, this is how much you would be paid per delivery. You do 25, that's your outlook. Can be done. But what that gave the customer was the exact amount that they would be expected to pay for delivery. Win-win situation. You're not burning cash on one side. You have predictability with regard to your cost coming in. Your customers making up part of that cost, which is again predictable. And this was all brought about by the current situation that we're in. Of course, none of this is possible if you're doing Excel sheet math. I mean, if you're running 90,000 people on the field, typically CFOs would say, finance departments would say, put 3 guys on it, every day, let them calculate the rows and columns and do the multiplication. Now they're adopting new tools. They're using calculation engines, which are pushed out by companies like ours, wherein they're using the entire calculation to ensure their pay in and their pay out is automated. They're cutting down on operational staff. Most importantly, they're cutting down completely on the fact that there are any kind of errors which causes revenue leakage. Who thought that the CFO would actually go down this path? I mean, wherein you're actually looking at business end to end and embracing the digital world, embracing the new customer requirements. Otherwise, it was restricted to your balance sheet. That is where they're bringing in more talent. And when you're getting digital, the biggest change that happens today is that CFOs are collaborating with CHROs to even do talent management. They're actually now budgeting on companies that had an IT department to take care of C-suite laptops. Today they have robust IT departments. They have data analysts. They have your operational guys who are hands-on for coding. These are so-called old economy companies that have embraced the change, and this change has been driven by finance. And that, I think, is the singularly largest change that has happened in an organization. Hey, sales guys, execution guys will flip as the environment changes. But for a hardcore function like a CFO or the CFO function to actually drive talent management, actually drive CHRO to bring the right people for the right job in the right place, he is now able to see what are the operational efficiencies that are being driven by this talent pool. And I think the biggest change that a CFO has made in this digital world is all about integrity and trust. If there is one office that was always held in extremely high regard with regard to integrity and trust, it's always been the CFO's office. It's always been the temple of conscience keeper. Today, the CFO is stepping out as an example. He's talking to teams across the organization, proving yet and again that a CFO no longer can be hidden in a room. He has to be out there, the face of the company. He is the one who actually drives the agenda today. I think that is the big change of the CFO driving the entire HR policy today in the company.
In fact, I have two different scenarios in front of me. One scenario is where we are hearing people are, because of shortage of talent, IT people in demand because everybody is asking talent. Digital people are implementing digital solution. So you have multiple offers being available with the one guy, and when he comes for interview, you say that okay, which is the best one? How can you make the better one so that I can choose that? That's the one side of coin. Other side of coin is now there's a virtual possibility of a virtual employee, where you have many robots taking over jobs, and many times you will find going forward in future that instead of a physical employee or person, there's a job being done by virtual employees. Now, given that two extreme scenarios, how CHRO and CFO can take that into account in the planning from future perspective and have a business strategy so that in digital world they are able to succeed. So maybe a few thoughts, maybe a quick comment from Prince, and then we move on for question answer.
Certainly, Anil. I think this reminds me of the great resignation story also, which is going across the world, right? And I certainly believe India is likely little better state. It's kind of immune. Reason being the per capita income, and if you see the social security and no unemployment benefits. So it's not like that people are moving out and not doing anything. Either they are shifting jobs or they are coming out with their own thought processes and ideas, right? But certainly the flexibility which you're talking about, right? I certainly believe that flexibility over compensation, it will overpower compensation one day. I'll seriously believe well-being of employee will overpower compensation which company provide, and generally treat it to be a main aspect to it. And I think employee experience, which I think Ajay spoken in his last answer as well, which we also believe in that, would be the key driver to retain people, to keep them with you, and sense of belongingness as well, right? And when your team knows that you as a company, you as an employee, you as a resource is impacting society as well, and sense of achievement comes in picture, these 4 or 5 drivers could be there to retain your people in that space.
I'd just like to add on to Prince's point, Anil, when you were talking about this whole plethora of offers that are out there and people are demanding. I think that's a short-term view today. And I think the CFO organization is very well equipped with the fact that they're like, बच्चे को जाने दो अभी तो पैसा खिलाएंगे, जब ये bubble burst हो जाएगा and supply becomes greater than demand, automatically in the long run, and which is what the CFO organization is famous for, you don't just have an AOP, you have a 5-year, 10-year, 15-year plan. And someone wants to stick around that long, it will reflect in ESOPs that come to him, and it will reflect in the increments year on year. He's stuck. You can make the most today, but not
Yeah.
in the long run. And that's where you
It's
guys
like
are.
Yeah, it's like make hay when sun is shining. Today is
Exactly.
their time. Maybe over a period of time things will change, and that's what we were talking about. Maybe as we move into future, there will be more and more virtual employees who will work. Apart
Yes.
from people working from remotely. So with that, I guess it's time for question opening the panel for question answers. So over to you, Shubham, if you have questions.
Yeah, so hey guys, I hope you had fun. It was a very valuable question. I request audience to put in questions if you have any. And if you want to, if the question is slightly big, you can write to us and we'll make sure that the speaker is answering the question later on. Thank you so much once again, guys. It was wonderful to hear you all. I would request the audience to click on the conference tab on the left side to choose on the next session which they would like to go. Thank you so much, speakers. Thank you so much, Mr. Anil. Thank you so much, Viswajit, Prince, Ajay, Mayank, Pradeep. Thank you so much, everyone. It was great listening to you all.
Thanks, everyone. Take care. Bye bye.
Thank you so much.
It was
Thank you.
pleasure connecting.
Yeah.
Thanks, everyone. Thank you. Bye-bye.
Okay, good afternoon, everybody. Once again, a very warm welcome to each one of you. As I did mention, we have a very interactive and a very important topic of discussion coming across on the CFO's vision for ESG. So I'm very delighted to have Mr. Kalasuran, the global CFO from Asia Motors, who have been having a rapidly progressive career for over 17 plus years and also has gained a recognition as a very warm welcome to Kalasuran. Accompanying him on the discussion is Mr. Verma, who's the partner, ESG and global leader. He specializes into capital raising in India and from abroad, legal landscape is a BFSI sector, legal and regulatory compliance for Indian corporates, arbitration proceedings, and contract drafting and vetting. A very warm welcome to you, Sonal, as well. Over to both of you.
Thanks, Sharon. I think we missed a bit of lines there. Hi, Kalisharan.
Hey, hi, Sonal.
Hi.
How are you doing?
I'm fine. I'm fine. Hope all things going great with you.
All well, Sonal. Thank you. How about you? Everything is
Yeah,
great.
I think it's all just ESG is keeping things all interesting in the country and
Excellent.
globally currently. And I think today it was very nice of the forum to have invited myself to share some thoughts, some details, which would be fairly enlightening to the CFO community. So, Kaliswaran, any starting notes from your end?
I think very well captured, Sonal. I think it's probably it's more than anything else. Earlier, it used to be a little bit more cosmetic in terms of how people handle ESG. Today, it's mainstream. What used to be a good to have, now we have moved into probably a must-have or a need to have for every businesses. And as we talk about it, I'm glad to say that as to many organizations, including us now, are moving the organization strategy around sustainability. So it's no more that sustainability is one part of the strategy. Sustainability becomes the strategy, and then how do you drive the ESG framework has become a mainstream already. So on that context, glad that have the opportunity to share our journey and what we are doing here and now and for future on the ESG path.
Sure. So, very well put up, Kaleshwaran. I would just, for as what we discussed amongst between both of us, for the benefit of the audience, we just try to take them from the very primer basics on ESG and how the life today would be evolving and has already evolved globally and in India. So, I would just share my screen. So, if we see the key elements of ESG principles, this slide has come up, Kaleshwaran?
Yeah, it has.
Okay, great. So just giving a quick primer, if you could see these three blocks of environmental, social, and governance, the aspects are more principle-ridden, policy-based, and definitely the laws of the land in which a company is operating. And if we see, there has been huge, lots of talking happening on business and human rights, climate change, greenhouse gas emission, environment and social, they would just fall apart if the governance isn't in place. So each of the three component and the buckets which you could see at a high level out here would be getting more defined over the coming 1 decade as I see it. And to the evolution of this whole philosophy of ESG, if you could see this timeline, starting from 2004 when Kofi Annan first introduced this verbatim of ESG, we saw that the real main push happened when the entire globe got together. Paris Agreement was put in place in November, December 2015. India being also a signatory to it, every country came up with commitments that till 2050, if we do not get ourselves to a net zero carbon situation, the global temperatures would increase more than 1.5 degree compared to the pre-industrial levels, and it would be really tough to keep the dynamics of the globe in place, right from the glacier melting, water levels going high, floods. There could be lots of damage happening, and if the planet is not safe, people wouldn't be safe, and so would businesses collapse. So the perspective out here is, we saw lately, last 10, 12 days, we have been on to, in 2021 itself, from 30th October till 12th November, we have been seeing lots of news coverage on COP26, which happened in Glasgow. Huge monetary commitments were made. A global climate deal was signed on 13 November. Things are moving. And if we see assets under management based on ESG principles, as per Bloomberg's data, would be somewhere around $30 trillion already. And things are moving at a very rapid pace across. And this year, if we see, in India itself, SEBI came up on 10th May with the BRSR framework for the top 1,000 listed companies. This year is a voluntary financial year for reporting, but starting 1st April, it would be a compulsory reporting, moving from just business responsibility reporting to business responsibility and sustainability reporting, well enshrined in ESG principles. So I will take a break here and would ask Kaleshwaran to share his views on the journey at his organization, what he has been driving. There is lots in the online space what your organization is doing. Kaleshwaran, your thoughts, please.
Thank you, Sonal. I think very well put through in terms of how ESG is getting established. In fact, a few months ago, just anecdotally, we are all finance folks who will be able to relate. Prime Minister came out and said, in fact, it was a tweet that he put out across on the impact of ESG and how the country is moving towards ESG. Within few days, Kotak launched a new fund offer. The theme of it was only investing companies on ESG scoring. So they had a parameter as to if that's the gate on which the ESG scores are crossed, only in those companies they will invest. The new fund offer subscription was really overwhelming in terms of how things moved in. So, which means that the world is already moving, forget about the world, our own country is moving towards at a greater pace. And everybody today wants to live and leave a cause for their presence at an individual level. And therefore, the ecosystem that they associate with on a daily basis, it could be your food, clothing, shelter, as basic as you need, or the lifestyle requirements that you try to cater to. People want to see that as a sustainability connect to it. On that context, looking back at our own organization, our active commitment towards the environment and society is really a strategic pillar, and that is also helping us to become a global motorcycling brand. We are not a motorcycle company. We call ourselves as a motorcycling company because we are part of lifestyle experiences the consumers who associate with really go through. There are so many projects that we have implemented. While it is about managing our carbon footprint in the last couple of years or drawing out a strategic roadmap, it's quite large and the progress has been pretty strong. We are being a motorcycling company and not a motorcycle company. Rides forms part of a very very important piece of our organization. So you will find our owners or members participate in a lot of rides at a local, regional, and at a pan India level. Some of them, many of you would be familiar with. We have a Himalayan Odyssey that's travel to Himalayan that happens on a yearly basis. There is an Astral ride. There is a Leh Ladakh ride. These are builds which are supposed to be pretty green, clean, and pure in its true nature. That's where you don't want to disturb the ecosystem as you go through it. And therefore, when we defined our entire sustainability mission, we called it as responsible travel. That's what we want to really drive as a sustainability mission and vision. And the call to action for that mission is leaving every place better. So, as a user, as an organization, if we are going to manufacture our bikes in our plant, do we need to work out for a water positivity? What do we need to do on carbon neutrality? Can we eliminate single use of plastics? How do we create a circular economy on the product platforms like EV? How do we need to get that going? What kind of people practices and governance that we need to do, which will leave every place really better? That's for us as an organization. Now, how do we need to extend it? How do I need to make this as a part of business for the dealers who work with people who provide service to our vehicles and suppliers? Can I drive a zero waste to landfill? Because eventually, the amount of bikes that we sell, the gears that we sell, the plastic that comes out of that is very high. So, how do I change that and ensure that it's a single-use plastic or it's a eco-friendly packed material? Can I drive towards responsible sourcing where I have my vendors listed in a particular manner that their sourcing parameters are far more well defined? Uh, Moving on, I think it's also important now. We talked about how do we do it for our own plants, offices, employees. We talked about the dealers and the suppliers. Now comes out what do we do for our consumer, who are the user of the brand. So we wanted to ensure that the destination that they ride is continued to be ride worthy. So we want to preserve the environment there and then give it back to local communities. So one, we work with the communities out there who are in the ride areas that we go. So let it be Leh Ladakh, let it be Goa or the Karnataka rides we take. Two, how do we ensure that even during the rides, plastics are not carried? Three, how do we keep that entire place litter free? So there is a mark by a consumer behavioral change, which is going to make actually a larger ecosystem. And also we work upon things like 20 percentage of our rides are rides for costs. So there is a social cost that we pick up and then we create rides on that cost on a yearly basis. So that's also part of our being and creating responsible travel. The most important thing on the social side is also ride safe via using helmets. So we give a helmet as complimentary and whenever we sell a bike and inculcate the habit of people wearing helmets, and therefore there is a safety aspect that comes into it. The last segment of it is I've developed my ecosystem, I've developed my plant office employee, dealer, supplier, and my consumer. It's also about how do I develop my local area? Where do I partner? There we work on strategies around what should be done for water conservation. Clean drinking water availability is a big challenge in India today. So we work on a lot towards providing water facilities and clean drinking water to many villages. Waste management and converting waste to wealth is another area that we work upon. Considering we're associated with rides and ride events, can we preserve natural habitats in its own way and doesn't get polluted? So that's something that we also push in. Lot of promotion of local economy is done by promoting handicrafts and arts from these areas because our rides are always in a terrain or a hilly area or in a nice tribal areas, which will have a lot of local promotion of handicrafts and art comes in, makes a very, very big part of our entire social vision. So, in a nutshell, I think as an organization, we know that sustainability is no more a price of entry, it is part of our business. And across the touch points that we have developed a clear actionable in terms of what we have to do in sustainability. So today it is no more about drafting our business strategy and then see what is our team definition and then we set the KPIs and governance. It actually factors into our strategy, and then we ensure that we have a transformative ambition that is defined on each of the areas that we talked about, and then we move ahead in implementing it. A lot of areas that we have already got results. So, for example, we are already water neutral at our factories. So, what it means, the amount of water that we take back from the ecosystem, we give much more back to the ecosystem. So, at some point of time, we're happy to arrange a plant visit at appropriate time where we can show that we have a man-made pond that has been developed,
Oh,
which holds
wow. I would
about
love to visit it.
yeah,
Yeah.
yeah, absolutely, Sonal. 30,000 kiloliters of water storage capacity is what it has got. It's massive. So the refill today that we do on water consumption is much, much more than what it is. So there is a mini Miyawaki forest that we have created within our plant for almost 25% of the land in the forest, which makes it really, really green. So it's not about having a mission; it's also about walking the talk. I'm glad to say that
Yes.
as to we have been
Yes.
moving in that journey and progressing well.
No,
Over to
that's a
you.
very right point which you said, walk the talk, because when we I consult clients in India and globally, this how to be safeguarding yourself from greenwashing is
Yeah,
very important today for company officials and especially CFOs, as you are a very important person in the C-suite. And if you see, there have been huge organizations who have been targeted because they were just greenwashing. The biggest asset managers of Germany, DWS, really till now the whole investigation process is on, and what do? They had Wirecard on their portfolio even 2 weeks before it just went off. So we cannot just be saying, okay, there is a policy, there is something, but walking the talk, which Kaleswaran, you very rightly said, has to be happening. And what we do see, the disclosures coming from companies around ESG is still in its very uh, starting basics, and we will need to do lots of catch up on the disclosures around it. And very much CFOs would be the people who would drive the change. The numbers are very important. For a simple thing, an example, like when we're talking on the social component, definitely even what is your plans with your third parties
yeah,
without crossing the line of treating them as an employee. But still, if you are in this journey, how much are you on the diversity and inclusion quotient? Like NASDAQ, somewhere in August, September, they made all the listed companies now going, they will have to put their disclosures around diversity and inclusion. And that's a very fair move from the stock exchanges, which we've seen. Almost 40 plus stock exchanges have been putting up, you say, regulations around how companies can be pushed to display whatever they are doing around it. And it's not a 1 year thing wherein, okay, an audit done, it's all green, all fine. No, it's a journey. And what you were just talking about, the whole water neutral concept, I'm sure there will be lots of rainwater harvesting. You are very clearly making sure the underground water levels in the factory are not dipping down. So there's so many things which is in play. And definitely one question which I do always get in is CSR and ESG the same? No. My first point comes is, okay, if you're giving washroom facility to your employees, that's not CSR, that's ESG. Whatever you're spending around. Potable water, like in India, very few companies have a IS 10200 certification on water, on drinking water in their premises. So there's lots of catch up which is happening. And I would just again get back on to some interesting numbers. Okay. So if we see, it's not one law, one rule, and it is what is fitting you the best, which framework, which performance standard is fitting you the best. For example, all in the solar energy segment, IFC is the very in demand framework which companies want to align themselves. And in the way in which Indian companies are progressing, first step is the UN Sustainability Development Goals standards. And then the progression we see going from SASB to the other ones out on the screen, and there are many more, like the Carbon Disclosure Project, very important from a manufacturing company's perspective. From IT services company perspective, the other standards on SASB and the local laws definitely on environment, social and governance are important. Policies tuned in are important to it. Now, if we see this very particular chart, then numbers are looking great. We're seeing a whole global movement happening. Whatever happened between 30th October to 12th November in Glasgow, COP26 is just a quick synopsis of it. And first time to phase down fossil fuels, coal, those terminologies came in, which was amiss. So even the global leaders are seeing that lots need to be done. And if things have to be done, there will be investments needed. And if we see lots of money movement is happening from different countries, like today morning newspapers I read, Germany is financing around 10,000 crores to India, 50% to be used on climate change related projects. So it's interesting times, very much interesting times, which I see. And this is what is today for all the top 1,000 listed companies, that these actionables, these 40 plus actionables need to be put into the organization. I am very sure it's already there, but things need to be demonstrated around it in a manner in which the stakeholders, including the shareholders, your employees, all of them are seeing, okay, these actionables, how things are moving year on year. And interesting move by Ministry of Corporate Affairs and SEBI around it. And I'm sure if COVID wasn't around, there would be more companies coming in the net of it. Because at the end of it, it's going to lead to bettering processes, better products coming out, better experience for the customers and employees, and the scale up of companies, their revenues, everything will be moving on the upside. This is one thing from a CFO's perspective I just did bring down. Started somewhere last year, same time in UK, when their Minister of Finance did come up that, okay, task force on climate related financial disclosures need to be done by FTSE companies. And over the next 4-5 years, they have all to get compliant around it. So what does it mean? So the core elements are governance, strategy, risk management, metrics and targets around it. And a quick view. I know we have not got too much time to go in for an hour's discussion, but if you see this on your slide, it is getting related to the Sustainable Development Goals, the targets, disclosures to greenhouse gas emissions. And it's an exciting journey. And I think sometime if we could get more in detail in discussing just on the TCFD, and Indian companies have started reporting some of them around it. And herein, I would say CFOs drive the future today. Green bonds, social bonds, sustainable bonds. We saw that in the last 4-5 years, CFOs of around 10, 12 Indian companies were able to raise around $20 billion in green finance or a social bond from the global markets. And there's so many projects which companies could take up. Even the government is willing to be a part of them. And in the process, not only contribute for the growth of their own business, but also for the society at large and protect the planet and the people. Kalishwaran, I would just like to hear some views from your end around this particular aspect, how the CFOs could drive ESG in their respective organizations.
Yeah, thanks, Sonal. I think to start with, I think my background has been kept in an inverse manner by transformance just to ensure that the CFOs are supposed to show the mirror. So, as always, so out here also, I would present the job of the CFO, even on the ESG side, is to ensure that the mirror is held.
That was a good one.
So, jokes apart, I think I would like to talk about a couple of examples that we did in Eicher Motors, which was led by finance as a function. One is, I think, we became the first two-wheeler company in India to go ahead and release an integrated reporting. Now, typically, financial reporting is all about numbers and it talks about what has happened in the past. Integrated reporting actually brings in multiple elements of capital. To be specific, 6 capitals are brought in. It's a recommendatory requirement by SEBI, but good companies go ahead and do it, and typically the CFOs lead this. So we brought that out, and one of the elements around that is actually a social capital also, where we talk about the things that we do around it, or intellectual capital, financial capital, human capital, what are our practices around it, and how do we educate our larger stakeholders as to what is the organization doing it. Now, it doesn't stop there. You also have an opportunity to get your entire integrated report audited. So therefore, your KPIs that you monitor are also getting certified. So these are all probably tools that is available with finance, and the CFOs need to do it. What we did recently, with ESG becoming such an important parameter, we went ahead and participated in the DJSI survey, the Dow Jones Sustainability Index. The survey scores every organization on environmental, social, and governance parameters. It needs to have one policy, documents, and framework on each of the areas that you work upon. Second, that needs to be audited by external agencies in certain areas and validate that you're walking the talk and you have implemented it. Third, it goes to the extent of saying how is your entire management philosophy and thinking around various areas, right from recruitment, compensation, measurement of performance with respect to ESG. So we went ahead, we participated in the DJSI survey, and I'm so glad to state that as to we doubled our score as compared to where we were last year.
Wow, that's fantastic. Congrats, Kalishwaran.
Thank you. Thanks,
Great,
Sonal.
great.
And the icing on the cake is it's not only we got the scores doubled, we got listed in the DJSI Emerging Markets Index. So there are only 15 companies from entire India who's part of the DJSI Emerging Markets Index. I'm glad to state that Eicher Motors is one of them. And there are only 3 automobile companies from India who's part of this list. Again, Eicher Motors is one of them. And we have also...
Actually, I would say, fantastic feat, and you have been championing the cause in walking the talk, what you said.
Thank you. Thanks, Sonal. And there are only a handful of companies who could make it to the global automotive DJSI list also, which is hardly about 10-15 companies on a global basis. We cracked into that also. So all these things did not happen overnight. It's been years of effort across the
Yes.
organization. But the role of the CFO becomes that of a torchbearer, and also to ensure that the right actions or non-actions is pointed out to the management and strives to ensure that the corrective actions are taken at the right time. And as we cross through that, then it is about how do you communicate to the larger stakeholders and ecosystem. And that's when the journey gets, I would not say completed, the journey keeps going for a CFO from that perspective. So that's probably, I thought I'll
See,
share.
now with your DJSI, I'm very sure all your bankers and investments at better terms, you would be there.
Absolutely right. You're right.
Yeah, yeah, it does translate into money,
That's
because
right.
many a times I do hear people in the industry, okay, it is just maybe a tick box we would need to do. What is the ROI of it? You
Hmm.
could, it's huge. It's huge. Like tomorrow, for any scale up, the way you can attract capital,
Yeah.
or an organization on the ESG journey can attract capital. I am having many of the private equity players who are saying very clearly that, okay, I will invest provided I do get a comfort the company is on a ESG journey. What
That's
is
right.
their 1, 3, 5, 10 year plan
Yeah.
around
Yeah.
things? We do not want to invest in someone and we come to know tomorrow through things, their governance lapses, their non-compliances on social other aspects, and we would just the money would get stuck.
Correct.
And as you rightly said at the start, and that all the asset managers in the country now are looking far more minutely which company is demonstrating
That's right.
it, or is it just chat. And some companies still are not even uh, you say replying to the financial analyst questionnaires on ESG. I think
Correct.
these questionnaires were not being circulated 2 years before, Kaleshwaran, if I am correct.
You're very true, Sonal. I think the acceleration on this entire journey has been quite surreal from that perspective of how things have moved.
I was a bit hopeful in the end of October when the G20 had met up, and there was a commitment of $100 billion, you say, fund mobilization for ESG, climate change, all of it. Now it's been put up on hold for another 1 year by the G20,
Yeah.
because with the amount of things which need to be done, government will have to play with the private players,
Yeah.
which we are seeing in the renewable segment. We are seeing a huge interplay of government, private players, not only in India but globally.
That's right.
And in every manner, they are trying to do things, and money would be needed. Money would be needed. ROI is important if money is coming in. And like affordable housing, for example, huge social bonds are being, you say, done globally to promote that social part, the S part in the ESG. It is, but how do you see now the current SEBI regulations coming on BRSR? Will it become just a tick box, or people would take efforts and do it? How do you see it will span out?
I think as a country, we will have companies that will fall in three buckets in this. Companies
Mhm.
who genuinely do it, who believe that as to this is a great practice. We think there is a larger ecosystem scale up that we can do, and therefore they practice the principle. There will be second set of companies who will just do it for tick in the box. It's about I just want to do it because
Yeah.
that's probably a price of entry for me, and therefore I'll
Yeah.
do it. So it could be more in form than in spirit. That's a second set of companies that you will have. The third one could be who really want to do it but cannot do it due to various constraints.
Mhm.
Who has the attitude, who has the intent to do it, but isn't able to do it. Now, for all these three in the ladder, also, I would see there is a journey timeline that would happen. So if you look at the regulatory environment in India, over a period of time, we have improved. Our disclosures have improved. You have also gotten a better ecosystem on various parameters. Today, I think eventually every business comes to money. The capitalism part of a business cannot be taken out while there is socialism that is being asked for. Therefore, can we look at touch points in which you can talk about this? While green bonds, sustainable bonds are one area that people are now looking at via the regulations and SEBI coming in, why can't a CRISIL rate probably a company on a particular rating level? If a company is AA plus, can I also give a red, amber, green within AA plus on ESG? Therefore, I get a preferable standing on funding. Why can't SEBI have a separate ticker which talks about like a Nifty index or a banking index that you have? You have an ESG index that is created. I think these behavioral changes over a period of time, while capitalism will not go away, but the value of socialism will get embedded into the capitalism, and the net result could be positive for every stakeholder.
No, that's very true. And I would just say that today ESG is more capitalist philosophy than any philosophy ever. The way the funds are getting attracted, invested. India is a bit having a lag time from the West. We have been getting onto it in the last 18, 24 months primarily. And I would say with once we see, as you rightly said, with ESG ratings coming in, along with the credit ratings, disclosures of companies become more healthy over the next couple of years, so that these ratings could be conducted by these agencies, because as of today, they cannot do based just on the annual report. There's hardly much data on ESG about any company.
Correct.
So it would be a particular aspect which I would say that yes, right from the banking community, asset managers have already started pushing on it. Banks are getting tuned in with the global thought process. And if capital raising, we get a bit of, you say, discount if we were on the ESG journey, the adoption would become far more faster with
Fair
everyone.
point. Excellent.
So, yeah, I think it's great. And I think we are near our timing. I think Sharon had told her we have the time. Any question and answers we don't see coming up out here?
Maybe Transformers going green by reducing the number of speakers and consuming lower electricity because it's an ESG topic.
Right, you see, it's I would say, right from a personal to a professional perspective. Everywhere ESG is becoming part of life, right? From the type of products we using, is it recyclable, what we consuming, that at least I start getting attracted to things which can be recycled back in a proper manner.
Correct.
Okay, I think it's been a fantastic session. I think, Sonal, you've been pulling it out across very beautifully, and beautiful example, Kaleshwaran. I think it's been really a learning-oriented session. I don't see any questions yet in the inbox, but certainly I would definitely share any additional questions coming across for you or Mr. Sonal. I could share it over the email to both of you if that's fine.
Sure. More than happy to
Yeah.
respond to any queries.
Yeah. Thank you. Thanks a lot.
Thank you so much, Mr. Kaleshwaran, for joining. Thank you, Sonal. Thank you so much for being with us.
Thank you. Just logging out now. Thanks, everyone.
Thank you. Thank you, audience, for joining us for the session.
Good afternoon and a very warm welcome to the CFO Vision and Innovations in Creating Positive Customer Experience. I welcome the moderator, Anand Agarwal, the Chief Financial Officer of Remark Retail Limited. He is a CA and CS with 20 plus years of experience in strategic planning, finance, taxation, legal, treasury, fundraising, mergers and acquisitions, investor relations, and board management. With this, I welcome you, Anand Agarwal. Our next panel member is Abhay Batra, the Chief Financial Officer of Clovia Lingerie. He is a highly motivated and result-oriented management professional backed by a strong commercial outlook. He has a decade of rich experience in the sunrise Indian e-commerce startup ecosystem. With this, I welcome you, Abhay. Our next panel member is Raghupati Mishra, the Group Chief Financial Officer of Liberty House Group India. He is a dynamic and seasoned management professional with over 2 decades of experience, having multiple industry exposure like information technology, telecommunications, infrastructures, and oilfield, steel and energy, including launching greenfield operations in varied geographies. With this, I welcome you, Raghupati. I
Good
now
afternoon.
hand over the session to Anand, and you guys can go ahead. Thank you.
Thank you so much, and good afternoon, all. It's my pleasure to participate in this discussion along with my fellow panelists, Abhay and Raghu. Let's just try and hope we can make this a very worthwhile and a very interactive discussion. I think the topic today at hand is how CFOs can influence customer experience and thereby maximize the growth potential for the company. Now, in today's evolving marketplace, the customer experience is not just a nice to have, but a must have and a critical part of every company's engagement strategy. For the customer experience to take hold in an organization, companies must begin correlating financial performance to their customer experience success. Especially over the last decade, customer experience has become a discipline and a way of thinking that's important for all businesses to master. The basic thought behind customer experience as a business function is to examine and improvise the totality of touch points and interactions between the customer and our business. But with its buzzy rise to prominence, CX or customer experience management at a lot of large companies is often added to the portfolio of the chief marketing officer or the chief operating officers. That arrangement may work well for some companies, but it leaves an important question unaddressed. Does or should the office of the CFO bear any responsibility for excellent customer experiences? Now, with this backdrop, let me first, come to Raghu and ask, Raghu, what does customer centricity really mean to you?
Yeah, thank you, Transformance Forum, for inviting me to this seminar. Thank you, Anand, for the question. See, customer centricity is basically has to be the way of life. If you are a business organization, it is, as we all know, this is very theoretical, that customer is the king and on all your business is dependent upon the customer. All this we know. So customer centricity is the right strategy. So we all know this theoretically, and mostly people and organizations follow this. I think that it is something beyond that. That you have to ingrain this philosophy that the way of customer centricity is the way of life. A culture that the organization is there. A culture is something, as we all know, is that you are practicing that for a prolonged period of time over years and decades and centuries. Like our culture, we have Holi, we have Diwali, we have Eid, we have Christmas. Like this is our culture. How we get married and all. This is culture. This is there for thousands of years. So we have inculcated this habit, this culture within our in our society. So customer centricity we have to inculcate like this. And what is customer centricity? Is that think you yourself as a customer and then visualize what the customer wants. Let's say I'm giving you an example that if you, along with your family, go to a market restaurant kind of thing that we all visit weekends, so you go there. What is, as a customer, is your expectation? You want somebody to, when you enter the gate, somebody comes to you, say good evening, and how do you do, kind of that, and then he or she ushers you into your sitting area, give you some choices of sitting, you sit there, then after 2-3 minutes they offer you water, then they come with the menu card and they give you that and they say that you please decide, I'll come along. When they, when you have decided, you call them, they come, and by a wave of a word or just a nod that you give, they tell you about what are the specialties of the restaurant, what you should, what you would like to. This is our specialty. You should do this and that. And then when you are waiting for the order to come, they might offer you some papad, some triumphs, etc. Kind of, and this is the kind of experience as a customer you or me or anybody in this audience would want. So when you are having a restaurant, you have to inculcate this. This is the standard operating procedure that you would work on. Right. To understand the customer psyche, what he or she will like to, and better than that, try to better their expectation by your delivery. Then only you will be the first preferred choice. And see, product and service, there is a basic difference. Product, it's a faceless thing. You use that, you don't know as a customer. But service, it is live. You are interacting with human beings, how they are doing, how polite they are, how helpful they are, or they are doing it just as a duty. That extra friendliness is there or not there. These are the things that differentiates the customer experience. And as customers, we want this to be valued by the organization that is giving us the service. This is a human psyche, right? So I think that's answers your question, Anand.
Thank you. Thank you so much, Raghu. You're absolutely right. I think the way of life and, when customer is the king and how you adopt this as a culture is basically how you put customer as the center of the universe for any organization. I think, Abhay, you had a point to add here. So what does customer centricity, how will you define, what does customer centricity will mean to you?
Hi, good afternoon, everyone. Abhay Batra here. I am currently CFO at Clovia, and thanks Transformers and Anand for giving me the opportunity to answer. Anand, for me, customer, for me, more so for me, I mean, for a company that is online first and that holds such an intimate relationship with the customer, for me to give you an answer, I mean, I could go on the whole 40 minutes that I have what customer centricity means for us, because we are in this business. We are like a second skin to the customer, and she has a relationship that she shares her deepest secrets and everything with us, just to make sure that she gets the right product, so she's comfortable, because she used to wear it 6 a.m. in the morning till 12 at night. So and so our philosophy has always been joy, and we have structured our company and our product line, and although we are a product company, we consider ourselves a service company, because we feel that what we are giving her is joy, and that's our service to her. And so for us, customer centricity is more walking the talk and not just saying that customer is king, customer is key, all of that. For us, everything flows from us, because after the first purchase, if she comes back and buys from you the second time, that means you got her. And in a product like this, launching, not like women are not, before we came, women were not wearing bras or briefs, but so to make her make the shift to another company takes a lot, and hence customer centricity for me means walk the talk, not just saying that CMO's role or CFO's role. It's a role in itself, which means in our company we have a wow program, and there is a you can call him a gatekeeper or a storekeeper, and that wow program sits with that person, and he works with technology, feedback. And when we talk further, I'll tell you how technology supports that customer centricity, but with the customer care, with finance, with all teams, and yeah.
No, thank you, Abhay. I think that's a very interesting perspective of walk the talk and not just customer is king. And I think the proof of the pudding is in eating it. So when a customer makes the repeat purchase, that is when you really believe
Yes.
the customer has really benefited and he has had a good experience or she has had a good experience. Now, coming on to the challenges to implementing, let's say, a fresh perspective on customer experience, and I know, for a lot of Indian companies, it's always been a new paradigm. But Raghu, let me, ask you, what are the common organizational and technological challenges that companies face when they try to evolve from being a product focused to a customer focused organization? And how can you, or let's say any CFO, facilitate this journey?
Thank you, Anand. Anand, I have been in telecom industry for many years. So, as you know, the telecom journey in India started with landline phones, STD calls, and then mobile telephony. If specifically we speak about mobile telephony, 2G was the preferred this thing and was the only available thing there. But when world over 3G came over, then Indian customer also demanded that 3G has to be there. The data speed, the kind of, and then we were transforming from monochrome handsets to color handsets, and then just only snake and ladder games to all kind of games. That point of time. So the technological challenges and the financial challenges both comes at the same time. It is not only technological challenge, because to implement technology, you have to incur a large amount on the finance involvement has to be there. So for getting 3G, the all the telecom companies bleed like anything, and the debt leveraging of their balance sheets were there in terms of debt and all. So this is a challenge that the latest technology the customer will demand, and as an organization you have to provide them. Otherwise, they will not be there with you. If there is a 3G call is available, then no customer will stay at 2G, right? So that's a must have to have. So for that to happen, there are few things that need to be done. A large capex is required there. The OPEX spend will also increase to sometimes. So the CFO has to get into this role, how to provide finances and all. So this is technology means, as a CFO, you should know if somebody is talking about technology, it means more fund to be required. It's as simple as that. nothing, nothing in between. It is as simple as that. Technology, money. So how to get the requisite finances there, and then as a CFO, you have to demand that the from the other stakeholders of your organization, that what are we getting out of this further investment, what we are facilitating, that now we are facilitating the customer, we have to improve our standards of delivery, and through that we have to get repeat customers, and get more spend out of the customers by our excellent delivery, and then we, by word of mouth and by this excellent services that we are providing in, we should get new customer also. So there is a competition always in all the fields. So if I was with Airtel and there were Vodafones and Ideas and Reliance and BSNL of the worlds, right? But we still remain number one for a considerable decades, right? So it was just because the speed of delivery, the technology that we provided, and the service that we provided at that point of time. So that's how it is.
Yeah, thank you, Raghu. I fully echo your thoughts. I think, but the interesting point that I took note was technology is equal to money, and so I'm sure the CTOs and the CIOs sitting on this audience are not going to be very happy with what you said. But I definitely agree.
It is not about happiness, Anand. It is practically the case whenever technology comes in. It is about asking more money from the CFO. That's how it is.
Very well put. But let me just also add, I think from a product mindset to a service mindset, I think once you want to change the organizational behavior, it is a lot to do also with alignment. And is everybody in the company reading from the same page? Actually, at the end of the day, if one were to see, products really do not pay us money, customers do. And therefore, I think we need to pivot, more towards making the P&L more, line driven by customer cohorts rather than product cohorts. And it's just a,
I'll give you an example. I'll give you an example in this also. See, when again in telecom, because it is more B2C, right? And millions of customers are there, and you are touching their lives every day, every minute, every second. So when a customer calls your customer care, how much time he is there hearing that voice saying that your call is important to us, please wait, every line is busy, wait, shortly somebody will attend to you. So we analyze this, how much time a customer on an average is there in this call, and that time should be the minimal. And when he or she has spoken to a customer executive, then what is the in how much time is his or her query or grievances is getting redressed? And then third is that to inform him or her that your query is addressed. All the three are important. Without one, others are not will give you the result. So when you do this, the customer understands that there is hearing to my grievances. People are there who will do that. What we were doing, there are 2-3 things we need to do on this. That as leadership and middle level leadership people, we used to call it was mandatory 50 customers. Random basis were given to us. We will call them and ask about the services that we are giving and what are their feedback, so that we understand what is there. And then also we analyze the data, the what is the grievances are coming, the walking customers are there in the experience centers and what are their grievances, and the call centers, what kind of grievances they are giving, how much time we are taking to address them. And from here we have to be nimble footed enough to provide the customer the requisite benefit, some delight to them, and then second is to change our strategy accordingly, so that the recurrence is not happen. Right.
No, very well said. I fully echo that thought, and I think it is an extremely important way to reach out to the customer and make sure that he's aligned to the overall strategy, and make him also part of that entire experience. Now, on this note, let me come back to Abhay. And Abhay, if I were to ask or ask you to comment on how can companies tie, let's say, a financial performance to customer experience, and let's say in particular, how are companies beginning to tie financial performance to how well they are delivering on the customer experience?
Okay, thanks. So I will, if you allow me 2 minutes extra, I'll take this a step back and say that, you know, when we started out, we figured that for us, and we are a solution-based company. So when you talk about solution, it is the primary aspect of it is understanding the customer, right? And whether you do focus groups, whether you do A/B testings, whether you speak to customers personally, all that is part of the process. And when you get solution based, you need to be, and I fully agree with Raghu that speed of delivery and technology are two key aspects of any business today in today's world. And how we solved it is that we broke our technology in A and B, front end and back end. And when we say front end is more service based and backend is more product based, because backend solves my supply chain and front end solves my customer solution and customer journey and personalization. For example, we have a Clovia Fit Test bra fit test on the website, and it's a simple 5 question that visual questions that the customer has to answer, and whoever takes it, there is a 7 to 8% conversion ratio, which is almost 3 times any other conversion performance marketing or other marketing that you do typically. And we today we have 600,000 feedbacks on this Clovia Fit test from customers across India. And so the kind of data that we hold and we work with, and then we came up with a dress to bra test. So most women today don't know what bra to wear with which dress. You know, we came up with the bra bro module, where we said if a gentleman wants to gift his woman a piece of lingerie, how will he decide what to give? So this is all part of the focus groups and customer understandings we got from and whether you call it marketing or whether you call it customer centricity, it's all very guerrilla based, right? You have to go from point to point understanding what the customer is wanting, and there are so many things that you can do, and I can go on. There is a bra bot today that the woman can go and she can evaluate what she wants, and basis that we will suggest her a line of bras. And on the back end, today we are managing about 50,000 SKUs, and most of them are being refurbished. So about 50% of them are being made again, and 30% are seasonal, which come back 3-4 months, and that's how. And 20% are the fresh arrivals that you call it. So to manage all that in the unorganized supply chain was extremely tough. So the kind of technology that we leverage, and that technology today helped us figure out, what the and we have a feedback engine that gives us feedback from the customer from 6 different places. So my monk, we call our technology the monk, exactly tells me which product to make in which size set, which quantity to make for which size. You know, not getting into a detail, one bra decision means 25 sizes. So how much to make of what size, and it can all go very quickly. It can all go wrong. So all of this has a financial aspect, yes, but the way you leverage your technology using the feedback and the customizations and personal, every click today is managed and understood what the customer is looking for, why she left the website. So all of that, this helps us manage our supply chain. So that's how we leverage technology. And to answer your question, I think more or less I did answer your question, no?
No, you did to an extent, but I think
Yeah.
we'll be very happy to also understand how do you tie, let's say, financial performance indicators or any measuring techniques when you want to, let's say, measure how whether the efforts that you've taken are resulting in something tangible or good for the organization.
Okay. So the most important aspect is repeat purchases. Nothing beats that. And whatever you may fancy lingo, my marketing guy tells me if the repeat is not going beyond 60, 70, at least in my business, which is so sticky, then I know that something is wrong. And I will tell you something that we did when you go to our website, you will see a product, you will see a description like a normal website, but when we go, we know exactly how much this product sold today, how much this product sold in the last month, what is the speed of sale of this product, what is the return percentage, what is the reason, what is the feedback score of each product from the customer. So this is again technology leveraging, and all of this maps into financials, right? My MIS today is only one page P&L, and rest everything is customer cohort. So hence internally we say that you manage the MIS, financials will take care of themselves. So 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 for us, most decisions today on and of course there are some costs that that cannot be directly linked to customers, but most big ticket items today are so customer focused. We have close to about 200 reports coming out every day for each different departments, and for me, what cannot be measured cannot be fixed or cannot be improved. So it's an old saying, the fundamentals remain the same essentially, but uh, financial improvement only measuring the cost will not give the answer on customer centricity or customer focus. It has to be why my conversion is not going up. Why is it that my exchanges are going up? Why is it that my actual returns? So returns also are broken down into 4 or 5 different types of returns. So it's not something that can be driven from a P&L backwards. I mean, you cannot, as a CFO, look at a P&L and say this is customer centric, and I will look at this number and no, this is not. This is not, at least to my mind, how we manage it. But it has to be more. Today, CFOs have to be more business oriented, and when it comes to business, I think customer focus areas are the key places where CFOs do and can super add value. I mean, talk about delivery. It's a big ticket item. Talk about packaging and everything. So delivery today, my technology decides who to deliver what, depending upon the weight and the pin code and the price and the kind of service the delivery partner is giving, and the time within which the customer wants it. Maybe she's going to 2 days after. So all of this has a cost impact. But end of the day, if I'm able to give her the delight today, she will come back again, and I will end up increasing her lifetime value. So it cannot be a short-term gain-based approach. It has to be an approach where today I say that, okay, I'm ready to take this cost for her today, if you are able to tell me that my LTV is increasing. So LTV is one thing that also we track very, very carefully.
So Anand, what let me add here. What Abhay is trying to say is very simple. He's saying you take care of the customer will take care of you.
100%.
Abhay?
100%.
Very, very aptly put.
Couldn't be more right.
Couldn't be more right. And I think, there may be multiple tools that one can, use or predict to say this and that. But I think at the end of the day, uh, if customer is coming back and he is saying, that is what he or she is saying loud and clear, that I am liking what you are doing for me. And that is exactly what Raghu you said, and exactly what Abhay you said, and I couldn't agree more. But just let's just try to move on and ask Abhay again. Moving on to the future trends on how, let's say, the customer centricity as a discipline is moving. And from future, I just recall this thing that somewhere I heard the CFO, and the the F in the CFO now stands for the future. So the Chief Future Officer, as we may now begin to be called as. So what do we, think about what are the trends that we predict we will see in the customer experience space? So how is this discipline, how is this, practice going to evolve moving forward?
Okay. So from an internal management perspective, I think uh, the uh, the vertical that manages your customer has to have a seat on the management. It cannot just be a marketing guy, a CFO, and a CEO technology CTO kind of a role. Somebody has to come and say that I take care of the customer and I have an equal say in the management. So that's something that we have done. The second bit on the trends that you say, it's first of all it's an amalgamation of online and offline. It has been spoken about for the longest, but today it is really coming true. And whether you call it an endless aisle at your own store, or whether you do deliveries from your store of products ordered online or returns, etc., the ease that you give to the customer, she wants it easy today. She wants everything on 2 clicks. So how can you make sure that 2 clicks solve everything that she wants? So that's something that we try and solve internally. uh, One more trend that I feel is going to come across is that a lot of AI being used, and especially in an intimate industry that we are in, a lot of AI will get used where trials will become super easy, and she'll be able to try everything at her own pace. So that's something that we are looking forward to, and we are working with. So in terms of solutions, I think there are a lot of small focus group solutions that we are working on, which today technology enables you to do. Earlier, that was not possible. So that is one trend that will catch up, where most of it is technology, of course, but of course it's also now availability at an affordable price, and in the tier 4 of India, where she is extremely cost conscious and the husband pays for it typically. So that's a trend that for us that sits as top priority.
Very aptly put, Abhay, and I think coming from the industry experience, some of the examples that you gave of tier 4 and, how AI and
Yeah.
technology and, online and offline are going to coexist, and, the existential need of a chief experience officer. I think these are very, very important trends, and some of these we've already seen happening in a lot of companies, and I'm sure your company has has always been a front runner in this space. But Raghu,
Fortunately
what's
or
been your
unfortunately, Anand, we didn't have an option. We had to come. We had to start from the customer and come back, because we were like, we did what people did in 20 years. We did in 20 quarters. So we didn't have an option but to be nimble and fast in technology and all of that. We walked the talk. Now hoping to get the repeats to 100%. That's the target.
No, has to
Sorry.
happen. I'm sure you're going to be very, very successful, and I think this is a space, the online disruptive e-commerce space, which you've created for very niche category like lingerie, is very novel, and not just from a revenue perspective or a profitability perspective, I think, but from a need perspective. I think it serves a very
Absolutely.
important customer need, which
Yeah.
goes beyond any customer experience,
Yeah.
thought. But putting the same question to you, Raghu, what are your thoughts on the, let's say, the trends that you're foreseeing on the customer experience journey?
See, I'll give you a little background on this customer experience and what are the uh, more these kind of things will be happening in the future. But in telecom, every quarter there was an independent agency which surveyed the customers in terms of what the customer is facing, the experience in all the service segments like voice services, data services, value-added services, and when he or she is trying to reach the customer care, how he is being handled, and also when he is walking to a sale counter or walking to an experience center, a COCO kind of what he is doing, and this is across all operators. What was his experience circle-wise, different circle it was there. So this was, and they were going there, meeting the live customers, and from the data from there, they were collating the data and then providing us the information to all the operators. So quarterly, every we at Airtel also were doing this, others were also doing this. So we were analyzing the whole system, where we are leading and where we are lacking, in which center, that how to improve this opportunity. So what in future is also required, as you were saying, what is the customer wants, to understand the customer psyche, what the customer's expectation, and what is the actual customer behavior to predict the customer behavior. These are the three things. How to do that is the key. If you get technology in the form of artificial intelligence, or you are churning a lot of data, right now most of the people are doing, large organizations are doing this. If you say go to Google and you search for a mobile phone or a car, for the next 7 days they will provide you ad which are related to different cars and different mobile handsets, right? So they have analyzed your behavior, what you want to do and all, and then collating the data and then feeding it into the system, so that whenever you are logging into something else, you will see the ads, right? So for your customer also, any organization who is focused, and as I told you earlier, it's a culture in the organization to how to give the customer the best benefit, what he is expecting something more than that, then you have to go on the top of this customer behavior. What is the customer behavior today and what will be tomorrow? That is most important, right? If Abhay and Anand, if you go to your teenage or college years, uh, there was landlines, and when you want to talk to your girlfriend, you have to get another friend who is a girl
Sir,
to
I'm
call
quite
there.
young. I had mobiles in my teens also.
And I didn't have. So that's what I'm saying. So you have to get a friend who is a girl to call your girlfriend's home, get her on the line, and then you can speak. Right now, you can WhatsApp any day. So the customer behavior has changed, right? So to understand what the customer behavior is going to be in the future and be ready with that, with the right blend of technology and customer experience, is the key.
I think very correctly said, Raghu, and predicting the future, and sort of what Abhay also talked about in terms of using artificial intelligence, and everything is pivoting around data. So how much data do you have on which you can build models, and you can use algorithms, and you can use analytics to predict what the future requirement is going to be like, and therefore respond in real time, or probably even before real time,
Yeah.
stock up, or to meet customer expectations. Now that is all very much possible through, let's say, technology. But once you move ahead and look at purely brick and mortar businesses, where let's say data cleanliness or data hygiene is not as sacrosanct as, for that matter, let's say in a telecom business or in a online e-commerce business. Now there, predicting what the customer trends are going to be like and what the customer expectations are going to be like is definitely far more trickier. But having said that, coming from a brick and mortar retail chain, I can definitely add that, like a lot of telecom operations and like a lot of e-commerce operations, I think every business worth its name today is moving more and more towards digital, and technology holds the key on what and what to solve for in terms of customer expectations and customer experience. Uh, like ESG and like a lot of other important things that CFOs and management boards are currently concerned about, I also fully recognize that the need of a customer experience officer or a function within a large business to specifically cater to the future requirement of the customer is extremely important. If I look back 10, 20 years, we used to have something like a CRM, a customer relationship management software, which was, post facto. But I think today we are moving towards a generation where we need to be pre-facto. We need to predict. We need to be a step ahead of what the customer might want, and that is where the experience and the expectation sort of gel together. So, with that, I don't know, we are really running short of time. While I had a couple of more thoughts that I wanted to discuss, but definitely I can just leave this discussion with one last point or a question, which I will just invite both Abhay and Raghu to answer in very short sentences. So, how can a finance leader align the bigger organization on understanding the financial impact of customer experiences? So maybe Abhay, you can go first, and then Raghu, you can just add to what Abhay mentioned.
Quite simple, Anand. How does it lead to a higher repeat and higher LTV? How does anything you do or any cost you spend lead to a higher repeat, higher LTV?
So repeat and LTV, or the last transaction value, is what Abhay puts it as how the bridge between the financial and the business performance can be measured. So Raghu, your 2 pence on this.
I think it will be a little more complex than that. It will be, if you see the customer behavior indexes and how your company is performing in those indices, that either you have surveyed or you have captured the data, and then the analytics are there. So if you see, let's say on some of the parameters, there are maybe 25 parameters or 50 parameters there. In some of the parameters, you will be topping. Some of the parameters in industry, you will be in the middle, and some of the parameters you will be the laggard. So my this thing is that, and I was doing this. I was focusing on the last five, kind of where you are the laggard, and how you are improving that. If you improve the last these things and the medium kind of thing, you can get up to a 30% kind of level, then I think you have hit the nail. Then the money will flow automatically if the customer is increasing. And the result of this is what Abhay was saying, that the same customer will take more services from you or buy more products from you, and by his experience he will tell many others who will come to you, new customers will come to you. It will be a product of this action that you take.
Oh, thank you so much. I think that's very, very well put, Raghu, and I couldn't agree more with both what you and Abhay said. So I think time is running out, but I just want to take this last moment to say thank you very much for being part of this very important and fruitful discussion. I absolutely enjoyed your points of view, and I'm sure the audience also did as much. So with that note, I'll take leave, and unless Shreya, if you can just let me know if there are any questions from the audience.
Thank you, Anand, for your remarkably well coordinated this thing that you are doing. So nice.
Thanks,
Thank you.
Anand. Okay, do we have time for questions or?
So I have checked the Q&A tab and I don't see any questions here. So I would thank you, Anand, Abhay, and Raghupati. I see Raghupati has left. So thank you all for this insightful session, and it was a wonderful session having you on board. So with this, I conclude the session and also invite you all to join the award ceremony that's coming up.
Thank you so much. Thank you.
Thank you.
Thanks,
Thank you.
Anand.
Bye.
Bye.
Hello and welcome everybody. A very warm welcome to all of you present here. We have a very exciting session of CFO Vision Communication, and with this, I would like to introduce all our panel members for this session. I'd like to introduce our key panel moderator, Aishwarya Ravi, the Chief Financial Officer at Kinara Capital. She is a qualified chartered accountant and a certified information systems audit professional. She holds a chartered accountant degree and is a certified information systems audit professional by ISACA. I welcome you, Aishwarya. Moving on to our next panel member, I'd like to introduce Amit Srivastava. He is the CEO and CFO at Small. He is an accomplished leader with vast experience in consultancy and retail business and has a successful track record of building new businesses, developing effective operating strategies. I welcome you, Amit.
Thank you.
Moving on to our next panel member, we have Saurav Valla. He is the Chief Financial Officer at Aztec Life Sciences Limited. He is a result-oriented corporate professional with 20 years of rich and indigenous work experience. He has been leading pan-India finance organizations for reputed corporates. I welcome you, Saurav. And with this, I'd like to hand it over to you, Aishwarya. Thank you.
Thanks, Mahek. Thank you, Mahek, for the introductions. Hello, everybody. Good afternoon. Today, communication forms the building blocks of all of our relationships, be it personal, be it professional. All of us need to communicate in some form or manner. Now, dynamic communication skills are very, very important and are the keys to success. What are the important nuances to communicate effectively in our roles as CFO of an organization forms the basis of today's interesting conversation. With that, I would like to start off the panel with an interesting question to Saurav. There obviously are different styles to communicate. Now, how you would communicate to internal stakeholders like CEO, board, employees is very different to how you're going to communicate to external stakeholders like your stock exchanges, rating agencies, lenders, vendors, etc. How would you differentiate how you communicate to both these parties? Are there any tricks? Are there any tipping points, etc., which you would like to share with all of us today on these different styles of communication?
Sure. Thanks for the question, Ashwarya, and good afternoon to all. So before going into the detail of internal and external, I would like to share my view what a good communication is. And for communication to be effective, I think it is the art of knowing four things. Basically, what to say, how to say, when to say, and most importantly, when to stop. And that is why I say it's art, because you have to have a mix of all the four in the right content and context to make your communication effective. With that, I think the CFO role has evolved dramatically over the years, as we all know, being the CFOs or the leading CFOs. So today, CFO along with the CEO is the KMP basically, who represents the organization as a brand ambassador and primarily are responsible for driving all kind of communication, whether it be with the internal stakeholders or all the external stakeholders as well. Now, coming to your question on the nuances of internal communication versus external. So first, let us understand what is internal communication and the purpose of internal communication, and why external communication, and then what are the attributes for doing that effectively. To my mind, and based on my experience, whatever I'm sharing is based on my experience and my journey, plus what I've seen in other professionals in the industry. Internal communication's objective is primarily to give right direction and information to company's internal team for various actions and working together with cross-functional teams for ultimately achieving the company's objective. So we all are a part of the same ship and the direction has to be same. it is the responsibility of the CFO, kind of, I would say, to ensure to communicate whether the direction is the ship is sailing in the direction it was set to, and if there are some disturbances, how the navigation should happen. And then I would say next step would be to kind of not only leave there, to jointly participate in navigating the ship along with the leadership team. So that is why internal communication becomes very, very important, because internal communication, specifically from the CFO, is the base through which various stakeholders get to understand what is going on in the company. Some examples, various kind of business performance analysis is being shared. For example, we all have budgets and targets for the year. So how is the company performing at any point of time vis-a-vis that set budget? How are we performing vis-a-vis last year? And that has to be much more in detail, not only in the summary number, because it is action what is desired from there. Second kind of communication is we work on various key initiative like CapEx proposal evaluation, like M&A evaluation. So those areas also we partner with the teams, and a lot of communication has to be done to make those strategic initiatives succeed. Other would be in today's era, the kind of changes we are seeing in the corporate laws, be it GST, Direct Tax, or Companies Act, and the implications it has on the operations and the way report and comply to various statutes. That solely falls on the CFO's shoulder. So how to communicate that effectively and make the impact understood and comply with those. So to my mind, these are some of the key areas which, other than obviously this is gamut, but in the interest of the time, some key area which I would like to highlight. Now, how to do it effectively? Effectively, I has already said regarding the art of communication, and we have to apply that art here also. But what becomes important in doing internal communication is it has to be done a lot more transparently, because when you are talking to your internal stakeholders, they have the right to know what is going on in detail, and you need to, depending on whom you are communicating with. So the communicating with CEO would be different than communicating to a sales head, and depending on your audience and context, it needs to be done pretty transparently with fair level of detailing, rather than just putting some number on the table without making much sense of it. Needs to be detailed for the right audience. Should be done timely. To my mind, the timeliness of communication is very, very imperative, because most of the internal communication, to my mind, is for driving some action to achieve the corporate goals. So the timeliness of internal communication is very, very important to ensure with all the details the company can take the required action. And as I said, lastly, for the internal communication, it should not only be limited to communication. As the strategic leaders now, we need to participate in helping the others based on all the data and analysis which we have to take the required course correction. And I believe, as is the case with me, most of the CFOs are in all the strategic committees of the company. So that joint ownership and joint driving should start after that communication as well. So those are some areas of internal communication where we should focus and be more as a kind of say partnering kind of role. Solid business partnering is what is important in the internal communication. Now, regarding the external communication, as you already mentioned, one thing which clicks to my mind now, the CFO are kind of the brand ambassadors of the company. So you represent the company and the image of the company to the external world, mostly along with the CEOs. And we have to be very cognizant of the fact while we are interacting with any of the external stakeholders. Be it our regular communication with the bankers, because bankers we have to communicate pretty often as the CFOs for meeting all the funds requirement of the company. Be it rating agencies, or be it connecting with our stakeholders like investors and shareholders. So I'm sure I'm a part of the listed entity, so we do a lot of investor calls, one-to-one connect with the investors. So there we need to be more cognizant, because all the statements are price sensitive. There are certain level of caution which you need to exercise while doing those communication, and you also have to protect your company's reputation and give the confidence to the external world based on the right kind of work you're doing. So that becomes very important. So for external communication sharing as well as protecting your company's sensitive information responsibly is pretty important. So we need to be mindful for these two areas in the communication. Apart from this, one thing which also comes to my mind is not only this. One very important area is managing our AGM and the board of directors. The independent board is looking forward to the CFOs for understanding what is going on in the business, the health of the business per se. And the CFO is actually carrying the responsibility to give the confidence in a very transparent manner to the board. Yeah, things are fine and all the controls and direction of the company is right. And that the board definitely expects from the CFO. To my mind, that is become very important nowadays. And so is the communication with our shareholders, including the minority shareholders, because ultimately they are invested in our company and we owe it to them to make them assured that the company is doing what it should be doing and the growth seems to be strong. So various areas and nuances which comes to my mind.
Thank you so much, Saurabh, for that brilliant picture. You've almost made all of us CFOs sound like, actors who have to wear different hats for different people and present our case accordingly. And I think that is true for all of us who are in that position. We need to play a differentiated role for different audiences so that the ultimate message and the company's vision and mission is truly and clearly enunciated. Thank you for that.
Right.
And of course, I liked your point about when to stop communicating. I think that is also important because we all as a group, we need to understand how our audience are and when to stop. I think that was a powerful message as well. Thank you, Saurabh. My next question actually is to you, Amit. As CFOs, we have a lot of responsibilities, but there's a saying which goes, if you want to communicate to your audience, you need to reach to where they are rather than try and bring them to where you are standing. So as part of communication within the job roles you're holding, you're in fact a CEO and a CFO, how do you think communication has been a challenge while you're trying to communicate internally or externally? What are the different challenges you've faced throughout, trying to communicate? If you could talk about that, it'll be great.
Thanks, Aishwarya. And maybe this is a continuation to what Saurav mentioned, actually, where he was talking about at what we should do while communicating with internal and external stakeholders. And a sub part of that particular question is definitely on the challenges and other part of it. So it's a great continuation from question perspective. See, CFO now, as Saurav also reiterated, they are no more a lead of movie or heading finance. They are basically heading a multidiscipline function, and they are actually wearing multiple hats at different time. And while they're interacting with internal stakeholders, it is very much important that they are able to understand and appreciate that what that function does, whether it is from the HR or the L&D or technology or ER or business, any particular function, and not to look from a finance lens, but from actually look from that particular function lens. So I think that has been the biggest shift, if I have to say, that CFOs have gone through in recent years, from being more transactional to being strategic. And you can't wear a strategic hat unless you are able to appreciate what the other functions are able to contribute in the overall ecosystem. Now, while it sounds very exciting, it has its own challenges, because by design, people are actually all this while doing one particular function, and now suddenly they have been asked, or they are looked upon as a trusted advisors by multiple functions. So how to actually move around that? So first thing I'll say, and the biggest challenge is the lack of understanding, and where actually we have to honestly admit and we have to invest the time and energy to understand and respect that particular function. Something which is very important, and something what is the contribution of that particular function, whether be it analytics or HR or any other any function. So how do we actually gather that understanding? And that can only come by investing time, the most precious, valuable currency, if I have to say, okay, which all of us have, which is time. So we need to invest that time with that particular function and department in a much more involved basis, because unless we are involved, we will not be interested in that and we will not be understanding the true sense of it. So I think that's very critical. A part is definitely understanding, because if there is a lack of understanding, trust me, it becomes very transactional and you will not be able to contribute to it. Second part I feel, which is about all of us use a lot of jargons, to be very honest, or a lot of technical languages and all in our discussion, and that's by inherent part of the education system or the curriculum which we have actually adopted, and we believe that the listener also understands that. That's our belief, but the listener coming from very different department or heads of functions may not be knowing about that. So I personally believe in this philosophy to keep everything very simple, as simple as possible, so that people are able to understand. And one of the effective way of communicating is that keep it very simple and brief. To again to Saurav's point, because if you are simple and brief, the communication is actually relayed very fast. So not to use jargon, especially with non-financial people. That would be my one thought, because that creates a lot of barrier. And if you have used certain big words like ABC costing or ROI and all, and you would have said that, but trust me, the other person will not understand. They will not be able
I
to
love that, Amit, because this is one of the key problems which we have also noticed. We go off in a jargon world, and the audience, most of them fail to understand. And I think as a group, we need to work at how to communicate in a layman's term so that we get our point across. Yes, please continue.
Sure. And because the objective is not to show that how much jargons I'm aware of, objective is to convey the message. So that's another thing. Third, as I said earlier as well, time is the most valuable currency and we need to use it judiciously and in a balanced way. And what happens, because the expectation from CFO is multifaceted, because of this, we always keep on doing multitasking. And knowingly or unknowingly, when we are sitting in the meeting, we are more thinking about future, what's the next meeting going to happen, deadlines, reports, all those things, or something of the past. We are not 100% present. So if a person is not 100% present in that particular discussion, it becomes very difficult to actually have, and your body language will reflect that you're not very much getting interested in that, because someone has come up with a proposal with so much of passion involved into it, for your clearance or for your approval. And if you're not interested, it actually demotivates the entire team. So that is something also important, that we have to be 100% present. How we can be 100% present and prioritize. We cannot be present everywhere, but how do we prioritize as well while keeping multitasking in our head? Last but not the least is our own biases. Biasness, I will say, is the biggest challenge, because many times we have biasness coming from our past experience, our personal opinion, or it can be on certain topic, certain subject, or it can be person specific as well. But because of this biasness, actually your mind gets closed even before the discussion starts. So how to actually come up with that particular mode that, okay, fine, I'm today going there to learn something from this particular discussion and contribute to the organization in a better way. That's a tough thing actually, because our biasness comes from our learnings, from our experience, and from our own history or all experiences that we have moved across. To overcome that is a challenge. But I can relay one very famous quotation, or maybe a quote which is said all across in small and India, I can say, or small and globally, is that once it was said that if you are a clever man, you want to change the world. But if you're a wise man, you want to change yourself. And I believe that biasness is very much related with that. If we can have a clear head around that, then it's fantastic. And all these challenges, like top three, four, which came to my mind, Ashwarya, I'll just add upon that all these things leads to delays and procrastination. And if project approval or any decision is getting delayed, there is a cost of inaction as well, which none of our accounting system measures it. We only measure cost of action. There is nowhere to measure cost of inaction. But if we are mindful of that, sometimes cost of inaction is much higher than the cost of action. So definitely few challenges I have enlisted. If we are, as a finance professional, able to overcome this or maybe able to address this, sure, I think the next generation or the future years and all finance is just open.
Well said, Amit. I think cost of inaction is, I would take away as the most important tagline there, because many of us think avoiding an issue or not acting upon it will make the issue go away, but I think it complicates or quadruples the issue. And time is a currency as well, right? It's the most valuable currency we have. So I think very fair points. We all need to introspect on that. Now we've been talking a bit about how communication is important and how important is it as our role in CFO, as a CFO, how important is it to communicate? So I would like to ask Saurav, do you think we have the necessary skills today to communicate? To communicate, do we have the technical know-how, technical capacity, or the soft skills, nuances, which is necessary to communicate? I would love to hear your thoughts on that, Saurav.
Sure, Aishwarya. So that's a very tricky question, and I don't have a straight answer for that. I think some of us
Yeah.
have, some of us are in the learning process, and some of us needs to do it better. In fact, I believe all of us should do it better, because there is no end to communication. There is no degree where you can say, "Yeah, I'm the best communicator." So we are always on a journey. Communication is not a destination, and we can improve our effectiveness. Now, important question is why that is so important, because as we have been clearly seeing from the morning and in our session as well, today's CFO is a very strategic role in any organization. And why strategic? Because to my mind now, CFO is not only responsible for the finance department. In most of the organization like mine, they are also responsible for the P&L delivery. So the CFO nowadays is responsible for the entire P&L delivery with the CEO. And that's a huge shift in the responsibility and the expectation from the CFOs. We have been very fortunate because we have seen this transition. When we started our career, this was not the expectation from the CFOs or the finance department, to be honest. That's how I started. It was more of a core function and support. From there, over the years, in last 10 years specifically, this evolution has been amazing. And I love this transformation from where we have started and where we have reached. And I don't know where we'll go. Probably sky is the limit. So that's a very interesting journey. Now, with that in mind, today's CFO needs to be a very visible leader. If this is the role and this is the expectation, CFO cannot be a kind of function head. It has to be a very, very visible leader, who is an excellent communicator and a great influencer to deliver on the role and the expectation effectively. And that is why the communication becomes very important. Now, is there a way, or is there a training which has happened to us? To my mind, at least, I don't know. There is a structured way where we have been training the CFOs for that. So, what suggestion I would like to put is this: we should take as a responsibility on our own, because ultimately, career is of our own. We need to take initiative for improving our communication to the extent possible, and make that as a focus and priority area, and invest on that area as a key priority along with all other works. To my mind, if you take that as a priority, and we all are chartered accountants mostly or MBA finance, if we can learn all that, communication is not so difficult, which cannot be learned or mastered with adequate practice. So I would say that needs to be done. I can share key. I don't know whether my communication are good or bad, but I assume it's fair. What I can share is how I have, over the years, have I improved my communication skills, and what have helped me to improve the skills and probably deliver more effectively as a CFO. So some of the suggestions: be an avid reader. Reading helps a lot, and when I say reading, please, for all sake, it doesn't mean only the technical reading and technical updates which we do. That is a job essential we need to do. The reading has to be much more holistic, and it has to go much beyond our comfort area of understanding. So you can read whatever you like beyond fiction, maybe self-development books, maybe spirituality, maybe history, maybe the latest developments across the world. The specifically one thing which comes handy is the leadership reading, how to develop the leadership thought and the leadership skills. So keep reading as much as possible. That will definitely expand our mindset and make us better communicator. Second is invest in our own development, specifically communication and other stuff. So company will definitely have their own training programs, their own schedules for training, but it may not necessarily be adequate or suitable to what you desire or aspire to be. So that is where the importance of taking our self training and investment on our growth becomes very imperative. Nowadays, specifically post this COVID era, the opportunities are immense. You can get the best, you can attend the best workshop globally sitting at your home or your office. So we need to use all the opportunity to invest in our overall development. That definitely improves your communication skills apart from anything else. So investment in yourself in a very focused manner is helpful. Third, I think we all of our generally stays in metro and we have to travel a lot to our commute and back to home. Use the commute time properly. What I do is I always have either some podcast or some audiobook ready. So whatever 2-3 hours we need to commute, we can make that as our education time. And by just playing it in your while driving in your car, you can get a lot of learning and a lot of value addition done to yourself. Fourth, and this is a bit tricky, but learning has a limitation. Until you apply those things, you don't know whether you have learned enough or your learning is in the right direction. So after doing all that, you need to start testing your learnings. For that, in wherever you're working, there are various opportunities which you need to grab. Nothing comes easy or should come easy to you on the platter. So wherever there is an opportunity, grab an opportunity for leading a project, leading some new areas of work where it will entail some presentation to the leadership team, and you will interact with various team leader, cross-sectional team. That way you have to communicate more effectively, you have to share your ideas, you have to do a lot of works in coordination. It certainly helps improving your overall skills and give confidence where you are and what further improvements you need. Fifth would be we always think finance is a very linear path. You start in finance role and you end up as the CFO. May not be very necessarily true. So after spending some years in finance, to my mind, a very good idea would be, because nowadays CFO's expectation is not to be only a finance expert. They are expected to be having an in-depth knowledge of all the aspects of business operations in various departments and kind of help and support CEO deliver effectively in anything which you can think of. So it is a very good idea nowadays for the CFOs after some years of spending time in your core role to go and take some other roles in hardcore operations like sales, marketing, strategy, uh, or even for that matter HR, manufacturing, whatever is in your line of interest. And then come back to your core passion. If you feel finance and CFO is your core role, I'm sure that will help you gain a lot of insight which otherwise is not possible, and deliver more effectively. Fifth is use various communication platform. So we can make our peer minded groups with the social media now. If you use it effectively, there are so much we can do to improve our skills and also get connected with our peers, not only in India, across the world. So now there are no geographies. So as we say, geography is a history now, frankly. And specifically with the pandemic, that genuinely the geography is a history. So you are connected across the globe. Use the opportunity, keep on improving, and to my mind, it is always a journey. There is no fixed solution to it.
That's well said, Saurav. I think a lot of practical lessons, including the fact that first and foremost, you have to invest in yourself. You have to be proactive about it. And there are no limits, not even geography, because of the COVID wave, etc. So, technically, I think all of us are fully equipped. There are great programs out there who can help us out there in that. But on the softer aspect of communication and adding on top of that your updation of skills, I think 5 or 6 exceptional ideas Saurav has given. So even if you can implement any one of them, that'll be great. So I think with this, I would move on to the next question. Probably this is for you, Amit. Uh, a story communicates a message, I think, 100 times more powerfully than anything. And I'm a firm believer in storytelling. So maybe I will turn this over to you and ask you to tell us a story of how communication helped you to get through to your people. How did you make it a powerful tool so that you could do some change management internally, or any great story which you might have, if you could share with us, we would love to hear it.
Sure. I think storytelling is one of the powerful tools used by all leaders all across. And by means I can say by nature, we all enjoy listening stories. We all, whether be it in any form, right from the beginning, we are very excited to know. Okay, fine. What's the story behind such a successful IPO? What is the story behind this particular product? Okay, how this new concept came into picture. So there is an inner desire in each and every human being to search for a powerful story, and then they try to see that how they can actually play it or maybe learn from that particular perspective. Now in the last 5 6 years we have seen so many stories of startup, new models, everything revolutionary happening, and we are all chasing to just look at those stories. But one is definitely a business story, but there are definitely a lot of personal stories as well. There are a lot of stories which are related to a team, related to a function, related to an activity. Somehow I believe we as leaders, we are not using this powerful tool to maximum extent, and somehow we believe that it's an informal way of discussing with team, and it is not integrated in the formal part of the discussion, or maybe as a formal communication channel. I'm a firm believer that nothing is as powerful as a successful story, and we have seen this in our office, and I'm sure you would have also experienced in your different facets of life, that if there is a challenging environment, if there is a challenging time, and to your point, Ashwarya, as you mentioned about the change management, whether it's anything related to tech change or ERP implementation, or it can be anything, new product launch, or some entering into a new category, and it's quite a change by nature. People resist to it. But if you are able to talk about a past story which was very successful, and take the learnings from them to the current team, and link the personal development of the individual team to it, trust me, I think everyone will feel quite motivated, because A, people will feel that I can do it. It is not something which I cannot do it. B, they will be seeing a live example, that someone who has done it or someone who did like this, where the person is right now, where he has gone. In our finance team as well, there are so many stories as powerful as that, that someone joined the system maybe at the time of articleship or just completing articleship, and currently the person is heading finance for a country. Now that's a very powerful story for any new incumbent. If someone comes across, and if we tell them that this organization provides actually a leadership, and if you have capability and potential, you can actually go above the ladder. And this is how this guy did it. So people know that how to achieve that as well. So story, the biggest part of the story is that story has how part as well. It doesn't only talks about that what you can do, but it also talks about the how part of it. And the biggest missing link in many of the discussion is the how part. But if we are able to give that part to the team, it definitely resonates and gives a very different kind of a momentum within the team. But it doesn't need to be fairy tale, to be very honest. Okay, we are not here to talk about any fairy tale or any those kind of stories. What we are talking about here is a live stories, live events, things where people can relate to them. It's not a Superman or Spider-Man or superhuman stories. These are very natural. Someone who was sitting beside your desk has been able to do it, and so people are able to relate with themselves, and they are able to see that, okay, fine, if I do something, I'll be able to move across the ladder. So I use it quite frequently, and I'll urge to many of the fellow colleagues who are there on the call, to others as well, use this powerful communication within your team as a formal part of communication channel. Okay, there are so many stories within the organization, within the team, within the even the personal life of the team. Okay, there'll be a lot of stories. And last but not the least, I'll tell you what happens when you narrate a story. You value that individual, and by doing that, you're giving a message to the system that we respect each and every one. And the kind of bonding that it generates between the management and the people goes beyond any motivational training session that you can do it. Because there people value that, okay, fine, if I've done something, A, it got noticed, and B, it has become like a case study within the organization. Okay, not to the point of HBR, but definitely within the organization, it's like a case study. So I really cherish that, and I'll urge everyone to adopt this tool.
I think stories are very powerful emotional connects as well. You're absolutely right. Using stories, especially of internal employees and stakeholders within the forum itself, is a great beacon for others that okay, fine, if I do XYZ, maybe I'll be that person who's talked about in the next couple of years. And I think it's a great tool for even change management, which we have also internally noticed. And we should all try and use more of this form of communication to be effective. Saurav, do you have any good stories to share with us of how you did communication through storylines?
Story would take more of a time. I would share my thoughts what the
Yeah,
power
yeah,
of
please
story
go
can
ahead.
do. So I think Amit has covered almost all the key points about story. But what I'd like to say is story is one of the most powerful communication tools, which if used effectively can actually move mountains. When there is a deadlock, when the things are going very difficult, a good story told in a very pleasant manner actually makes the difference. I have experienced that multiple times, both by listening a story as well as after that and understanding the power of it, telling the stories to my team. So what effective? Why story connects with us so dramatically as Amit was sharing? That I read it somewhere. That is a deep psychology behind it because if we all know, while we were childs, our parents, our mothers used to tell us a lot of stories for making us eat, drink, sleep, and go on. So our initial programming is to get the story done, and that is why the mind is always eager to hear a story. And story where there is a kind of emotional connect, it makes it even more powerful. So that is how we need to understand the psychology beyond story and use it more effectively. Effectively means to definitely inspire our team, to motivate our team by giving real life examples, not some theoretical stories which is not kind of relatable specifically to Gen Y. They don't believe in theoretical stories. So you need to the stories to my mind which impacts most or which I use is or based on the real life examples of either what I have seen in the company or what we have done as a team in those tough situations before, and how working as a team, how those examples can relate to the current situation, what is the learning which the team can drive, and some point the team gets the message through a story much more powerfully than what you can do in a kind of all the motivation or open house sessions. So we have been using stories pretty often, and it has worked very well. If you do it with good intention and good connect, it is one of the most powerful tools. Yeah.
I'll just add to this last one line to it. It has a power to create an image in your mind. And the best part is said that if you have to actually win something, first you have to win in mind. So story has that particular power. You are able to portray an image in your mind. And the moment you do it, that you get a much more higher conviction actually to actually get it done.
Right.
Yeah, absolutely true. Yeah. So maybe on to a couple of questions which came off our way. So Amit, maybe you. What are the three qualities of a good communicator CFO? What would you say are the topmost three qualities which you need to have?
I'll say A, again I'll repeat myself, be a keen listener. That's the topmost quality. And listen to understand, not to reply. That's very critical thing I'll say as a one thing. Second, I'll say as a we say KYC, which is know your customer, and your customer is anyone. It can be like your internal, external, anyone. You should know your customer from what background and from what pretext he's coming to you from that particular discussion. So that you should be very well aware of it, because if you're not aware of that subject matter, then it can be a disaster, no matter how good listener you are. And if I have to restrict myself to third, I will say that within the team, KYT again, I'll say know your talents, talent spotters. That's also very much important, because if you're able to do that, you are building up a future leaders, and able to create a good communicators within the team. It's not only that what you communicate, it's also about that how the team is effectively communicating within themselves. So spotting those talents and putting across right person for the right job is also very critical in order to be a great or a good communicator within the team.
Well said, KYC and KYT. Now all of us can remember those taglines. Amit, thank you. Saurabh, would you like to add something to this before we wrap up?
I think Anindya has covered. Just 2 points from my side. I think for a powerful communication, the connect is very important. We need to build the connect with the stakeholders to drive the impact or the result which we want. So, to my mind, starting with the connect, where as Amit said, even effective listening is very critical. So, building the connect and then focusing on the impact or the result. Yeah.
Great. I think this was a very engaging session with the both of you shedding a lot of light on the journey of communication. All of us can completely agree that communication is the infrastructure highway, so to speak, essential for all of our relationships. We need to figure out how we build it, how we, create highways or side roads or whatever you may call to figure out based on your KYC and KYTs so that we come up with a holistic package on how to communicate effectively so that as a group, as an organization, we all reach to the desired end result, which is what all of us at the end of the day want. I think it's been very great having you both out here. Thanks everyone for listening to us, and do feel free to reach out to us if you have any other insights or questions. Thank you.
Thank you so much, Aishwarya, Amit, and Saurabh, for this amazing session.
Thanks,
I'm
Amit.
sure the audience must have liked this a lot. I request everyone, if you have any kind of questions or comments to share with our dear speakers, what you can do is you can click on panelist options on your right. If you click on the speaker's name, you will be able to have a chat with him. So if you have any kind of comments, any kind of suggestions, ideas, you can share with them through that, or else we are always here to help you through emails. With this, I'd like to thank our dear panel members. Thank you so much for your insights, and we would like to move on to our one of the most awaited sessions, which is the CFO Vision and Innovation Awards. So I'd like the audience to join us in there, as well as the speaker. Thank you so much.
Okay. Thank you. Bye.
So, hello everyone. My name is Shubham and I'm a conference producer working with Transform Forums and your host for today's event. I would like to welcome you on once again on behalf of Transformance Forums. We have an exciting session right now on CFO vision and role of cybersecurity. And I'm privileged to welcome our panel moderator, Mr. Pankaj Vasani. So for moderator for today's panel, Mr. Pankaj Vasani, he's a finance expert, business leader and finance expert with over 2 decades of experience in senior executive roles and as a board and audit committee members. A multi-award winner, namely CFO Veteran of the Year, Finance Personality of the Year, Finance Innovation Icon by Google, Strategy Visionary Leader. Our member for the panel is Mr. Yash Arora, Chief Financial Officer, Indian Oil and Adani Gas Private Limited, an experienced professional with over 27 years of track record, hands-on working capital management, and treasury operations and investment for surplus funds. Successfully managed several corporate restructuring for significant transformation and value creation. Our next panel member is Mr. Nitin Khanna, who is the CFO of Inorbit Malls, has a strong track record of making sound decisions, taking ownership and delivering robust business results, with over 20 years of experience in strategy, commercial and track structuring. Here on, I would request Mr. Pankaj to take over the session.
Thanks, Shubham. So as we are all aware, cybersecurity is a business problem and it's not a technical or a standalone problem. And so which essentially means that, the issue of cybersecurity needs to be looked for the organization as a whole, and it needs to have a strategic context to how and what we are trying to solve. As we are all aware that, earlier cybersecurity typically meant, safeguarding your credit card information, but that has, changed as time has went by. And today, any information that makes you successful or gives you competitive advantage, and this could be IP, this could be, your R&D information, or your customer database, anything that's that's relevant to you, that's special to you, which makes you successful, needs to be protected. And if you do not do so, then of course there is a financial loss, there are regulatory issues, there's loss of customer faith, etc., etc. So the issue of cybersecurity has made its way to the boardroom, and the CFOs, the CEOs, the investors, the board of directors, and even the consumers are quite worried about cybersecurity, which is the theme of our discussion today. For the finance function, typically cybersecurity risk is the financial risk of phishing, malware, or data leakage. Now, as the business and IT landscape has changed, so has the risk landscape, which has changed, which essentially means that the CFO needs to work in tandem with the risk managers. He or she needs to work in tandem with the IT team to make sure that there is a 360-degree and a holistic and comprehensive view of the cybersecurity issues. In today's discussion, we are going to touch upon various themes of strategic context, resilience, and response plans that typically companies have. We'll talk about budgeting, cost, and training. So without much ado, let me get started. Today, I'm joined by two of my good friends, Nitin and Yash. Welcome, Nitin. Welcome, Yash.
Hi, Pankaj. Hi, everybody.
Hi.
Hi, Yash.
Hi. Hi, Yash. So let's get started with you, Yash. Yash, my first question to you is, how do you ensure that the business strategy is mapped to measurable digitization of strategy to ensure an ROI?
See, as far as the business strategy and the digitization strategy, practically those have been getting integrated now. Anything that we do now is going to get implemented on the digitization platform. Now that platform can be in terms of many ways. I just put it in three ways from the user's perspective. The one is the in-house, the second is the customer related, and the third is on the vendor related. When we look at it in-house, how the processes are these processes are robust? That is the first one to measure it. Then we look at it, are these fully integrated? The way we look at it, if we look at, say, procurement per se, procurement from the tender to the payment, to vendor payments, how those are aligned or not, issuance of the POs, issuance of the tender processes, negotiations, everything is getting digitized, right? So therefore, less and lesser manual intervention is going to be there. Similarly, for the customer's perspective, whatever we sell, that is another one. And in-house, what we look at it, then we look at it, what are the feedback that we get it from our customers. That is also very, very critical to look at it in terms of measuring the ROI. Here it is not per se ROI. We look at it in case we have a satisfaction, there's a satisfaction level from the users, which means we are doing well in the business, and if the customers are happy, if the suppliers are happy, the things are in a right platform, the right way. And look at another thing which has been there for the last few quarters per se, I will say, more and more RPA processes have been getting implemented in most of the corporates. The way you look at it, that is the most critical, say in particular in the case of the MNCs or the global companies, the way you're looking at it, are the margins going to get protected? Say somebody selling in the US, whereas the procurement may be somewhere in Asia, right? How they look at it, how they align it. They get an MIS, they get in this ERP itself, they get their rates. Okay, this is your selling price because my procurement cost is the X. This X plus margin is your selling price, or vis-a-vis reverse. In case they are not able to sell at those prices, then they say, okay, then this is your procurement cost of raw materials. So therefore, everything has been designed, everything has been put to get integrated at one platform. Whereas the most of the corporates, they are working in tandem. The different teams are working in tandem to protect the margins, to protect the profitability. So that is very, very critical. And the CFO role is very, very critical because the technology is currently as a part of the CFO's role. Now, most of the corporates, the technology officers, they are reporting to CFOs. Yeah, over to you. Yeah.
Thanks, Yash. My question, Nitin, for you is: how do you evaluate the effect of cyber crisis to all the parts of the business? How do you evaluate it?
It's basically difficult to evaluate everything, including the loss of reputation. But however, as a prudent finance professionals, we try to put cost to everything. And so what we normally do is we normally look at what is the business loss which we will get in terms of you know in terms of loss of profit and the disruption loss, and that's how we basically evaluate that what will be the effect of a cyber crisis on different parts of business. I will share a small story here on the subject. So while we were discussing on, so we had a discussion today on the DLP, and one of the big four managers actually stood up and said, "This is a real story that a person, wanted to sell a refrigerator in US, and he had put that refrigerator in the lawn with a tag for sale. And unfortunately, for almost 2 weeks, 3 weeks, he was not able to sell that. And it came to a situation that he was asked to pay something to remove that refrigerator. After a point of time, he actually put a tag on the tag, valued at $500. And the second day morning, he didn't find the refrigerator over there. I think the reason why I'm telling you this story is that whatever gets costed is getting sold or stolen. So practically, you have to value your data. So that's what we have been doing. In terms of data, we have classified into various buckets. One is pure confidential and sensitive data. Second is internal usage, and third is the public data. And that's how we evaluate the effect of this. If at all there is a problem, what kind of business loss we have. And based on this evaluation, we had taken, the cybersecurity insurance, which probably I must, encourage all the finance professionals, who are there in these kind of positions as CFOs. They must, encourage the board and, influence the board to take these kind of insurance.
Right. Nitin, how do you develop organization-wide cybersecurity resilience?
Yeah, most difficult task. I would say the first part is awareness.
Okay.
And I must confess that 2 years back, while we were sitting in one of the strategy meet, and Yash, rightly said that while we are discussing strategy, cybersecurity becomes an important part. So the first part is a digital strategy. Second part is, of course, within digital, how much you are allocating to the cybersecurity piece. So, frankly, if you ask me, building the resilience is not a one-day effort. It takes time. Over a period of time, it gets developed. Look, in nowadays, there are 4 or 5 areas where you normally get these threats. So one is an individual hacker. Second is if you get a planned hacking or data breach, which is basically from either a sovereign country, or there are players around the different countries who try to get inside your data. Third is internal fraud, and fourth, I would say, if the competitor wants to get your data. So you have to build firewalls against all these 4 elements, and it starts with first with awareness. It's a top-down approach. I would say the first job for me as a CFO is to work very closely with CIO and stand before the board and say that how important it is, and then create employee training programs. Make sure that there are no personal usage, the passwords are protected, the normal stuff. And then going beyond that, understanding how the customer data and vendor data is getting protected. We have our program, which is the customer data and the vendor data. There are proper firewalls which not everybody has an access to. So we have a double layered VPN which we had just started during Corona days to build that extra resilience in the system. I would say I won't call it resilience. The basic thing is to protect data at any cost. I think it's also to do with the culture and business processes. You have to create that kind of culture. This is one area which is often not addressed properly especially in the finance community, especially in the businesses like us, real estate. We don't find that kind of systems and processes there. I think I'm lucky enough that from top down the board has been very concerned about this, and they are cognizant of the fact that this kind of protections and resilience has to be there in the organization. So these are a few things, and then there are trainings. You have to have cybersecurity days. We have one very interesting thing. My IT guy calls it phishing simulation. So we normally send this phishing mails to employees, and they have we have seen people clicking on the links and going to those websites. So we get the data. We don't go back to employee and ask them why you have done that, but it also gives us that the percentage of employees who are clicking on that link has gone down. And over the period of time, that also gives us that confidence that our training and awareness are working. So I think it's a combination of all these factors: awareness, both top down and to the employees. Second, building, investing a lot in the IT systems. Third is creating better processes. I think these are the 3 or 4 major factors whereby you can create more resilience in the system.
Thanks, Nitin. Absolutely agree. And I'm reminded of one of the mails I got a couple of years back from my global CFO saying that one vendor needs to get paid ASAP. Please make sure that the payment happens in the next 1 hour. And my first thought was, all right, let's check the email ID, and everything kind of was the same. His name, his dot, everything was to the T. Just the domain name, one of the alphabets had been changed. And then we looked around, we made sure that we kind of look at this as a possible case of fraud. Yash, let me come to you, and I think this is a very important part of our discussion now. What do you think is the CFO's role, when it comes to planning or management of incident response plans? I'll ask both of you to weigh on this. Yash, maybe we can start with you.
See, incident response plan, I think the CFO's role is very, very critical in this. Because first of all, we need to look at it while planning. We need to identify the incidents, and then we need to categorize. Because categorization is very, very important. Because if I look at it, say oil and gas industry, we are into the gas industry, we are into the city gas distribution. I give you my example. Say we get the incidents reported by our customers, maybe in our trunk pipelines. As far as the customer is concerned, we look at it. Is it a really incident or it's a request? That's the first of all, that identification is very important. Then the losses which are there, the incident which is there, to what magnitude it is there. Or at times, we need to look at it in terms of reporting to some regulatory bodies, maybe statutory bodies. That is also very, very critical as far as incidents is concerned. And same applies in on the digital platform also. And therefore, it's very, very critical to identify, take the mitigation risk and what it should be done, and what reporting should be done. So therefore, incidents response is very, very critical for the organization, and the CFOs are the one who are able to connect it, every activity, every reporting structure, internally as well as externally. So that's my take on it.
Sure. Nitin, would you like to weigh in?
Yeah, so I will just add on to what Yash said. I completely agree. This is exactly what we also do. I'll just add on to some additional points. So first is definitely the reporting is most important. As soon as every employee in the organization is very clear that as soon as there is any incident, it gets reported. The second step is MDR. We normally call it manage, detect, and report and response. So we manage that part, control the damage, make sure we detect, what is an IP, what is the, do an RCA on that, and then what is the response plan for us for now onwards and going future. We are also planning for, 27001 ISO certification. So it has a complete CRP in that, which is cyber response plan. We might be the first real estate company to go for or apply for this. This actually awareness came to us during this, COVID days, that where employees were working on their laptops, and we were switching laptops. There were laptops which got broken, and there were a lot of incidents which we found that it didn't had a proper plan to it. So that's the reason we had put a policy in place. There is a complete IRT, which is an incident response team, who does this entire MDR, which is manage, detect, and response to it. We have agencies now. One agency is purely who handles the media part of it. So if there is any incidents which which actually taps down and goes into Twitter or a social media, how what is our plan to act? We manage malls, so on a yearly basis there are more than 4 crore footfalls are there in the entire year. So I'm sure everybody nowadays we go to mall as a part of our normal entertainment. So from a mall perspective, and incidences are there. We have seen people trying to look at free Wi-Fi and try to hack our systems. These are very small incidents, but there are other incidents also where people look at phishing the credit cards and looking at other mobiles, stealing mobiles and getting WhatsApp, and all those privacy issues are there. So there is a team around that. Uh, and we have an agency who also we have just appointed, who will kind of manage negotiation in case we get any such those kind of attacks. And then we have BCP, if at all there is a need be where we are stalled across, we have a BCP in place as well.
So thanks, Yash. Thanks, Nitin. I think that's very insightful. So you spoke about, building an internal team, engaging external consultants, etc. So we can't talk about, being all finance professionals. We can't talk about cost and not talk about budget. So what's your take on budgeting? How do you do cyber security budgeting? What are the aspects you look at? How do you, and what are the elements you focus on? Right. For instance, if you talk to a CIO, I'm being very generic. I'm not, speaking about any particular CIO. They would say the world is going to end tomorrow and you need to spend so much of money. So, there is a certain limit to what an organization should spend. There's a limit to what can go wrong and should go wrong and will go wrong. So how do you handle that aspect of, budgeting so far as the cybersecurity is concerned?
I think while you're talking about CIO, CSO, and CTO, by whatever name you call it, I think they are very important element. And as Yash also rightly pointed out, that nowadays the entire IT is also slowly coming into CFO domain, because for whatever reasons, everything is technology today. So whether it's financial risk, there is a reputation risk, or there are other different kind of risk, or all are actually majorly are emanating through technology. Our budgeting process normally is strategy for 5 years, and then we keep on changing every year. I'll talk about specifically about the industry which I am in.
Sure.
Normally, our projects are long terms, and they are basically for 5 years. Any mall which we develop, it takes a construction period of 3 years. Hence, nowadays everything is through technology, and then we are using entire procurement end to end, P2P, O2C, including R2R. Everything is through technology. In last 2 years, we have tried to eliminate not only paperwork but also Excel files from our system. I think it started 2 years back, pre-COVID, I would say, whereby we actually sat with the entire board, where we sat down and said that let's put cybersecurity as one part of major risks. And we have seen ransomware. During that time, there was a big ransomware issues which were going on. So our budgeting basically starts with looking at what are the top risks, the top 10 risks, what are the mitigation plans we have, what is the kind of investment we make. So it again depends on how much dollar you want to spend in order to how much risk you want to evade on or mitigate to. Normally we range, so we went and we took help of some IT firms and who were experts in this, and tried to fix a benchmark, because anyway real estate didn't had a very good benchmark, at least in India. We went abroad and we looked at manufacturing industries, IT industries, where the data loss and the IP loss, is much crucial, and they have, huge IP data as well. We benchmark that, out of the IT budget, whatever you spend, you need to spend around 9 to 12%. That's a range in the cybersecurity. And there's a benchmark we normally follow it. The process normally starts with looking at the obsolescence of technology, which we have used last year, understand what technologies which we need to remove, what are the additional risks which we perceive every year. So risk register gets updated, at least in the IT part and the cybersecurity. And then we start looking at what kind of investment we want to make there. So operation investments are basically in two types. One is the resourcing part, another is putting a tool to it. So normally the ratio is, I would say, it's 80-20. 80 is more toward tools, putting RPAs in place or new technologies in place or firewalls. 20% is more around, adding more agencies if at all you want that. Like last year, we added the agency who will, kind of negotiate for us if at all there is a ransomware. And then it goes to the board, and we look at normally what kind of benchmark we are doing. One is of course the cybersecurity spend in terms of IT. What is the total IT spend per person as well, and look at the benchmark what other countries are doing, including malls and real estate. I think we look at those benchmarks and then establish the cost. It depends on different industry. You can't say there is a one beta rule for everybody. But yes, from real estate, I can talk about that. This is how our entire budgeting process works.
Very helpful, very directional, Nitin. I agree that one size does not fit all, but I think most of the things you said is true for any industry. That brings me to the next part of our discussion. And Yash, my question to you is: how do you weigh the risk mitigation cost? How do you go about weighing the risk mitigation cost?
See, as far as risk businesses are concerned, whether it's a cyber risk or any other risk, I think that's inevitable. It can't be avoided. What we can do is we can only mitigate that. As far as these costs are concerned, the way we look at it, these are the basically intangible investments. I will say that.
Right.
Right. Maybe in case you look at it from this data security, if you look at it, whether that investment now we have moved to storing all the data into the cyber space basically. So that particular cost which is there, it's an investment. And the way the infrastructure which was created earlier, the way the security was there, now that has gone away. So it keeps on evolving over a period of time. As for a mitigation strategy, I can't have a fixed mitigation strategy. It will evolve over a period of time. It will get related to the risk which are getting connected with that. I think the way to look forward is to embrace the risk and then look at it. What exactly are our plans? And these investments are insignificant, I will say. As far as if you really look at it from the cost perspective, these will keep the businesses as a going concern,
right?
Which is very, very critical for us.
Right. So let me ask you another thing. So, for instance, do you look at software licensing cost as a contingent liability? And let me tell you where I'm coming from. So, if you look at, say, for instance, an IBM, they have 60,000 items and more than 250 metrics. And financials, typically we do not talk about it a lot, but there is always a risk of under licensing. And so do you look at it as a contingent liability? Do you think a provision should be made? If yes, how? So just what are your thoughts on that?
As far as we have the case of under licensing, I think whatever the charges as per the contracts, and then the moment we get into any other product, they start charging. As far as that particular part is concerned, it's not the case, and they have their own systems to track it. So those possibilities are not there in terms of under-reporting of those licenses or not taking it. And secondly, maybe some corporate, maybe the small corporates, they may be looking at it pirated softwares, and they may be having these kind of risks as the content liabilities. For us, these are actual the costs. As and when,
because because I think some corporates they are not aware of what modules you are using and when you're going to use it. So it comes as a surprise, and only when the vendor is going to do an audit into your system, they kind of find about it. But it's good that you as an organization are treating it as a real cost and providing for it. Nitin, and I'm aware that we are running short of time. We are actually on time, but I think one last question to both of you, and then maybe we can open the house for Q&A. What do you think the role of a CFO is when it comes to training, cybersecurity training, and partnering with other members of the C-suite?
Yeah, I think, very a very relevant question, I would say. The challenge which I faced 2 years back, while standing in the board and asking them for certain investments, especially in the IT part pre-COVID days. I think there's a false sense of security. It was, I would say, now not now probably, but there's a false sense of security that nothing can happen to me. It's just like Corona days that nothing will come to me. I'm more safer. I think over the period of time we have been able to every quarter when we sit and discuss the details with them along with the financials and the risk register. I think slowly and slowly they are getting aware of it. We had DLP sessions with the board, which includes my CEOs, CXOs, CHROs, CSOs, even the supply chain head as well. And in one of the meetings, CPO stood off, and he's the project director, and he stood up and said that, Nitin, I was not aware of, how can my project details, even the land details, can be so easily, accessible. Because we found out that one employee sitting in the distant corner was sending a mail to vendor, and he was a common vendor with a competitor. And while one of the person resigned from here and went there, he said, practically 3 or 4 project all details are available. And he was shocked. And that's what I have been telling them, that look, it's important to be aware. I won't call it training, Pankaj. I would say it's more creating awareness. At that level, you can't train people. You can create more awareness on that. I think training was more around how to use, their, because what happens, this entire leadership team gets, emails, information, which is the sensitive, in nature, and how they protect this data, how they can ensure that they are not being, there is a cyber attack on their data, because that data is more important. Looking at an executive data versus a C-suite data, the kind of value it has is enormous. And I think over the period of time, we have used agencies, we have used auditors. Audit committee has helped a lot. We have started asking the same questions, which audit committee has been asking, 5 years, 6 years back. How vulnerable are you in terms of data security? And this question we still ask. Even though we have invested a lot in last 3 years, I would say, we still ask the same question: how vulnerable are we? And every time we stand up and say, these are the areas which are still not covered in the risk. And I think over the period of time, the entire C-suite is now well aware, well trained. They understand the softwares now. They understand what is SAP license. They understand, we are using BI tools, dashboards, and how they are interlinked. What kind of Excel reporting we have reduced over the period of time, and how the usage of other softwares have increased. So I think over the period of time, the crux is that awareness has increased. I won't say we are at a postgraduate level. I still say, from an India standards, we are better off than others, but still there is a lot of room to improve.
I absolutely agree. I think it's been a learning curve for everyone, and typically when CFOs were supposed to only implement SAPs, so now CIOs reporting into them, and they talking the language of a CIO. I think we've come a long way. Yeah. Yash, my question to you, and I'm being signaled that we are short of time. During an M&A, how much of a weightage would you give to a technical due diligence report? And let me explain where I'm coming from. Typically we have seen that when you are acquiring a company, the selling entity kind of stops or slows down its investment on technology. And how do you kind of decipher that hidden cost? And how much of weightage do you give to a technical due diligence report? Say if you are going to acquire a company.
See, as far as the due diligence is concerned, it's of many types. One is the technical, business, legal. finance, HR. The way we look at it, we just put it into two parts basically. As far as part is one is concerned, that's a technical, right? Technical is basically your core product. In case if that is not passed, I think the rest are not having any meaning. Therefore, it must be passed. Since you have, otherwise, we will be buying a product, maybe, or maybe any corporates, any technology that we are buying it, maybe outdated tomorrow. And technology is changing so fast, in case the requisite investments are not done in time, it may be out of the business. For example, if you look at it, maybe the online what we are doing today, previously it has been through the VSATs, right? So VSAT, who is doing it today? If we are buying, therefore the technical part is very, very critical, right? It's a must. The rest is secondary, it depends upon the various factors, I will say. So there is no compromise as far as technical part is concerned. It's 100% weightage, then get into the next phase.
Absolutely agree, Yash. I think we are right on time. I don't see any questions in the Q&A, so I'll wrap up the session. I would like to thank both of you for joining us today. Thanks a lot for your time and sharing your valuable insights. I'm sure the listeners would have gained a lot from it. Thank you so much. Over to you, Shubham.
Thanks, Pankaj. Thanks a lot, Yash. It was pleasure talking on that panel. Yeah.
Yes, sir.
Thank you so much, guys. Hope you had a good time. You had really good points, Mr. Pankaj. Extremely good questions. Thank you so much for that. I would request audience to write down any questions, if any, or else you can even write to Transformance Forums, and we'll make sure that we get the answers from our speakers. I would request the audience to click on Conference tab and just see you all in award section. Thank you so much for all the speakers, Mr. Pankaj, Mr. Yash, Mr. Nathan. Thank you so much.
Thank you.
Thank you. Bye-bye.
All right, thanks. Have a good day.
Good afternoon, everybody. A warm welcome to each one of you once again. We come to the most awaited and the most exciting part of the second CFO Vision and Innovation Summit, that is second CFO Vision and Innovation Awards for 2021, presented by Franklin Templeton, powered by Clear, Learning Experience Partner ICOG, Knowledge Partner Happy, ESG Knowledge Partner Dheer and Dheer Associates, and Employee Rewards and Recognition Partner XX Day. I'm very delighted to introduce you to a panel of jury members, who we have Dheeraj Cherian, who's the CFO of Feral Gas, Mr. Vittal Dehadre, who's the Director of Finance, Franklin Templeton Asset Management Private Limited, Mr. Ramesh Iyer, who's the President and Chief Revenue Officer from VA Tech Ventures Private Limited, Happy, and Mr. Pramod Nair, Chief Financial Officer from Everest Industries. Very glad to have the jury members. It's been a beautiful journey evaluating all your case studies, efforts that you as nominees have put in. Since Mr. Dheeraj and Pramod have sent your wonderful congratulating messages for both all of you, all the winners, I would first like to take a few moments to have the messages of the jury flashed across for all of you.
Hi, I'm Decoding. I'm the CFO for Feral Gas, which is one of the largest propane distributors in the United States. I have been with many companies before this, including larger companies like GE and Westinghouse, and I've originally come from India, so it's great to have this opportunity to be able to review some of the submissions by my fellow CFOs, and it's been a great experience. Just looking at the nominations, they're so rich. I mean, the extent to which all of you have journeyed through getting to be a CFO, the learnings you've had, including the failures from which you've learned, and what you have developed in terms of processes and improvements that have taken your companies to the next step. So it was a great experience, and thank you for having me on the panel for judging some of these categories, and I wish you all the luck. Thank you.
Nair, who's the CFO from the Everest Industries.
Hi, everyone.
My name is Pramod Nair. I am the CFO of Everest Industries Limited, which is one of India's largest solution providers. Prior to this, I had worked with Hindustan Unilever and a brief stint with a private equity firm called Remark. I got this opportunity to evaluate the various nominations submitted by my fellow CFOs, and I found it really enriching. On one hand, I was really delighted to see the efforts and the ideas which has been put together by the CFOs and their teams. But personally, it was really a great learning for me. So I congratulate each of the winners and also the nominees for all the effort. All the very best.
Thank you so much. This was our panel of jury members who we had on the panel evaluating your case studies and nominees. The first category, the organizational category awards. The first category is for the best finance reskilling and upskilling strategy, which goes to
And this award goes to Reliance Jio Infocom Limited. Congratulations, team Reliance Jio and team. Congratulations.
for the best tech transformation award in finance shared services. And this goes to
Award goes to Mind. Congratulations, Team Mind, for this great award.
heartiest congratulations to Mind. Okay, the next category is on the most innovative financial sector technology. And this goes to
This award goes to Cash Flow. Congratulations, Team Cash Flow, for this award.
Congratulations to Cashflow. May I have a representative from Cashflow to join us on screen?
Hi everyone, thanks for this award. Great honor to be here among such esteemed set of panelists and attendees. It's been a great year for Cashflow, and this kind of rounds out a good 2021. Looking forward to even better 2022. Once again, thanks for the recognition.
Great, congratulations.
Thank you, Aditya. Congratulations. The next category that we have for the Transformation Finance Team Award of the Year, and it goes to
This award goes to Roche Diabetes Care India. Congratulations, Team Roche Diabetes.
Happy congratulations to Rosie. The next category talks about the Transformation and Innovation and Finance COE Team of the Year, and this goes to
This award goes to Infosys. Congratulations, Team Infosys, for this award.
Congratulations to the team in process. The next category talks about the Finance Digital Transformation Champion Award, and this goes to
This award goes to Reliance Jio Infocom Limited. Congratulations, Team Reliance Jio.
happy congratulations to Team Reliance Jio. Hi, Sahil, how are you audible?
Yeah, hi. So, hi everyone. My name is Sahil Chaudhary, and I work with Reliance Jio as a part of CFO office. Unfortunately, Mr. Rajneeshan could not be here. He had a meeting with the chairman come up in the last minute. So, on his behalf, I would like to thank you, Transformance Forum, and especially thanks to the jury members for recognizing and appreciating our efforts. And definitely, in the last 1.5 years, digital transformation and automation has been the key focus for the finance team at Geo, and we do aim to continue moving further in automation using the latest technologies, and definitely taking away more ideas from such summits and trying to contribute our own to the extent possible in such summits with the industry peers in finance. So again, thanks a lot. Thank you.
Thank you so much, Sahil, and happy congratulations to your team. So the next category coming up
We have for the Finance Digital Transformation Champion Award. This goes to
This award goes to Manjushree Technopack Limited. Congratulations, team Manjushree Technopack.
congratulations. May I have somebody from the team to join us on screen? I see Vineet. Vineet, kindly join us on screen.
I'd like to give my thanks to the jury members on behalf of my team, and thanks to Cashflow for nominating us. Thank you very much.
Congratulations.
Thank you.
Congratulations. The next category, the CFO Vision for People Leadership, and this goes to
This award goes to Smollen. Congratulations, team Smollen, for this award.
congratulations. May I have a representative from Samalim to join us on screen? I see Mr. Amit. Kindly accept the invitation to join us on screen.
Thanks, jury members, for giving us this recognition, and thanks Transformation Group for providing us this particular platform. People is something which is very core to us, and very happy to get an award in this particular category. Building leadership is something that we have been actually imbibing right from the beginning, or right from the inception of this particular organization. Thanks a lot.
Congratulations once again.
Congratulations, Amit. Okay, so now we start on with the individual awards category. The first category is for the Young CFO of the Year in Cosmetics Industry, and this goes to
This award goes to Sachin Rohila from Modi Harma Private Limited. Congratulations, Mr. Rohila.
Congratulations, Sachin ji. A fantastic award won. It's not easy to determine the kind of efforts across multiple winners, multiple nominees. What you've been you are a rising star, and what you've done is an extraordinary work. And keep up the good work. Kudos to you. Yeah.
Okay, so the next category is on the Young CFO of the Year in the EdTech company. It goes to
This award goes to Saurabh Agarwal from MAF Technologies Private Limited. Congratulations, Mr. Agarwal.
Yeah. Congratulations, Mr. Agarwal. Great job. All the very best.
Saurabh, I do see you. Can you please accept the invitation to join us on screen?
Yeah, thank you so much, jury members. Thank you so much for this prestigious award, and it's been a great honor, receiving this award from all the jury members. And thank you so much, Transformance, for organizing this. It's a great pleasure to be here and to learn a lot of new things from my fellow CFOs. And thank you so much once again.
Congrats once again.
Thank you.
All the best.
Congratulations, Mr. Saurabh. So the next category that we have for the Young CFO of the Year in the Information Technology, and this goes to
This award goes to Mr. Amjad Syed from Innoventure Inc. Congratulations, Mr. Syed, on this award. All the best.
Yeah. Congratulations, Mr. Syed. Wonderful to see completely transformation, doing multiple roles as a company secretary to a CFO to many things that you have done. Extraordinary work. Yeah, keep it up.
Yeah, thank you, jury, for selecting me for this award. I thank my entire team who has supported me, and I just switch the camera. They're all here. So, just a minute. So the entire team of Innoventure is here, and it's all a team effort. And
great. Congratulations to all of you who are supporting Mr. Syed in its efforts. All the best to all of you.
Thank you, Transformance, for this.
Congratulations, everyone. The Young CFO of the Year for the Chemical Sector, and the winner is
This This award goes to Mr. Saurabh Bhala from Aztec Life Sciences. Congratulations, Mr. Bhala, for this award. All the best.
Congratulations, Saurabh. Kindly accept the invitation to join on screen.
Congratulations, Mr. Bala.
Thank you. Really delighted to receive the award. That's a recognition of the professional contributions they make. Thank you to the esteemed jury and the transformation team for this award, which I accept on behalf of my team. Thank you so much once again.
All the best. Congrats.
Thank you.
The Young CFO of the Year in Media and Entertainment Industry. And this award goes to
This award goes to Mr. Vijay Vaishnav from Eros Now. Congratulations, Mr. Vaishnav, for this award. All the best.
Congratulations, Mr. Vaishnav. Fantastic job. Keep it up.
we have you, Mr. Vijay on the screen.
Yeah, hi. A very good afternoon to everyone. Thank you for having me here.
Thank you, Mr. Vijay, for joining us. Okay, hearty congratulations to Mr. Vijay and team. Can we have the next category, please? The Young CFO of the Year in Manufacturing, and this goes to
This award goes to Mr. Subhash Gages Selvaraj from Nippon Paints India. Congratulations, Mr. Selvaraj.
Congratulations, Mr. Selvaraj. Great job.
Subhash. I do see you on CEO. Can kindly accept the invitation to join us on screen?
Right. Thank you so much for the award. So I think it's a great pleasure to receive the award from the esteemed jury members and also the transformers to organize such wonderful events and to identify good talents and bring to a good forum like this. Thank you so much. I think we were able to achieve this with the tremendous support of our fellow colleagues, team members, and also the organization support. More particularly, the family who is there to support us when we are working towards all this. Thank you so much. I dedicate this to the entire, the pillars of support around me for achieving this. Thank you.
Congrats. All the best.
Thank you.
Congratulations. Can we have the next category, please? The Young CFO of the Year in Healthcare. And this goes to?
So what goes to Mr. Ashish Shrimal from Sterling Accuracy Diagnostics. Congratulations, Mr. Shrimal.
Yeah, thank you very much to all the jury members for this recognition. Special thanks to my organization, to all my team members, colleagues, and also my family for all the support that they have given to me during this journey. I also wish all the participants a big congratulations and hope to meet you soon in this journey somewhere. Thank you.
Great. Congrats once again.
Thank you.
Congratulations. Can we have the next category, please? The future CFO of the Year, and this goes to?
This goes to Mr. Suresh Chettiar from Lupin Limited. Congratulations, Mr. Chettiar. All the best.
Congratulations, Mr. Chettiar. Great job. All the best.
The CFO Innovation in Mergers and Acquisition, and this goes to?
This award goes to Mr. Malakundal Rao Nuna from .co. Congratulations, Mr. Nuna, for this award. Wish you all the best.
Yeah. Congratulations, Mr. Nuna. All the best.
Mr. Nuna, I do see you in the meeting. May I request you to accept the invitation to join us on screen?
Yeah, thank you very much to the esteemed jury members and transformers for the recognizing the talent. I congratulate to all the award winners today and all the best for their professional personal career. And my special thank you to the entire team of .go and especially my family support as well for this acquisition by Gupshup. So thank you everyone, and thanks for all your support.
Great. Congrats once again.
Thank you.
Thank you, Mr. Lena, for joining, and heartiest congratulations. CFO Innovation in Supply Chain and Logistics. And this goes to
So what goes to Mr. Amit Agarwal from Delivery. Congratulations, Mr. Agarwal.
Great work, Mr. Agarwal. Congratulations. All the best.
this to the CFO Innovation in Information Technology. And this goes to
So what goes to Mr. Samik Bandopadhyay from IDBI Intech Limited. Congratulations, Mr. Bandopadhyay. All the best to you.
Congratulations, Mr. Bandopadhyay.
Thank you.
may I now request Mr. Ramesh to help me out with the further awards. Can we have the next category, please? The CFO Vision for People Leadership. And this goes to
Mr. Raghupati Mishra, Liberty House Group. Congratulations. Great job done. All the best. Keep up the great work.
Congratulations, Mr. Mishra.
Hi, good evening, everybody.
Good evening.
Thank you, Transformance Forum, and the honorable jury members for selecting me for this thing. It was a challenge to get in the launch in India during COVID time and getting quality people here, but we have been through that. Thank you.
Great work. Congratulations.
Congratulations, Mr. Mishra. The next category that we have is the CFO of the Year in Financial Services. And this goes to
Mr. Kapil Bagadia, ENY, Ernst & Young. Now, Kapil ji, fantastic job, great work, all the best.
I am so honored to be here today and grateful to be the recipient of this award. I am grateful to the Almighty for this. While it is all thanks to my family and seniors' blessings, I dedicate this award to our whole finance team who made me deserve this. And a big thanks to the entire team of Transformance Forum and the jury members for this recognition. I truly appreciate it. Thank you.
Congratulations, Mr. Bagadia.
Congratulations. Can we have the next category, please? The Intelligent Finance Function of the Year. And this goes to
Mr. Kaushal Shah of Arvind Limited. Fantastic work, and it's a very special recognition, and extremely happy to hear your name featuring here. All the best, Mr. Shah. Keep it up. Keep up the.
Congratulations, Mr. Shah. All the best.
Intelligent Finance Function of the Year. And this goes to
Mr. Gaurav Katuria, Reliance Retail. Yeah, congratulations, Gauravji. All the very best. Great job, and keep it up.
Congratulations, Mr. Katuria.
Gauravji, yeah, please go ahead.
Hi, am I audible, guys?
Yeah, now you're audible.
Yes, you are.
Okay. Hi, good evening, all. I'm extremely honored to receive this important award. I'm thankful to Nusrat and the entire team of Transformance for the opportunity provided and who have wonderfully created the whole event. It's good to hear all the industry leaders, and I wish to show my gratitude to the jury who have selected my case study fit for the award. I'll just take some 30 seconds to explain. Having launched around 1,200 plus retail stores across India, be it Reliance Fresh, Reliance Smart, SmartPoint, or Reliance Signature, I was sure as a finance person I have seen everything. But then came FreshPick. FreshPick at Geo World Drive at BKC, a first of its kind experiential gourmet food superstore with unique concepts implemented for the first time in India. But this came with a super complex business model and intricate business accounting, which I've driven. I faced many challenges during the way, but every time it has actually strengthened me as a person what I am today, a thorough professional. I am grateful to my management of Reliance Retail CEO Damodar Mal and CFO Rajendra Kamath to have believed in me to lead the finance function for this particular project. I also promise to get better in my work so that you can see me here for the more such awards. Thank you, jury. Thank you, Transformance. Thanks a lot.
Great. Congratulations, Mr. Kathuria.
Yeah, congratulations, Gaurav ji.
Congratulations, Mr. Gaurav. The intelligent finance innovation in organization structure. And this goes to
Mr. Nikhil Jain of Bharat Petroleum. Yeah, congratulations, Mr. Jain. Amazing work and keep up the great job.
Congratulations, Mr. Jain. All the best.
So, yeah, good afternoon, all. So, it's an honor to be here. I would like to thank the jury members for selecting my case study and honoring me with this award. And I would also like to thank Transformance for considering this and giving us such a wonderful event and the insightful sessions on this. So, thank you very much, everybody.
Congratulations once again, Mr. Jain.
Thank you.
Mr. Jain, congratulations. Yeah. All the very best.
Great. So with this, can we move on to the next category? It is on the Finance RPA Innovation Award, and this goes to
Mr. Vimal Lada, Property Solutions India Private Limited. Vimal ji, great to see you receiving this award, and I can't, agree more. I have seen you in action, not just by the finance community, but also the business community have appreciated it. Even IT company and IT and the community also has appreciated it. All the very best. Great job.
Congratulations, Mr. Ladda. All the best.
Thank you, jury, and thank you, Transformance, for selecting me for this award. This is my teamwork who has implemented RPA in the company, and they are also very excited to implement more RPA processes. So we are in the journey of making this entire organization to digital transformation, where RPA, HEPE, also one of the digital transformation we had implemented, and there are much more processes which we are implementing right now. So thank you once again to the jury and Transformation and everyone. Thank you.
Yeah. Congratulations, Vimalji. Thank you.
Congratulations, Gagan. May we have the next category, please? The Finance Intelligent Automation, and this goes to
Arpit Pokarna, Delivery. So congratulations, Arpit ji. Great journey, great achievement. Congratulations once again.
Congratulations, Mr. Pokarna. All the best.
category is on the Virtual CFO of the Year, and this goes to
Mr. Abhay Tulsian, Apollo Structural Steel India Limited. Congratulations, Abhay ji. Great journey, great job, and great work. Once again, heartiest congratulations. Keep up the good work.
So first of all, I would like to thank the jury and Transformance for this wonderful award. Definitely, it has been a need of the hour to be a virtual CFO and take through this during this pandemic. And thanks to my team who has been doing a wonderful job along with me over here. And definitely, we have been trying to take this step towards having all these small SMEs also get that value addition of a CFO. So thanks to the whole team out there and Transformation and especially the jury. Thank you.
Thank you, Mr. Abhay. Can we have the next category, please? So the next category is on the Women CFO Innovation Leader of the Year, and the award goes to
Advice. Congratulations, Ms. Ravadia. Appreciate the great work and specifically on the innovation front. Once again, heartiest congratulations. Great job. Keep up. Keep it up.
Congratulations, Mr. Valia. All the best.
Hello everyone. I'm really feeling honored. Thank you so much for this award, this moment. Uh, Coming from the digital agency, innovation is the core of every function. So that has helped me to achieve this milestone. I would like to mention this. This could be possible because of our founder and MD Chaya Bhardwaj, who has really played crucial role in this innovation development in the organization. I really thank my all the team members and colleagues and my family members for all the support during this tough time. Thank you so much. Thank you to Transformance and the jury member for this honor.
The next category is the CFO Dynamic Team Leader of the Year, and this goes to
Mr. Rahul Kedia, Roche Diabetes Care India. Rahulji, fantastic work, and being a dynamic team leader is not easy. And great job and for getting this award. Congratulations.
Congratulations, Mr. Kedia. All the best. Yes.
Yeah, thank you, jury, for this wonderful award. On behalf of Rahul, I'm speaking here. I think Rahul will be joining if possible, but also on behalf of my team present over here, Mr. Prakash Agarwal and Mr. Saikat Bishwas. I'm also happy to receive the team award on their behalf and the entire finance team from RDC India. I really congratulate Transformance Group for this kind of forum where you bring all the wealths together under one roof, and I'm very happy to take one of the reference from this session, the concept which was led by Mr. Joginder from on the initial session, and one of the key topic which he triggered was written on experience, and that's the area where we have worked throughout the year this in 2021. And I'm happy to share that this is the area where we have worked on the experience of our internal customers from finance wing, and that's where the output is what came very promising. And we worked around process transformation, we worked around people, cultural transformation, as well as the functional transformation. I'm really thankful, and over to the jury and transformation team. Thank you so much once again for the award.
Congrats once again.
First of all, thanks to the jury members for considering the hard work, and it's a great acknowledgement on behalf of the entire finance team which I'm having it. And more than me, I think the first award which my team had gotten of the finance transformation, that is a great pride for me, because this transformation we can only give a direction as a leaders, but the transformation is led by the team, and I'm very proud of it, because here we are not only working upon the basic core of finance, but some softer aspects like people transformation, cultural transformation, apart from the system automation and all, those are given anyway. So I think I had a fantastic team, and I had three strong leaders in forms of Prakash, Saikat, and Vikas. Vikas was able to join on my behalf. But yeah, that's a fantastic thing. And during this tough times, I think that time calls us to show the what kind of metal is inside. And I think that was a good opportunity, and very happy to receive this acknowledgement on behalf of my team. Today we all are working from home, otherwise we all could have been in the same camera. But once again, thanks to the entire jury and to the entire team out there. Thanks.
Congratulations, Rahul.
Congrats, Mr. Kedia, once again.
the CFO Dynamic Team Leader of the Year, and this goes to
Yeah. Mr. Biren Shah of Manjushri Technopack Limited. Congratulations, Mr. Biren Shah. Great achievement, and keep up the good work.
Congrats, Mr. Shah. All the best.
Yeah, first and foremost,
thank you, Transformance India, for this recognition. It means a lot. I think 2021 was a very challenging year for all of us, and coming out successfully has been a great achievement personally. So I would like to thank firstly my family, my wife, my children. Without them, I don't think this would have been possible for me. My team, with whom we work day in and day out. I think larger part of our times we spend with our teams. So I think I would like to dedicate this to them as well. I think they've played a pretty large role for me to be where I am. Thank you very much to everyone, and thanks Transformers for this recognition. Really appreciate it.
Congrats once again.
Congratulations.
The next category winner, the CFO Dynamics Team Leader of the Year, goes to
Mr. Jayaprakash Kalapan of Panasonic Appliances India Company Limited. Jayaprakash ji, I've read through your profile, achievements, milestones, extraordinary work, the way you have turned around things in Panasonic. It's not easy, and amazing work. All the very best.
we can move on to the next category, the most exciting, the most important category of the award, which is CFO of the Year. And in the insurance sector, this goes to
None other than Devidayal Garg, our future Generali. Mr. Garg, congratulations, amazing achievement. It's not another award, it's a great recognition for being a great change agent, and all the very best. Keep up the great work.
to the next sector, CFO of the Year in the film manufacturing. And the award goes to
Mr. Avani Jha of BC Jindal Group. Congratulations, Mr. Jha. A massive dynamic personality, and I'm sure this has resulted in a huge advantage for the BC Jindal Group. And keep up the great work, and your record has been absolutely exemplary. Great work and great accomplishment. Congratulations.
the CFO of the Year in telecommunications. And this goes to
The one and only Mr. Rajneesh Jain of Reliance Jio Infocom. Amazing award, and justifiably so to you, Rajneesh ji. All the very best, and it's not an easy time, and the way Reliance Jio has turned things around for the entire industry and country is extraordinary. So all the very best. Great accomplishment.
Yeah, hi. Hello, everyone again. So, unfortunately, Sir could not be, Mr. Rajneeshan could not be here still because of the meeting. Sincere apologies for that. And on his behalf, I would like to again thank all the jury members and the Transformance Forum for giving us this award. It's definitely an honor especially after looking at all the experience and the talent and the expertise that's present there in this forum itself. It's definitely an honor to receive this award, and we'd like to take this opportunity in this forum to actually thank each and every single person in the Geo Finance team who deserve this award as much, if not more, than Mr. Chen. So thank you, everyone, and thank you again, the panel and the team, the Transformance team. Thank you.
Congratulations.
Okay, so for the next category, we have the CFO of the Year in banking. And this goes to
Mr. K. Doshi of FinCare Small Finance Bank. An extraordinary achievement, milestone, great accomplishment. I've gone through the profile and the accomplishment, the achievements, the milestones that you have been able to bring to the table, achieve. Extraordinary work. Great job. Keep up the great journey.
So thank you. It's my pleasure to be here, today.
Really honored to have this award, especially in banking. And we are a 4-year-old bank, so it's not a very old bank. It's a infant or a baby in banking. Thank you, jury members. Thank you, Transformers, for providing this opportunity to all the CFOs and bringing out the good work that all of us, are doing in various industries. So thank you so much. Appreciate it.
Congratulations.
Congratulations, Mr. Chair.
Thank you.
Last but not the least, we come to the last award for the day, that is CFO of the Year in Manufacturing. And this goes to
Oh, my dear friend, Mr. Sushil Batra of Relaxo, absolutely well deserved and a great accomplishment, a man of great integrity and also a tremendous resilience and a great team leader. Sushil ji, I'm absolutely honored to extend this award to you. Congratulations, keep up the great job.
Thank you so much, Mr. Ramesh and Vithal, for helping me out for the award.
Thank you, all the very best, and congratulations to all the winners and nominees. Thank you.
Thank you. Heartiest congratulations to all the winners and a big thank you to each one of you to join us today for the second edition CFO Vision and Innovation Summit and Awards presented by Franklin Templeton, powered by Clear. Thank you so much. And yes, as you see the dates flashing, we are coming live on 11th of February in Bombay. If you're there, please join us. We'll be happy to meet you in person. Thank you so much once again, Mr. Ramesh and Mr. Vittal. Keep safe and have a great week ahead, all of you. Thank you so much.